best things.
Yeah, I mean, the amount of efficiency that they've been able to squeeze through that one runway is incredible. Like a few seconds every flight landing or taking off. Mumbai, I think, is a case study for the way that you can use limited resources.
And not just for Mumbai, right? Navi Mumbai, Pune, and the whole Hinjewadi belt gets to travel international through the Navi Mumbai Airport, I'm sure, at some point of time. So all of that brings in. But just excited at the kind of infrastructure being developed in Mumbai. It's a golden run for infrastructure in Mumbai.
After a long, long time.
And the pun is intended, right?
Golden run. There's only gold on Neeraj's mind today. Yes, we will come to more on gold, but let's just take you through what's on the global setup. So US markets were mixed in trade on Wall Street. It was largely about two major M&A deals, but look at the Nasdaq on that AMD OpenAI deal. What's happening with OpenAI and NVIDIA is quite astonishing. That's why you saw the Nasdaq about 161 points in the green, while the Dow was muted. Now, here's what's happened. NVIDIA's rival AMD's stock was up 23% after a deal with Sam Altman's OpenAI. As part of the deal, warrants have been issued for 160 million shares, and eventually OpenAI will own 10% of AMD. So interesting things happening in this space. Treasury yields, meanwhile, have inched up as the government shutdown has extended, the 10-year at 4.16%. Yes, we're talking about the gold rush. The yellow metal is nearing the $4,000 mark at kissing distance just a short while ago, but has then cooled off. Nevertheless, you have to watch out for that mark because that's an unabated run. And of course, what's driving it this time is the Fed rate cut. I mean, don't think about the reasons. There's several reasons why gold is getting pushed up and continues to be the asset class of choice right now. Oil prices have also risen a bit because the OPEC plus production increase was less than expected. The Brent is above the $65 mark. I'm going to pull up Asia, and you have a new leader of the ruling party that's kept the Nikkei going strong, the Hang Seng. A little bit muted, but I want to just pull up the implied open before I come to you for more on gold, and we're looking completely flat. I mean, all the action is outside equity right now.
Yeah, no, but just before we get to gold, you know, the interesting piece about the NVIDIA deal, and you know, there is
the AMD deal, you mean?
Yes, and no, NVIDIA and the AMD deal. So there is a circular investing pattern here, right? In NVIDIA, bet about $100 billion on OpenAI. OpenAI pays Oracle $300 billion, right, for cloud services, and Oracle buys $40 billion in NVIDIA chips. So circular pattern. Now think of the loop that has been created parallelly. OpenAI gets AMD equity, right? They have done the deal. OpenAI deploys AMD chips, and AMD generates revenue from OpenAI itself. So there is a lovely circular pattern that is being formed between this whole AI ecosystem. And that is something to take note of, especially with the kind of upticks that are coming in the stock prices of any of these deals getting announced.
But it's seen as a negative, Neeraj. It's seen as a negative because, you know, are you really seeing growth, or is it just, you know, that circular pattern?
But the ecosystem benefits from each other, right?
I
don't know, why is it a negative?
My argument
the ecosystem is seen as limited, right? You're not like pulling in that amount of capital coming in. And basically the pie is not really expanding.
The scale is different.
No, but for themselves, it is a big positive, right? Because you are diversifying as well.
That is a strong argument to make, because if you look at any other manufacturing system in the world, and the easiest thing to look at would be the automotive space, generally whenever you see the creation of a facility, it's creation of a facility in a hub. So you have several auto component manufacturers that move in a hub and spoke manner around a central manufacturing OEM. And this is kind of like that.
Just that the OEM is taking stakes in those auto hands.
That's what I'm saying. There's no spoke. It's only a hub. But yeah, nevertheless, for those who are owning those stocks, it's a completely golden run.
It's a golden. $27 trillion, by the way, gold at $4,000 a troy ounce whenever it hits. That's quite a staggering number.
Yeah, but so there are so many aspects that are pushing gold to this number, right, Neeraj?
Yeah. So officially it hasn't crossed the $4,000 a troy ounce mark. In futures, it has. So let's move that graphic out. But the point being that it doesn't take away the fact that there has been this mammoth rally in hard assets, gold, silver, copper, what have you. It's quite astonishing the times that we are living in, that some equity assets are moving up and hard assets are moving up and cryptos are moving up. Quite stunning.
Absolutely.
Well, the comment from Union Minister Piyush Goyal in Qatar saying very clearly that India is not going to encourage cryptocurrency. except if it's an RBI-backed CBDC. Is something that all of you crypto buffs out there should also be thinking about.
Yeah, that's the only future, central bank digital currency, because anything else would subvert monetary policy, and that's not something that any central bank is going to be too keen on having. But let's talk about what happened in trade yesterday. Foreign institutional investors net selling to the extent of 313 crore rupees, but that's the smallest number, net sell number, since they started net selling about, 10 sessions back, or actually a little more than that. Domestic institutions had a pretty hefty buy number, 5,000 plus crore rupees. Benchmarks gained for a third day in a row, and that's despite the adverse market breadth. We'll pull that up in just a bit. The heavyweights powered the Nifty 50's move to reclaim that 25,000 mark. And which were they? The likes of HDFC Bank, Axis Bank, TCS, Reliance Industries, and Kotak Bank. Of course, you're seeing so many banks in the top few because of the banking updates that came through, and the Nifty Bank moved up quite substantially in trade yesterday. The Nifty 50, by the way, now trading above its 50, 100 and 200-day moving averages. It has gained quite considerably in the last 3 sessions, as much as 500 points of ground being made up. The broader markets underperformed but ended in the green. In fact, they saw a pretty late spurt. The small cap index just edging into the green in the last half an hour. Of course, that was the mid cap index, up about 0.7%. But you see that last move in the last half an hour of trade that pushed the Nifty small cap index into the green. IT was a surprise top performer, in my opinion. 2.3% higher is what you saw. And of course, a few of the companies now announcing that the earnings will be just a couple of weeks, or maybe less than a couple of weeks away. The Nifty Bank gaining as much as 0.9%, extending its run to a 5th session. And the metal index was one big underperformer in trade yesterday. It lost about 1%, and that seemingly on account of profit taking. And finally, the block of stocks that we focused on throughout the day, and I wonder whether any of them will see profit taking today, hospital stocks, on account of that update on the central government health scheme price revision, the first in 15 years, Neeraj.
Yeah, I mean, and you know, amidst all that's happening globally, at times I thank our stars for the fact that we are so politically stable. I mean, look at France and what's happened overnight there, or some of the other countries. India, thankfully, has that premium to itself. But just focusing on trade, I mean, you just look at what's happened in trade overnight. I mean, it seems that the last 2 or 3 days, there are steady upsides in place, and it doesn't look like they're going to buckle down anytime soon. I mean, it's just a good support at that 24,800 mark for the Nifty, and this time banks are actually giving that big support, right? Yesterday too, it was the bank Nifty which blasted past all key moving averages, and from technical parlance, and our guest will be best equipped to talk about it, but from technical parlance, I think that is that big positive. I mean, and the banking earnings too thus far, and I don't know how Alex and Tamanna think about it, but banking earnings thus far have been reasonably steady. Sure, you got a miss here and there, but amidst all the skepticism, they are the updates, let me qualify actually, the updates, right? The updates are proving to be steady for now. Let's see if the skepticism around net interest margins, which are not declared thus far, turn out to be true. So that was one point. And guys, the other point was on hospital stocks. I mean, maybe there is a big spurt that happened, and maybe there is a bit of a consolidation, but nobody's now talking about selling hospital stocks, simply because one after the other, the triggers for earnings growth continue, even if the valuations are just too expensive. So maybe not buying them, but certainly people are not selling them.
The bull case is very, very strong. If you have an aspirational middle class, or a bunch of Indians with more discretionary spends, so among the other things, you're expecting everyone to go out and buy a new four-wheeler. But people are likely to spend more on diagnostics, or more on preventive and elective procedures, which you may have been putting off.
Yeah.
Insurance spread is also aiding it. That
and medical tourism as well.
Yeah, and the fact that insurance, GST on insurance for personal reasons for personal use has been brought down to 0.
Yeah.
I think is a big push. Yeah, medical tourism is that cream.
Yeah.
But a bulk of Indians are now able to afford
more. Yes. in the medical space.
Go down any kind of a long drive outside any major city, and one thing that you will see are hospitals.
Yeah.
Smaller and smaller
ones,
hospitals
big ones as
coming
well.
in. Yeah, big and smaller ones. So yeah, I agree with that. Just on financial, since you talked about it, I found this Macquarie note quite interesting, and that's one of the things that I want to highlight when we talk about factors. They have a little bit of a muted view on financials. So I thought as a contrapoint, it is good to bring that in front of all of our viewers. They say the second quarter will be a tough quarter again across the board. Banks face two issues this quarter. That's sharp margin compression and weak loan growth. The Yes Bank stake sale could provide some cushion, but credit costs will remain elevated. Earnings growth for most banks will also remain pretty muted in Macquarie's view, and in some cases may decline. The tactical pair trades that they're talking for the Q2 FY26 is long HDFC or ICICI and short Indus Ind. I mean, that's even from the business updates, that was pretty clear. Long PFC REC, short M&M Finance, long AB Capital and short SBI Card. So those are some of the pair trades that Macquarie is talking about. Now, as far as the index is concerned, moved decisively above key moving averages with third consecutive day of gains. Next key hurdle now is 25,120. Other resistance levels are 25,130, 25,180. Sustainable move above 25,180 is expected to lead to a sharp rally up to 25,300. 25,300 to 25,400 is the next side target that you need to watch out for. Supports at 24,950, 24,920. For the Bank Nifty, it's been a key outperformer as expected from those updates. Gaining for 5 days in a row, you can maybe expect some momentum there as well. Supports at 55,700, 55,600. Resistance at 56,160, 56,350 and 56,500. But remember, today is the weekly expiry day as well. Let me go across to Puneet for that setup.
Well, thank you for that. Definitely a very strong day yesterday, both on the Sensex, the Nifty, as well as the Bank Nifty, as you guys rightly pointed out. And for the Nifty, we have closed about 25,000 yesterday. That's a key level that we've been watching out for. But as you rightly mentioned, it's much above the 24,800 level rather than looking at what could be the next key level of 25,200. The market will take a lot of confidence from taking 24,800 as a key support level, at least in the near term. We've seen a slight inch in open interest, but for the Bank Nifty as well, that's been the other key area of strength at this particular point of time, led by the quarterly updates. And we've seen a consistent 13 to 14% advances growth across players, barring a couple of them like Union as well as IndusInd Bank. So it's been a strong month, a strong quarterly update to say the least. And as you rightly said, NIMs will be the other key aspects to watch out for in this particular aspect. When you look at foreign investor positions, both in terms of buying and selling, we've seen some in index as well as Nifty options. While there's been trimming of positions in the Nifty futures, essentially a short position is what foreign investors are holding. We've just slightly inched up again in terms of index longs from yesterday. We were somewhere between 6 to 6.5%. Now we're back over 7, but it's still continuing to be a short position by foreign investors. And you see the net OI put call ratio also inching over 1.3 now, and that's been consistently there for a while now. So it is indicating a larger shorts being maintained in the system by foreign investors. And when you look at 25,000, we've seen a sharp uptick on that particular level in terms of put investors, which is showing confidence in the 24,800, 25,000 as a key support for the Nifty. There will be a lot of pockets like banks, like autos that will continue to be in news flow. So that'll be the other key aspect to watch. When you look at stocks, or both open interest gainers and losers, we've seen yesterday, a sharp, long build-up on stocks like Hitachi Energy. While Samman Capital has seen some kind of short build-up, it's in terms of open interest change, it's quite minuscule. So we'll have to wait for a decent trend to form on this one. While in terms of open interest losers, there's nothing too much to talk about because of the very limited OI change as well. So it's going to be a very interesting day again, especially for the Nifty Bank. We are looking at a 13-point implied open on the Nifty, but largely, if the street is anticipating Q2 to be the lowest in terms of NIMs in the last quarter, essentially, of pressure, that index could be the strength for the markets with the earnings starting in the next couple of weeks.
Okay. I think markets are not even waiting for earnings, to be honest. A lot of reaction already coming in on the business updates, and that's what's populating and dominating my watch list this morning. I'm going to start off with Bank of India. Decent set of business updates, and like we said even yesterday, business updates are trailers. The whole movie is yet to be revealed. Domestic deposits as on September 30th were up 8.5% at 7.3 lakh crore rupees for Bank of India. Global gross advances as on September 30th is up nearly 14% at 7.1 lakh crore. Global deposits as on September 30th up 10% at 8.5 lakh crore. Global business as on September 30th up 11.8% at 15.6 lakh crore. Here's what Morgan Stanley is saying. They maintain an underweight with a target price of 110 rupees, but they've said that the Q2 initial update shows a strong quarter. Domestic loan growth was strong at 5.6% Q on Q compared to 0.3% Q on Q in the prior quarter. And that's that bump up in the domestic loan growth that you should watch out for. So you might see some reaction on the stock today. Trent is the other one that I want to talk about. There are a bunch of notes, but I'm going to just pick up a couple of them. The business updates came during market close yesterday. That's why you're seeing that sharp dip. But I would say expect more pain today. Weaker business updates came in as expected. It's been the worst performer in the Nifty Y to D. That means year to date, down 33% since the last 1 year, down 39% since its inclusion in the Nifty. I mean, Trent's inclusion in the Nifty has not helped. The RSI is trading below 30 now in the oversold zone. So that's one question you have to ask yourself, has it bottomed out? Here's what Morgan Stanley is saying. There's maintain an overweight with a target price of 6,359. They're saying Q2 was a notable miss. Standalone revenues grew 17% year on year, lower than Morgan Stanley's estimate of a 25% increase. Westside has had 13 net new store openings, which is the highest in the past 5 years. They expect standalone EBITDA margins to improve 165 basis points year on year to 17.5% in Q2. Equaris, meanwhile, has downgraded it to a reduce from an add. They've cut the target price to 4,474 from 5,759. Premium to fade as growth moderates. Signs of growth fatigue have since emerged, is what Equaris is saying. The second quarter is poised to be the 5th consecutive quarter of sequential moderation in top-line growth. I thought that was a pretty important observation. Standalone revenue growth of 17% in Q2 is its lowest performance in the past 18 quarters. In a quarter where peers have done well, Trent has disappointed with growth moderation, and Street's expectation of a 26% top-line CAGR over FY25 to 27 appears increasingly unachievable. Against the backdrop of earning downgrades and visible growth moderation, they see valuation multiple compression ahead. So not great for Trent. Just looking at BSE, now BSE was on a roll yesterday. So just going by what Goldman Sachs is saying, I mean, this was one of the top performers of the day yesterday. So Goldman Sachs, meanwhile, has maintained a neutral and cut its target price. Not by too much, 2,220 from 2,250. It's nearly there in any case. They say NSE has become aggressive in getting back lost market share from BSE. The lot size reduction which NSE has done brings the contract size of BSE's Sensex and NSE's Nifty closer, thereby narrowing the advantage BSE has of a lower traded premium per contract on index options. The relative size of BSE's contract has a bearing on its options market share. Since BSE has not yet announced change in lot size, its relative advantage of a lower contract size would be somewhat lost. BSE's aim is to reach a 40% market share from July 26 to March 2027, but they are saying that extending that market share gain trajectory will have to be done. So instead of July 2026, they might hit it in March 2027. That's the take coming in from Goldman Sachs. I wonder if there'll be an announcement from BSE as well, because now that competition is heating up. Let's see.
Yeah, and I thought Trent was interesting. The room for error, margin for error for this company is just wafer thin, considering that it's continuing to trade at this moment at more than 100 times.
No, but the underperformance was not wafer thin. The underperformance was...
No, it was sizable, but sizable. I'm saying the room for maneuverability also is pretty... So on that, with that backdrop, expect there to be pain Absolutely, for Trent. All right, let's talk about Metropolis Healthcare, because we've been speaking about healthcare companies. Diagnostic companies also see a benefit from that increasing spend on everything that we've spoken about. So that's seen in the numbers for this company. Consolidated revenue growth at 23% in the quarter gone by, growth similar to the first quarter, and that's despite, according to Metropolis, lower incidence of seasonal illnesses. It's good for all of us, not so good for them. But core diagnostics are operating at a high single-digit margin. This is a business that they acquired. Just to give you a little bit of background, it broke even in the fourth quarter last year, and it had low single-digit margins in the first quarter, and now it has moved to high single-digit margins. So it's progressing along the lines of what Metropolis had spoken about. The second counter is in the real estate space. Brigade Enterprises signed a joint development agreement for a premium residential project in West Chennai. This has a gross development value of 1,000 crore rupees, sizable development, and keep an eye on this particular counter. Dilip Buildcon is the last counter on my list, and it's got a joint venture which has gotten a letter of acceptance for a 100 megawatt solar photovoltaic power project. This will be a grid-connected, ground-mounted, captive power project that will supply power to the Madhya Pradesh Jal Nigam for 25 years. That project is going to be set up on 315 acres in 2 villages in Madhya Pradesh. And Dilip Buildcon has a 74% stake in that joint venture. So interesting development for this last one. The value is not known, but it's a sizable project.
Yeah, well, interesting names out there. I'm starting off with a block deal, and the fact that the nature of the buyers is interesting. Yes, mutual funds are lapping up block deals, but Amansa buying 70 lakh shares of Aditya Birla Lifestyle Brands kind of stood out, and the stock had a decent outing. In fact, on the closing show yesterday, a couple of people recommended why they like Aditya Birla Lifestyle as well. So watch out for that one, simply because of the nature of the buyer. I believe some bit of that buying happened as a result of the name getting out per se, but officially, Amansa buying 70 lakh shares, ICICI Pru and Nippon Life amongst the other buyers in stock. But watch out for Aditya Birla Life, therefore. Certainly one stock to keep on radar. Now, ITD Cementation, which is now called with a different name per se, but the reason why that stock comes into focus, right, and that is Sem India Projects, right, that's the name, and it's had a very heady run. But on the cusp of we talking about the Adani, of the Navi Mumbai Airport starting, the Adani Group has said that they are going to invest additional 30,000 crores in the expansion of the Navi Mumbai International Airport. And they would obviously use a lot of the group assets in order to do some bit of work. Now, this is the assumption on my part and a standard disclosure that the Adani Group owns NDTV, and you're watching NDTV Profit. So, Ambuja, Cements, ITD Cementation, all of these stocks come in focus. But this is certainly something that a lot of people are talking about, so keep an eye out for this one. And lastly, Tamanna spoke about the Macquarie view on banks. I have the BofA view on banks. The reason, because they are outlining 2 stocks as being the ones that they want to keenly focus on. So one, they said that the Q2 net interest margin bottom has been likely pushed out beyond to FY27, won't happen in quarter 2 according to them. They expect another round of EPS cuts this result season, but they see HDFC Bank and ICICI Bank as being relatively defensive. And they maintained a buy on HDFC Bank with the target price of 1175, but they've hiked the target price on ICICI Bank, even as they maintained a buy to 1850 from 1750. So watch out for the earnings delivery from these 2 banks, the BofA report seems to be suggesting. So that's the other interesting one. Guys, I'm just squeezing in a 4th one simply because in that whole healthcare note, the Jefferies one line that they mention out there, they say Max is at a next inflection point of accelerated growth. It was the top gainer when we started off trade, Max Healthcare. So could be interesting to see. 7% up yesterday. Jefferies says they are at an inflection point. Could be interesting.
Wow. And I think what's also cool is that there's such divergent views on what banks are going to do. BofA and Macquarie, both are sitting in 2 different universes. What we do here, folks, is we give you all, points of view. So you have all of that information for you. And then, of course, our experts come in and tell you what they think as well. But there is no controversy or debate over how important the new Navi Mumbai International Airport is. Mumbai skies are set for a major shift this December as Navi Mumbai International Airport prepares to launch its first passenger flights, part of the long-awaited twin airport system. The project, developed by the Adani Sectoral partnership, aims to ease congestion at the existing airport. Our bureau chief Vishwanath Nair reports from the ground on the airport's phased development.
All right, so we're standing right outside the Navi Mumbai International Airport, which is soon going to be renamed the DB Patil Airport. On the 8th of October, Prime Minister Narendra Modi will be coming in to Navi Mumbai to inaugurate this airport, and the expectation is that the first flight will take off in December. Now, this is expected to be a game-changer airport for Navi Mumbai and broader Mumbai. Exactly why is this happening? Well, there are a few reasons. The first one is congestion. Remember that the two terminals in Mumbai, the main part of Mumbai, serves currently about 55 million passengers annually. This, from the beginning, from the first phase onwards, is starting with a 20 million mark. So that it has the ability to serve 20 million passengers annually, and going ahead, it is expected to serve up to 90 million passengers once all the phases of construction are complete. 4 terminals are coming in as part of the Navi Mumbai Airport. The second more important reason why this is going to be a game changer is the better connectivity that will come in because of this airport. So it's going to be located in Navi Mumbai. There's a lot of infrastructure that is coming in to ensure that passengers can easily travel, whether it's from South Bombay or from the suburban Mumbai to Navi Mumbai, to go to the airport and catch their flights. The next main reason is, of course, flight tickets. Remember that more terminals means more flights coming in, and therefore better options for you as prices keep coming down, ticket prices keep coming down. The other main reason is job opportunities. The expectation is that with this airport and the associated infrastructure that is coming in, 4 lakh new jobs are coming in to this area, and that is exactly why this is going to be a major game changer as far as job opportunities are concerned. The other main thing is sustainability and user-friendly features that are coming in as part of NMIA, which is designed as a smart airport to manage rainwater harvesting as well as energy-efficient protocols that are part of this airport. Alongside that, the Navi Mumbai International Airport is also going to be a cargo hub. It is going to be a spot where a lot of cargo comes in, and then from here goes to the broader European or Asian locations. However, there are a few regulatory changes that are going to be part of this. Once those come in, the NMIA is in place to become a massive cargo hub for India. Lastly, this is also bringing in a big technological edge. Remember that this is an airport which is already 5G and IoT enabled. So you will, as soon as you visit this airport from December when the flights start, you will notice the marked difference from what you experience in the other Mumbai airports versus what you experience at NMIA. You will see that that technology really makes a difference in your experience.
Wow. Vishy, thanks for that ground report. And guys, there was a tweet by Ajit Adani wherein he put out a video of Gautam Adani going through the airport. I mean, it just gives you some glimpses of what the inside of the airport looks like. Fantastic, part one.
No, they put out the visuals yesterday, so we finally know what it looks like. Yeah.
Right. First commercial flight out from this airport in December, as per the news flashes that we put out yesterday. I am making sure that I'll take that first commercial flight. I really want that to happen because I'm really looking forward to this airport. This is, in some sense, we've had road infrastructure projects, metro projects, etc. But for the longest time, I've seen global cities, mega cities, metropolises have more than one airport and wondered why doesn't Bombay have one, which is at a separate location. We have 2. Or at least we had to until recently.
We're going to have 3 till 2029.
Yeah.
Because what became clear yesterday is that T1 will continue to be operational because there's just so much capacity that is required.
Yeah, but even when T1 and T2 are operational, they were like next to each other, like cousins in the same location. I so badly wanted Bombay to have one more. So I'm very happy that this has happened. I'm really, really happy about this.
It's also exciting that T1 is going to be demolished and rebuilt, right?
Yeah, so you will eventually need and have 3 airports, and the infrastructure around it is what is going to be key. We'll take a very short break. When we come back, we're giving you top ideas this morning, what should be on your trading and watch list, and so much more. Stay tuned.
Co-presented by National Stock Exchange.
चाहिए ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक, ये हर मौसम में चलता है।
LG Electronics India Limited now launches an initial public offer of equity share of face value of 10 rupees each in the price band of rupees 1080 to rupees 1140 per equity share. Bid offer opens on Tuesday, October 7th, 2025. Closes on Thursday, October 9th, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
व्यू मस्त है और चाय भी बुरी नहीं है।
नए घर में चाय के मजे कहाँ लोगे? ये खूबसूरत चिंता आप करिए। होम लोन की चिंता हम संभाल लेंगे with attractive interest rates and instant sanction.
Green on the screen, fourth day on a trot. The question is, will we see this translating on open and stay until the close? Actually, it could well be a trending day higher, right? Could it be? Osho Krishnan, Chief Manager Technical and Derivative Research at Angel One, with us on the show. Osho, great having you. Thanks for taking the time out and being with us. Good morning. What do you expect today, Osho? We've had 3 good days. Could it be a day of consolidation, or are the trends looking strong enough for us to have a 4th straight day of gains?
Very good morning, Neeraj. Firstly, thank you for inviting me at the show. Well, yes, no doubt in the last 3 trading sessions, we have seen some kind of a strong resurgence, but specifically last trading day was very positive for the Indian equity market because Nifty have made some key developments. Firstly, it has surpassed the 50 and 20-day exponential moving average. Secondly, above the zone of 25,000, we have seen short covering, which was even further followed up by long build-up in the Nifty. So I expect the momentum should continue from here onwards on the higher end. Even the technical data suggests that there has been positive crossover in the RSI smoothing indicator. So I expect the momentum have turned to be on the positive side, and that has been even backed by very strong and high beta index bank Nifty. So I'm expecting that from here onwards, we can see some kind of a strong upside momentum to be continued. For Nifty, I am expecting nearly 25,150 and 250 to be seen as the next potential target on the higher end, while on the lower end, 25,000 should be auguring very well for the buyers. So my view for the day is if there will be any kind of dip towards the zone of 25,050 to 25,020 on spot levels, that could be seen as an buying opportunity in Nifty. And on the higher end, 25,150 will be the first target, followed by 25,200, 250 kind of a zone for Nifty. While for Bank Nifty, I am more optimism, or there is more optimism for Bank Nifty because there has been a clear inverse head and shoulder breakout on the daily time frame chart for the Bank Nifty index. So I expect the momentum will be there. And on the higher end, I am expecting 56,500 followed by 56,700 spot levels for Bank Nifty to get tested very soon. And on the lower end, 56,000 will be a very strong cushioning zone while 55,800 and 750 spot levels will be very strong support levels. So any dip towards 56,000 can be seen as a buying opportunity, while 55,700 should be seen as a stop loss for intraday traders.
All right, so that's at the index level. I'll circle back to ask you about individual banks. But before we do that, Osho, first of all, good morning to you. And what are the stocks that you like this morning?
Very good morning, Alex. There are two positive developments that is being seen in the stock-specific front. The first one is CDSL. After a strong consolidation around the zone of 200-day simple moving average, CDSL has started gaining strong traction, specifically in the last trading session. So I expect the momentum should be there in CDSL. So one should look for buying opportunity in the zone of 1510 to 1520, while 1485 is an advisable stop loss. And on the higher end, I'm expecting a target of nearly 1580 from a very short-term point of view. The other counter where the momentum persists is SBI Card. SBI Card have seen a very strong momentum in the last two trading sessions, currently hovering just around the zone of 900. So I expect the momentum should be continued in the counter. One should place a stop loss of 880 and should take a buy bet for a target of nearly 930, followed by 940 from intraday or kind of a BTST kind of a trade.
Okay, we'll come back to Osho with more calls, especially on some of the stocks on our watch list, and get his view. But meanwhile, time for an important NDTV Profit exclusive. The government is gearing up for a strategic stake sale in two public sector banks, aiming to offload minority holdings through its OFS. But we have more details on exactly when this will happen. Shrimi Chaudhary joining us for that exclusive story. Yes, Shrimi?
Well, the government is gearing up to kick off the process of selling minority stakes in select public sector banks through offer for sale route, and it's all set to happen within this financial year is what indication we are getting from the North Block. And in fact, sources indicating that at least two banks are expected to be the part of the first round of the stake sales. In fact, merchant bankers and transaction advisors have been working on the plan since August, suggesting that groundwork is kind of already quite in an advanced state. So typically it takes around 6 months to kind of complete a transaction, through the OFS route, slightly faster than the disinvestment, which involves multiple layers and process approval stages, etc. So official indicating that center expect a meaningful progress on some of these deals, some of these transactions within the current financial year, and we may see some progress as soon as November last week or December is what indication we are getting. So for the understanding of our viewers, the government aims to offload about 20% stake in total across 5 public sector banks in a phased manner, which includes the Bank of Maharashtra, Indian Overseas Bank, UCO Bank, Central Bank and Punjab and Sindh Bank. Now, in each of these, the government is actually trying to bring down its stake to below 75% in line with the SEBI minimum public shareholding norms of 25%. All these 5 banks are currently below the MPS threshold, making this entire exercise, the OFS exercise, very, very crucial to bring them into compliance. Now, sources hinting that government is, quickly moving on this, pushing ahead with the preparatory work, irrespective of the MPS deadline, in order to kind of ensure that this entire process gain momentum, before the end of this fiscal year. So both DPAM and DFS work in tandem, closely tracking both bank-specific factor and the broader market indicator, ensuring the maximum realization. And as you know, most capital raising in PSU Bank has been done through QIPs, which help them, of course, banks to strengthen their capital, but not kind of reduce the government stake. But the OFS route, however, directly brings down the stake ownership by also kind of improving the overall liquidity and widening the public participation. So, of course, in short, the process is now underway. 2 banks are likely to go first, and within a month or 2, the government, expect to make visible progress on stake sales across these key public sector lenders.
Absolutely. A very important story there. Thanks so much, Shrimi, for getting us those exclusive details. A couple of points for you to bear in mind here. One, what this means for the government's finances. It is undertaking several reform measures, and selling off stake in 2 large banks would shore up its finances in a big way. A second point that you need to bear in mind, this is a stake sale by the government at a very different time and place for these public sector banks. Gone are the days when you had asset quality issues, and so the valuations at this juncture are significantly better. The value proposition for investors as well are a different matter altogether compared to what it was in 2015. And let's run through the list again. Bank of Maharashtra, IOB, UCO Bank, Central Bank, and Punjab and Sindh Bank. Oshu, I want to come to you on this one. Public sector index is up over 12%, close to 13% since the start of September. A number of these banks have done well. What are the prospects for these individual banks? And I'm talking about the specific 5 that I've mentioned.
See, from these 5 banks, I have a view on the Bank of Maharashtra, which is positive, because overall the technical setup for Bank of Maharashtra is positive. There has been formation of inverted head and shoulder pattern, so I expect the momentum can be seen in this stock specifically. The rest, all the 4 counters are into a steep corrective phase, so technically there has been some kind of continued sell-off or sideways momentum that can be seen on the technical front as of now. But comparatively, Bank of Maharashtra looks lucrative. It is on the verge of giving a breakout, and any movement beyond the zone of 59 to 60 can provide a decisive upside movement in the coming period. So comparatively on all the 5 stocks, Bank of Maharashtra is looking much better.
Okay, so PSU stocks have been roaring. This year itself, the Nifty PSU Bank has outperformed the Nifty, no doubt about it. Sunny Agarwal joining in on the conversation. He's head of fundamental equity research, SBI Cap Securities. Sunny, the PSU Bank view, we've just broken an important story about how there will be an offer for sale and an offloading of stake in at least 2 banks in this calendar year itself. So by November and December, you will see some action over there. Of course, we know who all of the candidates are, but are PSU Bank something that you would bet on at this point?
Yeah, good morning, Tamanna, and good morning, everyone. Yeah, definitely, I think looking at a valuation at which the PSU banks are trading, I think it gives a lot of comfort compared to its private peers, and at the same time, one need to keep in mind that PSU Bank has got an upper hand in terms of CASA ratio. The dip in terms of net interest margin is likely to be relatively lesser as compared to the private peers when we look at Q2 numbers. And going forward, as the Q3 and Q4 pan out, we expect the NIM to stabilize and expand over the period of next 3 to 4 quarters. So within PSU Bank, there are few banks where we are more bullish on. So one of the name is Indian Bank, where we feel that asset quality is top class, wherein the net NPA ratios are less than 0.5%, and at the same time very well capitalized bank. So Indian Bank is one of our top pick among the PSU. Among the larger peers, Canara Bank appears to be well placed because both its subsidiaries and associate companies are coming up for listing. So some value unlocking can be seen in Canara Bank. And another bank which we like among the large cap peers is Punjab National Bank, which is delivering relatively better growth as compared to the other banks. So closer to 9 to 11% kind of credit growth we are seeing in a Punjab National Bank.
Interesting names to watch out for. Let's find out what the dealing rooms have to say about banks and other things. It is a regular feature on India Market Open, heard on the street. Soumya Sarkar joining in to tell you about what the dealing rooms are focused on. Is it banks?
Good morning, Alex.
Morning.
Yes. Yes, banks continue to remain in focus. 5th straight day of gains. Outperformance continues compared to what the benchmark has done. And the trade setup also looks quite strong. But what is important to track here is whether this buying action sustains or not at higher level is something that dealers are watching out for. When it comes to stock-specific action, BSE is one counter where there are buy flows because of 2 reasons. Firstly, there was this IFL note that had come in yesterday, which said that the impact of the change in expiry day was much lower than what they had anticipated earlier. And the second and the most important reason why the stock was gaining in trade yesterday was the fact that dealers now believe that the discontinuation of weekly expiry might not happen anytime soon. They're expecting a big delay in that to happen, and hence there was this kind of a relief rally that we saw in BSE. For Zinka Logistics, the stock was down 5% yesterday in trade. Dealers are expecting a big block deal to happen anytime soon, so keep an eye out for that counter. For GAIL, there are buy flows at lower levels on DI desk. dealers expect that the tariff hike announcement, pipeline tariff hike announcement to come in anytime soon. Now this announcement is due. It was expected to come in the month of September, but dealers now believe that it should come in anytime soon in the first 15 days of October, and hence there are some buy flows that we are seeing at the lower level for GAIL, and they're expecting a 20% tariff hike to come in for the pipeline tariffs. When it comes to Fino Payment Bank, dealers indicate that there are buy flows on a potential buzz of the of Fino Payment Bank receiving its small finance bank license very soon. For IRB Invit, there's a buzz of a potential QIP that could happen. The size of this QIP is not yet decided, but dealers are expecting it to be less than 1,000 odd crore rupees. When it comes to TVS Electronic, there are buy flows on large HNI desks, but dealers indicate that this is on the back of this is from long-term perspective. In fact, they expect TVS Electronic to benefit out of the semiconductor plans that are there going forward. And lastly, when it comes to Cenerus Pharma, dealers indicated there are buy flows on smart HNI and PMS desks. So keep an eye out for this counter as well.
Interesting set of names and some very lesser known names as well, or not often discussed names now coming in. Sumit, thanks so much for bringing those to us. And Sunny, couple of these names that I want to talk to you about. I don't know if you've heard of TVS Electronics, but obviously the semicon chain is right up there. The other one, of course, is the CRDMO space, and which is where I think Cenerus comes into the picture, because we just heard Eli Lilly likely to invest a large sum. We just heard that Roche is investing a large sum in India. So clearly the CDMO, CRDMO space is active. Do you like the smaller ones, the Cenerus, SciLife, and some of the others?
Yeah, definitely, Neeraj. I think the kind of growth opportunity which this entire space offers, CRDMO, looks like many mid to small size company are well placed to encash on this growth opportunity. And a few names, as you rightly mentioned, Cenerus, SciLife, and in addition to that, recently listed company Anthem Bioscience, as well as the new company which is on coming with an IPO. So I think there are a whole lot of players which are likely to encash on this growth opportunity. And I think it is a place to be in. I think a basket of a few stocks should be part of your portfolio if you want to ride the pharma story for next 3 to 5 years.
What about the hospital side of things, Sunny? We've been speaking about it. Even after the big up move that we saw yesterday, you think more legs to this kind of a rally, especially Max Healthcare, which seems to have some very positive brokerage notes on it.
Yeah, I think again, Max, despite of a phenomenal return during the last 1.5 years, we still believe that on the back of the very robust growth which the company is likely to deliver over the period of next 2 years, we believe that one can invest in Max. We believe the fair value of Max at the current juncture is close to 1,300 if somebody has got an investment horizon of 12 to 18 months. In addition to that, few niche hospitals like Rainbow Child, or for that matter Shelby Hospital. So these are the few smaller regional play or a niche specialty hospital which we believe can deliver a fantastic earning growth over the period of next 2-3 years. So again, bullish on mix of a few large cap name as well as few mid to small cap niche hospital regional play.
Let's close that circle or loop and talk to Osho about some of these names. They were among the top performers yesterday, Osho. The question is, would you hold on? Would you book some and take some money off the table? The argument that Neeraj was making on the valuations is that while they are expensive, maybe people will not yet rush to book at this point.
See, currently there has been some kind of correction that was seen in the majority of the counters. Like Max Health has seen a decisive correction from the zone of 1,300 towards 1,100 kind of a zone. And in the last trading session, there has been a short covering. So there is still some kind of vacant space on the higher end, which can give some kind of confirmation for a continuation of a upper trend. But looking at a momentum on a historical basis, the counter has been into a secular uptrend. So these kind of dips should be utilized to start accumulating the counter. While on the higher end, on technical fronts, I expect the momentum can continue only once it surpasses the zone of 1,180 decisively. Then one can look for buying, attractive buying or aggressively buying at those levels. But currently the counter is seeing some kind of short covering, and on the higher end, 1,180 can be seen as a very strong resistance for a short-term point of view. So if it breaches the zone of 1180, then one can look for buying opportunity. Till that time, better to stay sidelines, or one can play on the buy on dip kind of a strategy where 1100 to 1080 should be seen as a support, and 1180 can be seen as a resistance for the counter.
Okay. All right, moving on to the primary markets, and quite a bit of buzz about this one. LG Electronics IPO, and everything that you need to know about it. We'll get you a conversation with the management in just a bit, but Mahima joining in to tell you about the key details in case you missed it and you'd like to know about it. Mahima, what are the key numbers to focus on here?
Right, so Alex, in 25 years now, it's the first consumer durable IPO that we'll be seeing. It's a complete offer for sale. 11,600 is the size of the IPO, and the price band is set between 1080 to 1140. The IPO opens today, of course, and ends on 9th of October. Just to give viewers a brief about what the company does, it's into consumer durable space. In terms of where the products are concerned in the home appliances, it is present into refrigerators, washing machines, air conditioners, as well as microwave ovens. In the consumer electronics space, they're into televisions, home entertainment systems, and other audio devices as well. And in terms of smart and connected devices, they're into smartphones, smart TVs, and IoT-enabled products as well. Now, with regards to where financials are concerned, the 3-year CAGR for revenue, the growth has been around 13%, so decent growth in terms of where the top line is concerned. EBITDA and PAT both have grown at a CAGR, 3-year CAGR of around 22%. Margins have significantly improved in FY25 from a 10.4% in FY25 to a 12.8% in FY25 is what we have seen. In terms of where the valuations are concerned, if we take if we take 3 different scenarios here, if you expect a EPS growth of around 15%, the valuations will be around 30 times in terms of PE. At a 20% growth, 29 times, and at a 25% growth, around 28 times is what we are penciling in. Now, this compared to the peers, it's largely in line with where the peers are also trading at. So, the IPO seems to be reasonably valued at present. Now, in terms of the KPIs, in terms of both ROE and ROC, they are strong numbers, 37% ROE in terms of FY25 and 43% of ROC is what we saw in FY25. Debt position is almost nil, and robust operating cash flow is also there for the company. Lastly, in terms of the overall SWOT analysis also, it has a strong backing from the company. The weakness only is that there is a tax litigation overhang of around 4,700 odd crores. So this is the overall view that one needs to keep in mind before subscribing for the IPO.
Yeah, absolutely. Thanks so much, Mahima, for that. And by the way, that IPO opens today. We spoke with the management and to understand what the prospects are after listing, and take a listen to a part of that conversation.
Well, LG Electronics is set to open its IPO from 7th of October till 9th of October, and this is probably, in 25 years now that a consumer durable company is coming out with its IPO. It's 11,600 crore IPO, and of course, investors who are looking to probably subscribe for the IPO have a lot of questions in mind, and to exactly, clear their questions and in fact, get some answers from the management itself, we are joined by Sanjay Chitkara, the Chief Sales Officer of LG Electronics, and Atul Khanna, Chief Accounts Officer of LG Electronics, joining us now. Welcome to both of you, gentlemen, and thank you so much for taking out the time and speaking with us at NDTV Profit. Atul, my first question is to you. This is the first probably consumer durable IPO in the past 25 years is what we are seeing. What makes this the right time to list LG in India? Just want to get a sense there.
See, LG Electronics India is a 28 years old footprint in India, and we are having 2 large setup manufacturing plants, and we have particularly this time with respect to IPO, I believe this is a very right time that we are bringing in our IPO, and this listing will be giving us a great advantage to share our LG India's growth story to our public at large, including investors. And in particular, we say in going forward period, we are also having plans to expand our business in terms of domestic business as well as exports. As India still is having underserved penetration market for our size of products, and we are having all set of products in terms of premium as well as products for our mass as well as mid-segment consumers. So we are very much excited for this upcoming IPO, and we will share this, and our endeavor is to create a long-term value for our investors.
Right. Mr. Khanna, the other question that I had was that the IPO is completely offer for sale right now. Just want to get a sense, because your parent company will be divesting around 15% stake in the company. Why not raise a fresh capital for growth? And why go for OFS only?
So, as you know that we are having a cash generative business as well, though this offer for sale by our parent entity, LG Electronics Inc., is they are getting this offers for sale money, where they are investing a lot on our R&D activities, including providing us a technical know-how since last 28 years. And they are, for each and every product technology, we are getting it from our parent, and they are developing those products based on our Indian consumer insights, which we are bringing in for our selling these products in India, and producing those products almost to the range of 95% plus in our 2 production facilities. So, and we are highly cash generative business, and we are generating our cash in-house, and we are also reinvesting that cash into our business in the past as well as going forward period as well.
Understood.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक, ये हर मौसम में चलता है।
The market's most influential voices, the visionaries who decode the future of wealth, unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity.
Welcome back. You're watching India Market Open. We're just about a minute away from the pre-open session, and you're looking like maybe you'll open with a spot of green. Sunny Agarwal joining in. Sunny, very quickly, your view on Trent. That is one of the stocks that we've been talking about since this morning. Has disappointed the street, but now RSI is indicating it is in oversold territory. Is the worst over for Trent, or are you also disappointed by what you've seen versus peers?
Yeah, I think Trent, where we have seen a 17% kind of growth, I think at a valuation of 90 to 100 times price to earning multiple, I think it's a slightly disappointing number looking at a very expensive valuation. So at a current juncture, although technically it may be looking oversold on various parameters, but fundamentally I still believe that the stock is sitting at an expensive valuation, and there are many other apparel or branded value retail fashion opportunities which are available in the market. So rather than betting on Trent, I would like to bet on some other name at the current juncture.
Okay, just stay on with us. We're going across to the Federation of Auto Dealers on their September data, where the first cut of the numbers that they've put out on your screen, overall vehicle retail sales are up 5.22% for September. Passenger vehicle retails are up about 6%, 5.8%, while two-wheelers are up 6.5%. Sai Giridhar is with us. He's Vice President of FADA. Mr. Giridhar, thank you so much for speaking with us here at NDTV Profit. The September bump up, which was supposed to come in after the 22nd, is that accounting for a bulk of what you've seen? Because you would have also seen a downtick in the first part of the month while people were waiting for those GST rates to kick in.
Absolutely, you're absolutely correct. In fact, September was exceptionally a unique month for the Indian automobile retail industry. The first weeks were largely muted, with customers holding back on anticipation of GST 2.0 reforms. However, with the dynamics changed dramatically in the final week of Navratri festival, coinciding with the implementation of lower GST rates, reviving customer sentiments and accelerating deliveries across most vehicle categories. As a result, we saw overall 5.22% year-on-year growth, except three-wheeler segment and construction equipment. Every other segment showed a positive momentum. If I would like to draw your attention on only the Navratra segment. This year, the Navratra was probably the best ever festival period which we had over many years. The unleashing of the visionary GST 2.0 reforms announced by the Honorable Prime Minister Narendra Modi, first time ever, dealerships across nation witnessed record-breaking footfalls and deliveries, with all over surge of retails in approximately 34% year-on-year. Every segment, be it two-wheeler, be it three-wheeler, be it four-wheeler, there was a surge in every segment, which was close to 35%.
Sure. Sai, morning, and I'm just trying to understand, in the run-up to the rollout of, or just after the rollout of GST 2.0, there was a comment made by Maruti Suzuki about the expected demand for small cars. I'm wondering whether that is evident in the numbers that came through in the festive season, specifically on small cars. Is there dramatically higher interest?
See, definitely, the small car or the entry-level segment cars were actually lagging behind for quite some time, and it was basically on the cost of purchase which was there. It kept on increasing year on year, but with the GST 2.0 reforms coming in, there was a sharp drop of approximately 7 to 8% in this particular segment. So this segment actually benefited the most. From 29% GST, they shifted to 18% regime. So they benefit the lot, and now we see the customers coming back to this particular segment. The interest is there. People are actually upgrading themselves from two-wheeler to four-wheeler. The affordability in vehicles is absolutely seen. It's quite evident across segments.
And Sai, would you believe that this momentum could well last until and post Diwali as well? Because this GST cut is not necessarily for a particular period, right? The base effect lasts at least for the next 12 months. So do you expect this momentum to well continue until Diwali and post that too?
See, for the near term, what we particularly see is that the Indian auto retail industry is entering into a golden phase, actually. And it will sustain till December. That is for sure certain. The writing is on the wall. It can sustain even post December also. In fact, for 2026 also, the only difference would be how the price increase comes into effect from January. Because generally what we've seen over the decades is that when the sales increase, the normal tendency with the OEMs is that they increase the price, they reduce on the discounts. If that particular thing gets into, probably that could spoil the party, but otherwise we see this sustaining in a longer time.
Okay. Mr. Giridhar, thanks so much for taking the time. Pleasure speaking with you. Wish you all the best for the rest of the festive season.
Yeah,
all right, let's take you through the big brokerage call of the day. This is our special feature at 9:05, of course, and we've got Somit joining in to tell you about what Axis Capital has said about Bharti Hexacom. They've upgraded the stock to a buy, and they've revised their target price as well. Somit, what are they saying?
The recent underperformance is the major reason why they have upgraded the account to a buy rating from an earlier rating of add. They have also hiked the target price on Bharti Hexacom to 1,985 from the earlier target price of 1,887. Now they are saying that they have always liked the counter on fundamental basis, but it was largely the fact that the stock was trading at a massive premium compared to what Bharti Airtel India unit operation runs at. That was one of the major reasons why they had never given a buy rating to Bharti Hexacom, but the recent underperformance has led to this upgrade in the rating upgrade. Now, even after this upgrade in rating, they are saying that they are valuing Bharti Hexacom at a slight 5% premium compared to what Bharti Airtel's Indian unit trades at, but that is largely owing to the superior growth, lower capital expenditure intensity and superior returns, which would compensate for the lower footprint that Bharti Hexacom has in the country. Now, when it comes to the mobile business, they're expecting superior execution with steady trends, with healthy trends to continue even going forward. They're expecting the mobile segment EBITDA to grow at a CAGR of nearly 20% over FY25 to FY28. When it comes to broadband segment, they say that it's very small in contribution, but given the fact that the geography in which they operate is under-penetrated, there's larger scope for growth going forward, and they're expecting the home and broadband service segment EBITDA to grow at a CAGR of nearly 35% over FY25 to FY28. The major reason behind this upgrade is the underperformance, and they have also hiked the target price to 1,985 rupees.
Okay, Bharti Hexacom in focus. What else is in focus in the first few minutes of the pre-open session? Pre-open session actually pretty much done for most of it. Couple of minutes, a minute or so left. You know what's coming up to mind is Brigade, new announcements there. Which is why Brigade in focus this morning. Let's look at some of the others on our watch list. I want to see what, so Brigade has of course signed a JV for a premium residential project. The gross development value is about 1,000 crores. So that is seeing some action. Let's look at Bank of India. The business updates were pretty robust. So that is something that might see a movement over there. Apart from that, we were looking at LTI Mindtree. They've signed a multi-year deal with a global entertainment company. That stock is about 2% up as well. So these are some of the early movers. I want to see what Trent is doing. Trent had a tough closing. Is there some pop there? No. Trent is going to see maybe a soft start once again. Top loser actually on the Nifty 500. So Charm Metallic not doing too great. Hindalco, some of the metals are cooling off. Auto might have another tough day as well. I want to look at some of the public sector banks. We spoke about how PSBs will be in focus. So let's look at a Bank of Maharashtra, Bank of Baroda, and the Bank Nifty as well, because that's going to be in focus. Tata Investment continues to be a winner in this morning's toss-up, though I would say that markets are pretty flat. Watch out for IT stocks as well. The Nifty IT looking decent. I don't know if IT rotationally is going to see some action before the results come in a week from now. So, in fact, I'm going to ask that question to Ruchit Jain. Anything that you look at in the IT pack right now ahead of the results, this is ripe for an up move, if at all.
Yeah, hi, very good morning. Post the recent correction, most of the IT names are in the oversold territory. And a couple of names from the heavyweights which are showing a positive divergence with compared to RSI are TCS and HCL Tech. So I think post the recent correction, if any kind of pullback move would be seen ahead of the results, then TCS and HCL Tech would be two stocks where we can expect at least 3 to 4% of up move in the short term. So going that with the trend that they are oversold and there is a RSI positive divergence in the oversold territory, I believe that TCS and HCL Tech would be two stocks. If anyone is looking just from a short-term trading ahead of the numbers, then they can look to trade these two counters within the IT space.
Got it. Okay. A specific view, Ruchit, on the Nifty Bank as well, because that really, I think a lot of people are saying is the space to watch.
Yes, the leadership over last few days has been taken by the banking and the NBFC space. And after the recent correction, the index initially formed a good support around its 200 DMA, then now has started forming that high top, high bottom structure after a long time. So definitely, I think since these are heavyweights which drive the index higher, so we can expect a good up move in the Bank Nifty index in the near term and expect levels around 56,800 in the short term. So overall momentum definitely remains positive, led by some of the private sector banks as well as the PSU banks which are in momentum, and 56,700, 56,800 should be on the cards very soon.
I see you picked an OMC this morning. They've been in focus over the last couple of weeks, at least done well. What are the upside potential that you see, and what is the other stock that you like?
Yeah, so the theme that we are looking at in the recent market correction of last year, when the index is corrected for consistently for 8 to 9 trading sessions, OMCs was one theme which was doing well even at that time. So HPCL, IOC, both the stocks have broken past the previous swing highs. along with the price up move, the volumes are quite good. So that relative outperformance was there when the market was correcting. And now when the markets have started showing some positive momentum, we could see a renewed buying interest in these stocks. So HPCL at current levels looks good as it has given a breakout above its previous high. So with a stop loss below 440, short-term traders can expect levels around 480, 485. So one can create fresh longs over there. And NBFC space as a whole is witnessing a good bounce back move. So one stock, Canfin Home Finance within the NBFC space, technically is looking good. The stock has seen a good consolidation of about 2.5 to 3 months. And in this entire consolidation, prices have managed to form a good support base around 750, 760, which was the previous swing lows as well. Now, yesterday we witnessed a breakout from this consolidation, that too with rising volumes. In fact, not only yesterday, last 3 trading sessions, the volumes have been good in Canfin Homes. So we expect an up move in this stock. From a trading perspective, one can go long with stock below 780 for potential near-term targets of 840.
Sunny, we've spoken about diagnostic companies, but just the way they are starting off post the Metropolis declaration of the Q2 update, are you favoring one over the other?
Yeah, so coming to diagnostic, again, one need to keep in mind that usually September quarter is a cyclically very strong quarter for all the diagnostic company. And if you look at from a valuation perspective, I think companies like Thyrocare is trading at a relatively cheaper valuation. So among the diagnostic play, we would recommend Thyrocare purely basis the valuation at which Thyrocare is trading and the kind of turnaround in the performance which we have seen over the period of last 1.5 years.
Okay, just want to get a view on Tata investment. I mean, of course, some of that buzz because of the Tata Capital IPO. Sunny, is there a furtherance of trade here? I mean, it's a holding company largely, but that action seems to continue. And the response to the Tata Capital IPO, considering its size, has not been bad at all in its first day.
Yeah, again, I mean, a proxy play on the entire Tata group, Tata investment. So to be very honest, I don't have exact discount at which the Tata investment is trading compared to its current holding in the Tata company. But again, I'm usually all these holding companies trade at 50 to 60% discount to these its holding value in all the listed sets. So I think makes sense when obviously when there are a bull market scenario or improvement in sentiment. At that point of time, we usually see that discount narrows to 30-40%. So I think a decent investment bet at the current juncture if somebody has got a slightly medium to long-term investment on it.
Okay, about a minute left. Ruchit, I want you to look at the pre-open rates where they've settled and tell us whether you think there's any particular stock that you've not mentioned so far that is a good buy right now.
Yeah, so I think L&T is one stock within the heavyweight which is looking positive. For the last 2 trading sessions, the stock has taken good support around its 50-day exponential moving average. And it's not performed since last 1.5 years. It has been more in a time-wise correction. So this stock is on the verge of the breakout. So if you see any kind of follow-up move in today's trading session, then one can look for fresh buying opportunities, and we can expect levels around 3,900, 3,950 in the near term in L&T.
Okay, well, stay on, gentlemen. Lots more to talk about. It's starting off, seemingly gonna start off as a day which is placid. The question only is, can we build on from that 15, 20, 25 point uptick that we are likely to see on open during the course of the day? Can autos revive? I think that's the question. Will banks sustain? Will IT see a follow through? So I think all of those questions get answered during the course of the day. But here's how we're starting off the day today. Flat, 20 points. Flat for the banks as well, which were active yesterday. IT, which was very active yesterday, sees a bit of a build up from there. Mid caps 0.2%, small caps 0.23%. Okay, now just picking up steam a little maybe. Let's get the heat map up on the screen. Maybe the IT names up there. No, not really. Wipro maybe. But otherwise it's Coal India, ONGC, HDFC Life, iShares, Wipro, it's Bajaj Finance. It's a mixed bag of stocks. Effectively more green than red, but very muted gains considering the fact that the headline number is only 0.17%. So yes, 1 or 2 names stand out. Maybe Bajaj Finance after yesterday's up move or doing another 0.75% is actually welcome. Wipro picking up another 0.5% is welcome. but otherwise it's very muted. Some more red now. Trent duly reacting to the notes and the view on the Q2 updates, 2.5% lower. Max Health, after gaining quite a bit of ground yesterday, nearly 6.5%, down 1.6%. Jeffrey said it's at an inflection point. Right now, the market wants to book profits there. Axis Bank, Shriram Finance, TCS, a principal gainer yesterday, down about 0.5%, so that sees some profit booking. Interglobe Aviation too, about 0.25% lower. But more green than red. No standout movers, unfortunately, Tamanna, aside of Trent, which is really standing out.
Yeah, standing out and tumbling down, I would say. Nearly 3% down for a very, very large and widely traded stock with quite a bit of a market cap. Well, of course, because 27% was the expected growth, they've come in about 17%. But let's look at the broader indices as well. The India VIX is about 2% up, so a bit of an uptick there, but nothing to worry about. The mid-cap 150 flat, but look at this, that everything is still in the green. About 0.25% up on the small cap 250, which is not bad for this Tuesday morning. And on the day of the weekly expiry of the Nifty, keep that in mind as well. You might see some volatility in the second half of the day. Let me pull up the sectoral heat map for you and just give you a sense of what's happening there. Public sector companies right on top. Remember, NDTV Profit has broken the story that you will see an take-off stake in public sector banks, at least 2 of them in this calendar year itself. The Nifty Energy doing okay. Oil and gas stocks also good. A small uptick in crude prices, but the fact is that supply has increased, so nothing to worry there. IT stocks relatively having their day in the sun, but muted. Over here on the red, nothing too much to panic about. The Nifty Auto slightly in, I mean, that's flat. I can't even say there's anything negative there. This could well be a completely green screen in a few seconds, because look at all the indices in the red, nothing much to worry about there as well. The momentum seems bullish and the view seems positive, at least the trend. Let's look at individual stocks before we go ahead, and a lot of these on our watch list, because the game right now is about business updates, announcements and individual stocks. We're starting with Brigade Enterprises. They've announced a clutch of new projects. It's a joint venture actually for a project in Chennai. 1,000 crores is the gross development value of that project, about 1% up. LTI Mindtree has a multi-year deal with a global entertainment giant. The street responding positively to that, about 1% up. Bank of India was on our watch list. Decent business updates have come in. That stock is doing pretty well, 2% up in very, very early hours of trade. But watch out for these as potential winners through the day. Good business updates from Metropolis as well. Diagnostics have been in focus, and you're seeing 3% of an uptick on Metropolis. So that's firing this morning. Tata Investment is an interesting story as the response to Tata Capital comes in. Tata Investment seesawing, actually seeing a bit of a hit today after quite a long leg of positive moves. But Tata Investment down in opening trade. Bharti Hexacom was our big brokerage call of the day from Axis Cap. We've upgraded to a buy. That stock firing this morning nearly 4% up. So these are some of the early movers that I have spotted. Alex, what's on your list?
In fact, you've spotted quite a few of the movers. It's a bit of a lackluster day in terms of big moves. I will point out a few more. The Welspun Corp doing particularly well, up about 3%. Ramco Cement is also up close to 3%. AB Real Estate up 2%. This is among the top gainers in the Nifty 500 that I'm speaking about. MGL up and about is up about 1.7% or thereabouts. And now looking at the bottom end of the list, and by the way, there are more declines than gainers for the Nifty 500 just a few minutes into the start of trade, and that moved very quickly. That might not be evident on the overarching or overall pie, but for the 500 it certainly is the case, with only 230 stocks advancing right now. Trent losing more ground, down 3.7% at this point, and plumbing new depths intraday on the back of that disappointing Q2 update. City Union Bank is another that has fallen by the wayside at the start of trade today, 3.3% lower at this moment. Tata Investment is flipped the switch, if you can call it that, now trading with cuts of about 1.7%, and Fortis Health down about 1.6%. Sunny, I know that you did speak about diagnostic companies, but I specifically want to ask you about Metropolis. In the recent past, it has moved into a net debt free, and it has stated that it now has cash on the books about 55 crore rupees. Directionally, it seems to be moving in the right direction, consolidating, adding more regional players. Are you bullish? Would you buy at this moment, specifically on Metropolis, up 4% or thereabouts?
Yeah, definitely. I think, Alex, as you rightly pointed out, that balance sheet have turned cash positive, and the entire industry is well placed now. So a year and a half back, there was a lot of competitive intensity, which has led to the price erosion in this entire diagnostic sector. And now, as we speak, things seem to be settling down in the entire industry. And as Metropolis has posted the update, quarterly update, that again seems to be very upbeat number. Balance sheet on a very strong footing, cash rich balance sheet. I think again coming to Metropolis, what I believe is that all these large peers have got a potential to deliver kind of 15-16% kind of earning CAGR over the period of next 2 to 3 years. I believe at a current juncture, the fair value of Metropolis is close to 2350 or 2400 if somebody has got an investment horizon of 12 months.
Okay. Well, those guys are the ones which are kind of standing out today. Otherwise, it's been quite muted, if you will. Ruchit, I was intrigued and interested, not intrigued really, but interested in your top ideas for the morning, and wonder if at these prices on open, you would buy one of the oil marketing companies. And what's the timeline for that trade?
So, if you look at the oil marketing companies, then definitely, as we spoke, that both IOC as well as HPCL positioning are looking positive. Not only because of last 1 or 2 days up move, but in the recent market corrections, they managed to do well. So I think if we look at last for next 1 or 1.5 weeks perspective, that is for 7 to 10 days, then we expect some good momentum to coming in both IOC as well as HPCL. So HPCL at the start of the day was my call. So from a 1 week's perspective, one can still go long on HPCL. And the entire oil and gas space, I think another stock which is looking positive from here on, from a trading after today's opening, we can see ONGC and Oil India. Both these upstream companies have managed to surpass the immediate resistances. In fact, ONGC has gradually been going higher, surpassed its 200 DMA. Couple of days ago, today even Oil India has surpassed the 200 DMA. So I think along with the OMCs, maybe ONGC, Oil India, could be a couple of names where we can see some good positive momentum today for intraday perspective.
Okay, a very quick call, Ruchit, on Bharti Hexacom. NDTV Profits, top brokerage call of the morning. This is, you watch us and you will profit from it because we work for your profit. Let me plug in that for you as well. But Bharti Hexacom, Samit Sarkar came in at 9:05 and said that's our top brokerage call of the morning. Bharti Hexacom, view there very quickly, Ruchit, and then I'll come to you, Sunny.
So the risk reward ratio is very much favorable post the recent correction. Stock has taken support around its 200 DMA, and today we have seen a good momentum from that support itself. So price-wise downside seems to be limited from here on, and in case of positive moves, we can expect levels around 1800 very soon. So looks positive for possible targets around 1800 in the near term.
Sunny, Bharti Hexacom.
Yeah, so coming to Bharti Hexacom, again, a play on basically territory of Rajasthan and northeastern part of India, which is slightly underpenetrated. So what we are seeing that the scope of growth in an underpenetrated area like Rajasthan and northeast is slightly better as compared to its parent company, which is a pan-India, or for that matter, a play on South Africa telephone market. So Bharti Hexacom, we believe, will slightly outperform its parent company Bharti in terms of earning growth, at least for next 2 to 3 years. So again, I corroborate with the other brokers that the pace of growth will be slightly better than Bharti, and hence again the fair value according to us is also closer to 1950 to 2000.
Okay, so Bharti Hexacom, one of the top gainers this morning. Thank you so much, Ruchit and Sunny, for speaking with us on India Market Open. Well, it's going to be an action-packed day. So much happening today, and if you are in BKC, then all roads will lead to BKC, and you will be in a traffic jam on those roads. There's actually been a warning from the Mumbai Traffic Police. So, Neeraj, if you're planning to hop out for lunch, I suggest you don't. But nevertheless, we have our battalion there at the Global Fintech Fest. Who is covering it today. Vishwanath Nair, Agnidev Bhattacharya and Rishabh has come in. We've got him down from Delhi to track all of the action there. So many speakers. Finance Minister will be speaking here, Prime Minister, RBI Governor, SEBI Chief. You have a whole list of dignitaries to track.
Yeah, don't get out for that lunch, please, because I came in this morning and there was no way I could get into this venue. But you've got, apart from the people that you've listed, you've also got the UK Prime Minister coming in a little later today, a little later during the 3 days. Remember that this festival is the largest fintech festival across the world, a live event that's happening. You've got over 1 lakh people attending it this year. That's on the basis of what the initial estimates are. Of course, a little later we'll find out how many people actually attended. Last year that number was 75,000. So maybe the venues here might be falling short very soon. What we're also understanding is that about 850 odd speakers, 400 exhibitors. You've got a whole host of events happening here, speaking events happening here. I will come to, of course, Agni and Rishabh here, who are part of our crack team, who will do all the major interviews and report whatever is happening at these events. But guys, I just want to get your sense. Agni, what are you looking forward to as the event to track here?
Right. So events aside, I'm really looking forward to tracking what is called the Bharat AI Experience, which is an experience zone that is being set up in collaboration with NVIDIA and NPCI, and there will be real life applications. They'll take you through all the applications in the finance and tech sector and how they are processed and the tech is passed forward. There will be 10 companies doing these hardcore AI analytics and applications, and this will be something that I really look forward to. Of course, if we have the time, we'll take you through them, and we also have interviews lined up here. There are managements coming in and talking to us, but more on that and more on who the key speakers are. I'll pass it on to Rishabh.
Right. What I'm most excited about is I'm looking for a credit card. Lots of credit card launches coming in. So I'm really looking for the right fit for myself. Last time around, there was a bunch of banks that had come out with UPI-related ATMs. I'm seeing one on our floor right now. So I'm looking forward to more of these technological advancements, more of these innovations coming in. I'm told a lot of wearables and tap-and-pay wearables are also coming in this time around. So that's something that I'm really looking forward to.
So, technological advancements are important because the theme for this year is actually empowering finance for a better world powered by AI. A wordy theme, but important in the current context of things. So we'll watch out for what exactly comes up in terms of AI-related advancement, because that is, of course, the next frontier for finance. But that's it from the three of us here at the Global Fintech Fest, and we'll keep you updated on all the news and updates through the day.
Hang on, Vishwanath, you're moderating a panel as well at 2:30, and we'll show you glimpses of that. So tell us a bit about that and what the topic is and who you have on your panel, because one of NDTV Profit's own is going to be moderating a panel at the Global Fintech Fest.
So the panel is actually called Super Apps in the current financial ecosystem. Who will actually own the customer? And I think that's an interesting topic. But of course, more interesting are the speakers who are coming in. You've got Karan Sapra from Google Pay. You've got a speaker from Lightspeed Ventures. You've got Federal Bank, HSBC. All these speakers who are coming in to talk about super apps in the current environment. I personally don't believe in super apps. I think the era for super apps is completely gone, and India has sort of passed through that. But having said that, I want to hear what these speakers are saying, and that panel is going to happen at 2:30 p.m. today here at the Global Fintech Fest. You should watch it.
Most certainly, Vishy. We'll watch it. We'll get everybody else a chance to watch that as well. But thanks so much for joining in, all three of you, and keep us updated with all the developments at the biggest fintech festival in the world. This is quite something really, right, guys? And it's happening right in our backyard.
The crowds there are insane. To see. I went last year and I got a top shot from one of the escalators. You would think that things are being distributed for free. That's how packed it is. But nevertheless, all the action, you can watch it from the comfort of your home or your office. Okay, the healthcare sector is in focus, as we've been saying, on the back of India's first major revamp of central government health services scheme since 2014. The new rates, which could be nearly 25% higher, kick in from October 13th. What is being penciled in when it comes to impact of these revisions? Our colleague Varsha caught up with Sandhya J, who's the Group CFO of Narayana Health. Listen in.
the basic question, or my first question would be, what portion of Narayana's revenue comes from government scheme, and how quickly, can the hospital capitalize on the new rates?
Good morning. Thank you for having me here. So let's take a little step back and see what's happening with the CGHS rates. CGHS rates, like you said, have not been revised for a long time. And if you see the way the rate changes have come, in some categories, we've got some reasonably good increases between 25 to even 50%, especially around areas like cardiac surgery or areas of knee replacement, some lab procedures, etc. But there are certain other areas, like some of the general surgery work that we do, or the work that's done around cardiology, things like angioplasty, etc., and basic lab work like X-rays or OPD consultation for that matter. There has not been a substantial change, or has been no change in some categories. So broadly, the overall increase to the hospital segment is only between 8 to 10%. That is the range in which we are seeing very broadly. See, we haven't done the full math to give a exact number, but broadly, we don't see an increase beyond that range. Now, coming to our share of CGHS business, typically CGHS is not just work that is done directly for CGHS, but there are a lot of public sector organizations which also use the CGHS rates for settlements, and also organizations like ECHS, etc., to follow the CGHS rates. So if you take the full portfolio, assuming that all the organizations are going to implement or inherit this change, that will be around 10%. Now, on that 10%, you will see a 8 to 10% change. So it won't be a material impact in terms of revenue growth or in terms of margin improvement, though it will have a positive momentum, number one. Number two also is it is a step in the right direction, because we are currently serving below cost in many of these procedures. So to the extent the revision has been effected, it enables us to recover at least some of the costs better.
Understood. Sandhya, I heard you saying that you have not done the proper math, considering the impact of revenue and EBITDA. But any idea that if you could give us, because what analysts are estimating is if 25% is the hike in rate, that could lift almost 2.5% in revenue and 10% in EBITDA. So any ballpark number that you could give, or is this the number which analysts are saying? Are you on the same page?
I don't think so. From how we are seeing the numbers, I think overall we would see not more than an 8 to 10% increase in the realization overall, because like some high value procedures have increased the rates. But at the same time, a large chunk of the work we do, for example, is medical management, and bed charges have not been increased. And when we do an averaging out of all the work that we'll do with CGHS, we will not see that kind of a material impact like the way analysts are projecting. As I was sharing earlier, maybe 8% to 10%. I'm giving a very back of the envelope number. We're still working on the details. But broadly, we don't see more than 8 to 10% of increase coming in to the realization. The other aspect one has to keep in mind is that we may not get a significant volume uplift also, because the overall portfolio is a balance of affordability. And given the way the CGHS rates are positioned and the way the cash flow is positioned, so therefore there is a certain payer balance that all organizations maintain. So given that the rate is not like a substantial improvement to our overall portfolio or the rate at which we operate, so therefore we are not going to see a big uplift in terms of the revenue growth as well. So broadly, there will be some positive momentum, some tailwind. There will definitely be better care that will be available to customers. Why? Because the new guidelines are able to differentiate very clearly for higher quality. So NABH accredited hospitals are getting a premium over non-NABH accredited hospitals, which means more and more hospitals will be motivated to take up accreditations like NABH, and therefore the overall quality of healthcare will improve and the access to quality care will improve, because there will be more accredited hospitals that will be available for patients to access. So in that way, it will have a overall positive momentum on the health outcomes for the CGHS customers.
Understood. Also, Sandhya, if you could, specify the average increase in realization when it comes to, oncology or cardiology segment, considering these are heavily utilized by, CGHS patients.
As far as the cardiac segment is concerned, there are good increases in the cardiac surgery, but there are hardly any increase in the cardiology side. So therefore, on a balance, if we see between cardiac surgery and cardiology, and higher volumes go through cardiology, therefore, we only see about overall 10%, 8 to 10% in terms of the cardiac segment. As far as oncology is concerned, a lot of the oncology procedures come under general surgery, and there isn't a significant change in the general surgery rates. And then there isn't also a significant rate change in the diagnostics for oncology. So the overall impact on oncology will not be very material. On cardiology, there will be a reasonable impact, like we discussed earlier.
Also, Sandhya, this is the first revision in last 15 years. Will the new rates, be sufficient to cover up the actual inflation in operational cost, or does a profitability gap still remains?
Absolutely. This will not cover in any way. Even the new rates are operating barely at cost for us and for most hospitals. If you see the inflation that the country has seen since 2014 and how far the hospital cost structures have moved, the overall increase of 10 to 15%, let's say, even in the best case scenario, let's say it's a 25% increase over 10 years, is not going to even account for the inflationary change in the sector. So the cost pressure is going to continue, and therefore hospitals are going to continue to play the balance on the payer mix, given that they need to manage their overall cash flows and profitability.
Also, Sandhya, are there any plans, to expand CGHS empanelment or increase the number of procedures offered under CGHS by Narayana?
So we have empanelment in most of our hospitals, and where we don't have, we have a process by which we agree with the empanelment. So I don't think there is a need to expand anything further, because where we have empanelments, we cover the entire spectrum of the work that is available to do under CGHS. Obviously, operationally, we will keep engaging with the CGHS authorities in terms of the ways of working, and that also determines whether we stay empaneled or not. So that will continue. Otherwise, I don't see any operational change for us.
All right. So that was a conversation with Narayana Health, and of course, Narayana Health showing an uptick today. It's a good day for your healthcare space once again. The other big corporate story, though, that we've been tracking right here on NDTV Profit is what is happening in the Tata Group. And now it's come to the state that the government is stepping in to help diffuse tensions within the Tata Group, even as divisions deepen between key members of the Tata Trust Board. Sources tell us that top Tata representatives led by Noel Tata are expected to meet with senior government ministers to avoid a possible public listing of Tata's sons. My colleague Vishwanath joins in with more details.
Right, so there is a big boardroom battle that is playing out at Tata Group. Of course, it's one of the most storied corporate houses of India. And what we understand from sources is that this boardroom strife has caught the attention of ministers in Delhi. And representatives from the Tata Group, led by Noel Tata, will be meeting two senior ministers in Delhi, and they will be discussing the way forward for this boardroom strife to come down. Now, let's give you a little bit of context about what exactly is happening at Tata Group. So Tata Trust, which is a group of two charitable trusts which also control considerable stake in Tata Sons, the investment arm of the Tata Group. There you've got a two-camp system that is developed. One is a Noel Tata camp and the other is a Melly Mistry camp. And both these camps are currently at loggerheads. Essentially, the Melly Mistry camp believes that the Tata camp has been making decisions without keeping them in the loop. And these decisions mean strategic movements happening at Tata Sons, which is not something that they're okay with. And they've been opposing it quite strongly. On the other hand, the Tata camp believes that they have followed all necessary rules that are in place and they're acting only in the best interest of all the shareholders involved, most of which is Tata Trust with a 66% stake in Tata Sons. Now, because of this fight, what we've seen is that Vijay Singh, who's a long-term Tata Group confidant and also a former defense secretary, he had to leave the Tata Sons board. That was because of a meeting that happened last month where things got very heated between the two camps. And of course, that led to Vijay Singh's exit. And this has led to a lot of chatter outside in the market about this boardroom strife. We are calling it, of course, the Tata versus Mistry 2.0 here, because a few years ago, if you remember, there was a fight between Cyrus Mistry and Ratan Tata, which had led to similar sort of concerns about the Tata Group facing some amount of boardroom strife, some amount of disagreements, which were causing difficulty within Tata Group companies. Now, one of the few things that will be discussed at this meeting with the ministers is also about Tata Sons listing. Remember that Tata Sons does not want to list. However, the Reserve Bank of India back in September 2022 had placed Tata Sons on the list of upper layer NBFCs. These upper layer NBFCs were mandatorily required to list within 3 years of having been listed. So September 2025 would have been the deadline by which they would have had to list, which they have not done yet. So the deadline has passed. Tata Sons on its part says that they have already repaid all the debt and they've applied to the Reserve Bank of India for cancellation of the certificate of registration to be classified as a core investment company. This core investment company tag is the reason why it is an upper layer NBFC. The RBI has confirmed that it has received this application for a cancellation of registration. However, a decision has not been taken yet. The RBI also wants an amicable solution to this whole problem. We need to see whether the RBI accepts Tata Sons' application to be removed from the CIC or the core investment company list, because it's only on the basis of that that they will avoid that mandatory listing. In this whole picture is also Shapoorji Pallonji Group, which owns a little over 18% in Tata Sons. They, of course, have raised a lot of debt from the market, close to $3 billion, for which they have placed the Tata Sons shares as collateral. Without the say-so of the Tata Group, those shares cannot be actually sold and monetized. So, therefore, it is very important that the situation at Tata Group does get resolved, and the Shapoorji Pallonji situation is also resolved, because $3 billion of borrowing from the market also means that they pose a significant credit risk for the broader market for India.
Thanks for that, Vishy. Now on to the big story. December could, or actually I will say would, mark a turning point for Mumbai's aviation landscape. The Navi Mumbai International Airport is set to welcome its first passenger flights, activating the city's long-awaited twin airport model. What makes this launch significant? What features does it bring, and how does it impact key sectors? Let's first get in Anushi to set up that thing for us. Anushi, how have you analyzed this?
Well, Neeraj, of course, it's a significant milestone that we are seeing, not just for Mumbai, for the passengers, as well as for the overall other industries as well. Now, what we are looking at, a comparison between the two, just to see the importance of this particular airport that we are looking at. Overall, if you just look at the passenger capacity, now currently Mumbai Airport, about 50 million is the kind of influx that we are looking at passengers per year, which Navi Mumbai will be catering to about 90 million in its full capacity. After all the phases are commissioned, is the kind of capacity expansion that we'll be seeing. Even in terms of cargo handling, what we are looking at is a 5 times of a jump in terms of where the cargo capacity is at 3.2 million metric tons in comparison with about 60,000 in Mumbai Airport is what we are seeing. What is also interesting is the phase 1 of investment that they have made. Around 20,000 crore is the size that we are looking at, and the commissioning is happening tomorrow in October 25 itself is what we are looking at. So this includes, in the initial phase 1 includes an influx of around 20 million annual passengers, and this is with around 0.8 million tons of cargo capacity is what we are seeing. Now, even if you look at traffic, that is projected to grow from 4 million passengers in FY26 to 17 million in FY27 itself. So in this 2-year period, you're looking at more than a 4 times of a multiple year as well. In fact, if you look at the airport's target, it targets about 65% of non-aero revenue, and this is using duty-free Adani One app alongside city developments. What the city developments includes? It includes building world-class hotel facilities along with real estate developments is what we are seeing. Of course, there would be a significant uptick in terms of the properties also around the Navi Mumbai region with this airport now coming there. So let's take a comparative, in which sectors we should be focusing on. Firstly, airlines, if we'll see, reduce congestion along with increasing flights and new routes will benefit the passengers as well. Real estate, we are seeing a boost in terms of where the property prices are concerned. So a lot of developers will be expressing interest in this particular area as well. Apart from that, what we are seeing is that logistics and economy. Logistics, we've seen about a 5 times of a multiple in terms of where the cargo handling capacity goes. Even in terms of job creation, even foreign investment, this is a positive side that we are looking at. Now coming to the other picture is, the phase 1 to phase 5 development is what we are looking at. So phase 1 and 2, as we've spoken about, 20 million is the kind of capacity that we'll see, with a further 20 million capacity expected by FY13 by phase 3 is what we are seeing. And this would lead to an overall peak capacity of 90 million passengers. This is as per the traffic triggers that we are looking at. So timelines of this is something that we should be watching out for. Apart from that, in the domestic and international mix also, if we are looking at by FY30, 24 million is kind of the target that we are seeing from the domestic side, with 9.91 million on the foreign side is what we are seeing. This is as per the Jefferies report that we are looking at. And considering the valuation of this is beneficial for Adani Enterprises stock price also, because currently if you just look at airport's valuation, that roughly stands at about 1,432. So that's the kind of story that we are building for this particular airport, and it's a significant development that we are looking at.
So we're going to analyze this in a couple of ways. Thank you for that comprehensive piece, Anushi. So Sanjay Lazar is with us. He's CEO of Avialaz Consultants. He's an aviation expert and an author. And we'll get the perspective of what this means for India's ambition to have a hub like a Dubai or a Heathrow. And with Vineet Bulinjkar, who's head of research at Ventura Securities, we're going to talk about the stock aspect for Adani Enterprises. Let me speak to you first, Sanjay, and just get a sense from you. So the inauguration is tomorrow, but it is going to take off the first flight from December. In terms of the vision and the capacity, it's obviously much, much larger than the current capacity in Mumbai, which was already bursting at the seams. What is going to be the impact on passenger prices, on convenience, and also the amount of traffic we will see?
Thank you, Tamanna, for having me on your show. Yes, it's a red letter day tomorrow because, it's, if you remember, it's after 2008 that we'll actually be inaugurating a new greenfield airport in India. The last two were Hyderabad and Bangalore. And we'll have now Navi Mumbai and then Jewar shortly. Like Anushi said, it'll start at 20 MMPA and eventually with 2 runways, 4 terminals, it'll go up to 90 MMPA. Though in my view, it should have been larger, planning for, the growth in Indian aviation and in that space. But, given that Delhi is already in the top 10, Jewar will make the NCR region a massive hub. But Navi Mumbai is going to give Mumbai that quantum leap it needs. It's also going to provide a huge fillip to that entire Pune-Mumbai area. Pune has been starved of an international airport, as you know. So that entire belt of Maharashtra, the Kolhapur, Sholapur, Pune region will also feed into this. I also see a lot of new long-haul routes eventually being opened up maybe a year down the line out of Navi Mumbai. The reason for this is quite simple. You will have a longer runway. You'll have 2 runways eventually. And I do expect government to open up some bilaterals specifically targeted to Navi Mumbai. I see this as a huge fillip for the Adani Group, which has done this in record time. However, it must be pointed out, and this is tongue-in-cheek, that, Navi Mumbai Airport was first conceptualized 74, 75, came on paper in 85. I remember 94, 95 is when the government started the process. Air India built a colony from 95 onwards in Navi Mumbai, and it's 2025 today. So, hats off to Adani for having defeated what the government took 30 years to build, or 40 years, and done it in record time. The airport looks splendid from the visuals we've seen. And I do believe it's going to be a game changer. The one dampener would be the lack of multimodal connectivity by your tubes, your underground railway, and the trains which are still coming. They're still being developed. But once that is in, I do believe it's going to make a sea change. We're going to see a lot more passengers flying. Cargo is going to become very essential because, your fruits, your fresh vegetables, your floriculture, everything that comes in from interior Maharashtra will get picked up much quicker. So I see that, this is going to help a great deal in trade. I also see lots of SEZs coming up, lots of construction. So I can see that expressway becoming, a booming metropolis on its own, which is a great sign for us.
Yeah. And interesting facets, Sanjay, that you brought out in your opening answer. Thanks for that. Let me get in Vineet Bulinshkar in the conversation as well. Vineet, from a business perspective and some telltale signs or some telltale measures that Sanjay spoke about, what do you expect this to do to the surrounding economy and the ecosystem?
So obviously, with the infrastructure kicking in for the airports, I think it's going to mean that, there is going to be a lot of development coming in and around the area. Also, there's a large number of, projects, rail and road connectivity that are going to build up. So we are going to see the entire ecosystem around the Navi Mumbai Airport, develop into a massive Mumbai 3 of sorts, as you call it. So, we are going to have probably 3 cities, which are part of a large conglomerate, which is Mumbai, Navi Mumbai, and Maha Mumbai, which is going to build up. And, we are going to see some $1 billion of investments coming out here and, ignite Maharashtra's Mumbai into a very, very large oligopoly.
Vineet, what is the, I would say, ripple effect of something like this and on listed entities as well? The one on Adani Enterprises is an obvious one, and you've spoken about that. Of course, standard disclaimers there. But there is so much of infrastructure in the area, real estate players in the area, and there is going to be a build-on effect as well. How do you see that playing out?
So, just let us talk about, the number of, the number of people who are looking to come in. We're talking of close to, 20 million consumers coming in for airports, and which is going to go to 30 million over a period of time, over the next 10 years. And, if you see, we are going to see a massive flow in, the airport growth for the Adani group, growing from about 10,000 crores in FY25 to about 15,000 crores in FY27. That's about a 23% CAGR growth. And EBITDA is also, expected to grow to about 40%, which is about 6,000 crores of EBITDA. And, CAPEX, which is already at 10,000 crores, and they're looking to add another 6,000 crores of CAPEX to the business. So that is the kind of growth that is going to come in purely for the airports as such.
Okay. Okay, Sanjay, in terms of, and I asked this in the beginning, but I want to just pinpoint on it. In terms of airfares, do you see any change here with larger volumes, at least flying out of this region?
I do see, let's understand that the PSF and, the government fees and the airport fees will be fixed by AERA. I do see there may be a slight softening of airfares only out of this airport purely to attract people to make the move. But eventually, I don't see that there's going to be a drop in airfares overall in the long term, because there is so much of demand. Remember, that entire Pune demand, we are only talking about Mumbai growing, but look at what Pune and Nasik and all those areas will bring in will be huge. To also refer to a point, my other guest made, is typically the thumb rule for an airport is, a multimodal transport hub like this would be for every 10 million passengers, about a 1 lakh jobs created, whether it's in real estate, whether it's in luxury, travel, whether it's in hotels, or whether it's in, basic retail. So I think we're going to see a huge explosion there. In terms of pricing, don't expect airfares to crash. They're not going to crash. There's going to be excess capacity, but remember, it's a demand that's already exists. People who travel to Delhi and people who travel to other cities will now come directly to Navi Mumbai. So I just see a short-term drop to entice passengers to come in. But over the long term, I think these prices of air tickets are going to remain stable. Airlines have learned that every high is the new base. And airports also have learned that. So I think we have to learn that we're going to end up paying more to travel in any case in the long term. So let's stick to that. Yeah.
Might as well travel in style while that is happening, Sanjay. And that's well put as well. But both of you gentlemen, thank you so much for this initial take on what promises to be a landmark infrastructure development for the Mumbai and the MMR region and the surrounding areas as well. By the way, Pune, Navi Mumbai, Khandala, what have you. I think all of those benefit from this. This is certainly something, and we'll keep at it tomorrow as well. For now, we need to slip into a very quick break. On the other side, we get to an exclusive conversation with M&M. Stay tuned.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The market's most influential voices. The visionaries who decode the future of wealth. Unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की।
coming to you live from Mumbai, where you've seen the big launch of the Bolero as well as the Bolero New and the updated one as well. You can see the vehicles on my side as well, but talk more about this as well as a lot more about what Bolero means actually for Mahindra and Mahindra. I'm joined by Mr. Golagunta. He's the CEO of the Automotive division. Pleasure speaking with you again. Thanks so much for giving us time at NDTV Profit. 25 years for the Bolero, and this, we're standing next to the Bolero New, which was launched in 2021. What has that pivot actually meant for you as well as for Mahindra and Mahindra at this particular point of time?
So Bolero Neo, as you know, is one of the sub-brands within our Bolero portfolio. If you look at Bolero as a whole, it's a 25-year-old legacy for us. It's not just an SUV, it's also very much of an identity of India as a whole. And Bolero Neo adds on to that. As the customers have evolved, become more sophisticated, they wanted a vehicle which is a little bit more youthful, has a little more tech features. And really what we have done with this vehicle, with the new launch itself, is we've taken some of the customer feedback in terms of tech, creature comforts, and we've kind of made the value proposition even more attractive and stronger.
So is largely premiumization one of the key strategies that you've had with this particular vehicle, and you seem to be addressing a crowd that wanted those features, and now they'll be getting that because it's largely as an image of a very rural vehicle, but that seems to be not the case with the Neo as well. So is that with the addition of so many new features that you've described in this particular launch, that seems to be addressing a lot of gaps which you might have had or might have in the future?
Yeah, I think not as much as gaps as an evolving customer to that extent.
Yeah.
The customers we have might have a legacy of Bolero, might have had that in the family over a period of time, but they have progressed in life, they're at a different stage, and they want some of these features on top of the goodness of what a Bolero stands for. A body-on-frame vehicle, true blue SUV, tough, rugged, can go anywhere to that extent, yet not compromise on some of the features and tech to that extent. And that's really what is embodied in this product.
Do you also see that, one of the key aspects is the second generation also coming to choosing a Bolero New compared to the father who had the Bolero Classic at that time?
Yeah, no, absolutely. So we see some of that play out as well, which is really a journey in a family that the parents might own the Bolero itself, and to that extent, the name holds a certain value. And there's a value proposition to what that vehicle stands for. Yet, they want something which is a little bit more contemporary and youthful, which is what it is. And that's for us, it's a Bolero family we're talking about, not necessarily one vehicle or the other vehicle.
We also have the Classic here, which started it all for you essentially so many years ago. Has probably started you off with a rural SUV maker, and now with the multiple new launches, the 700s, the 3XOs, you've become essentially a pan-India maker. You've also got a very big GST cut on all of these vehicles from 31 to almost 18% now. Has that led to increased demand post-September 22nd?
Yeah, definitely. So GST 2.0 has been a huge boost for the entire industry, and that has played out well for us as well. And if you look at September itself, and again, it's very early days to see how it will play out fully, but just our dealer reported customer retails in Navratra, the first 9 days, if you look at it, our SUV growth has been about 60% just for those 9 days to that extent. So clearly it's starting to play out. Some of it is pent up demand from before as well, but we're quite optimistic to have a strong festive season.
Have you also seen essentially waiting periods increase in this particular point of time because of largely trailer shortage then production? Because you've seen a lot of consumers coming post September 22nd to you, and that seems to be what the industry is suggesting, what you suggested to us in our last conversation as well. Does that largely increase waiting periods? But customers for you all is quite different. They are very design centric, so you wouldn't be having any loss of sales essentially at this particular point of time.
Yeah, so definitely logistics is something we are focused on very much. It was a consideration in the second half of last month as well, and continues to be an area of focus for us. So we'll see how it plays out, but having said that, these are brand loyalists. They wouldn't buy anything other than what it is, and especially with what we put out as a new products, very strong value proposition. We are hoping that we'll be able to cater the customer demand with this.
Could you also just give us some perspective on how the Neo as well as something like a 3XO also offers in your current basket? Any kind of differentiation that you see within consumers there? Because 3XO, while very successful, is still quite new to have a distinct customer. You're seeing someone going for an entry-level 3XO, someone going for a mid-variant. Has there been any differentiation in your mind between the Neo as well as the 3XO and any kind of cannibalization that you see at this particular point of time?
Yeah, I think, see, as you know, a 3XO in some ways gives a very wide range in terms of not just the pricing, but also in terms of the fuel options which are out there, diesel and petrol put together, and even within petrol, the TGDI engine we put out there. So reality is it's a choice customers are making, and there will be some cross-country consideration at any point in time. But if you look at GST 2.0, some of our variants in 3XO, the price drop is as much as 1.5 lakhs. So it's a very strong proposition on its own. And with the competitive prices we put out there, we think both of them are equally compelling options for customers.
Is it that the Neo is more rugged compared to the 3XO at this point? Because while it was expected to be a very urban push with the 3XO, you get that urbanization pitch with a rugged pitch. Is that what you get with the Neo as a variant?
Yeah, so the intent is that there is a certain journey where the customer takes with Bolero, and as the family evolves, the next generation might be looking at a Neo. So of course there is that rural bent to it to that extent, but it's very much an urban product. 3XO has its own journey, which is the XUV family DNA to that extent. So it has two different segments, but there's always going to be some consideration.
With the Classic, there's this distinct rural image that I mentioned and at the start as well. Do you see that with the brand largely, with Neo as well, or do you feel that it's slightly more rural push, but you have a lot of urban consumers as well, with a very big distinction of rural and urban now being merging as well? Is there anything that you can give us some perspective of that image changing now with not just being a rural SUV?
So again, you said it right. The whole definition of rural and urban is a very fluid thing. It's hard to say what that means. We've seen customers from a seemingly urban environment go buy a vehicle which looks rural, but it's because for their parents. They buy an XUV for some of the small towns as well. So it's hard to say which way it goes. Our intent is that we will provide an entire bouquet of products across all the powertrains and fuel types as well, and let the customer make a choice which way they want to go.
So is this...
All right, so that's the new Bolero, which is hoping to zoom past in sales, but what's zooming right now is the Nifty. Let's pull up the line graph and look at the strength coming in the index in the last 20 minutes or so. It's courtesy banks. Look at the bank Nifty, also about 0.5% up, and we should pull up the Nifty contributors if we can. You're seeing some smart moves coming in there. Yeah, you have HDFC Bank, ICICI Bank, RIL, all the big boys have come out to play today that have moved up the Nifty, sort of making up for the weakness in Trent, etc. Axis Bank, also a little weak, but it is the large private banks which are zooming, so some serious money coming there. I want to quickly talk about the two new listings, and it's been a bit dismal, to be honest. There were two companies that have listed today. One is Glauus, one is Fabtech, which is a turnkey project solutions provider. Glauus, of course, is in the logistics space, a Chennai-based company, and dismal is an understatement to see an issue which lists 32% down. At one point, I think it was 40% down its issue price. The issue price was 129 rupees, trading at 87 rupees right now. So something has definitely not worked for Glauus. And considering that the overall subscription was 2 times, it is a total offer for sale. Maybe that's what is bothering people, but I mean, there was a subscription for it. Fabtech Technologies is also listed at a discount. The issue price was 191 rupees. It's at 183 right now. And yeah, it's a Mumbai-based company which delivers turnkey projects. Very, very disappointing for those who came in.
Yeah.
I mean, tread with caution, double underline, tread with caution in your diary when it comes to IPOs this season.
Yeah, whether you subscribe or you're buying in the grey market.
Yeah. That is triple underline.
Or the private market, actually. Forget the grey market, but the private market. Yeah,
if you
the private market.
Pre-IPO, I don't know why you do that. You don't know what's going to happen here. So why would you do that? All right, let's go across to another story that we're doing, and this is an exclusive. This is our analysis on what we could see in the November MSCI reshuffle. It's approaching quickly, and the announcement is expected on the 5th of November. Samit Sarkar joins in with those exclusive details.
Well, this is the first cut of what are the stocks that could probably get included in the MSCI or get moved out of the MSCI index. Now, for that, firstly, let's understand the timeline here. Now, the cutoff date that MSCI uses to select stocks that could potentially get included in the index or get out of the index is between October 19 to 31st. Now, we do not have any specific date, but any date between these this range is something that MSCI will select, and based on that, they will include stocks or remove stocks from the index. Now, the announcement for the same is expected to happen on November 5th. Flows, that is the passive inflows and outflows for the stocks that get included or get removed from the index, will happen on November 24th, and the effective changes will be from November 25th. So firstly, let's look at the stocks that could get included in the MSCI index. Now, based on the share prices, currently Fortis Healthcare has a high probability of getting included in the MSCI index in the November rejig. And if that happens, then the inflows could be anywhere close to $380 million. For GE Vernova TND, again a high probability, $310 million of inflows expected if the stock gets included. Paytm, now that counter was up around 3% in trade yesterday, and because of that, the chances of Paytm getting included in the MSCI index is now very high, and if that happens, then the inflow could be closer to $290 million. For Siemens Energy and Uno Minda, again both these counters have a high probability of getting included, and if they get included, then the inflows could be anywhere between $180 to $210 million in the both counter. Now, when it comes to exclusion side, Container Corp, based on the current market price, has a high probability of getting out of the MSCI index, and if that happens, then the outflow could be around $112 million. While Tata Elxsi and Astral, both these counters are sitting on borderlines. If there is a further fall in the share prices on both the counter, then there's a high probability that both these stocks could move out of the MSCI index, and if that happens, then outflows could be anywhere between $115 to $125 million.
Wow. Okay. Sumit, thanks for bringing us those updates as well. You know, it's a really interesting time to be watching the markets, considering we're the cusp of the earnings season. Q1 updates have come in. There is, of course, this whole trade conversation going on. How does Abhay Agarwal, Managing Director of Piper Serica Advisors, get about his investing decisions in a scenario like this? Let's get him on the show to talk about that. Abhay, great having you. Thanks so much for taking the time out and being with us. Just off the bat, Abhay, before we talk about the specifics, are you completely deployed in terms of capital because of the number of emerging opportunities both in private and public markets, or are you conservative and sitting on a bit of cash because there are some uncertainties out there in terms of interest rate trajectories, trade tensions, and more?
Yes, good morning, Neeraj. Always a pleasure to be on the show with you. So we are largely deployed. I think we see enough opportunities in the market, though because of the valuations being where they are, even good opportunities are at times overpriced. So one needs to look harder, look longer. But I think opportunities are there. That's what we believe. So we are largely deployed. I think there is room in our model portfolio for some churn that we will do post the earnings season. But other than that, we are not sitting on any cash expecting a market correction or trying to time the market right now.
Okay. Abhay, if the earnings season lives up to the expectations or maybe beats it marginally, and I think banks will have to do the heavy lifting here in all probability, does that give the market the much needed ammo for maintaining the levels or maybe staging a rally?
I think, Neeraj, the problem with the market has been the constant selling by FPIs. So I think the pressure on the market has largely been technical in nature over the last quarter. I think fundamentals have been improving. There has been a lot of support from the government and government agencies to get consumption going, get production going. There have been interest rate cuts. There have been GST cuts. There have been other ways of making it easy for people to do business. So I think there is that positive support. Companies that we engage with are optimistic. The festive season is better than expected. Largely, banks' collection ratios that we are seeing are improving. So I think a lot of things have fallen into place fundamentally. the technical pressure of when do FPIs start believing that India is a market they want to come back to or deploy again, I think that rests largely on this tariff issue, because I think that worries the foreign investors more than the local investors. So more than the results, I would say, Neeraj, that any resolution or even a quasi-resolution to the constant threat of incremental tariffs is what will bring the foreign investors back, and I think that will set us up for new highs.
Abhay, hi, morning, Tamanna here, and always great to speak with you. Now, clearly FPIs are on their own journey. Domestic investors are doing their own thing. The big trigger for us right now is what's going to happen in the second quarter. Business updates already coming in. Our financials front and center, yes, that's the data we have, so we're starting with that conversation. But a bit of a mixed view when you look at what analysts are saying on how this quarter is going to pan out for financials. How are you seeing it?
Good morning, Tamanna. We are very optimistic and almost bullish on the banking and financial services space. I think over the last 4 quarters, or probably 6 quarters, 4 to 6 quarters, we saw a cyclical downturn which happened because of overlending, lack of credit offtake, low collection ratios, RBI tougher mandates to do provisioning, which had impact again on the balance sheets. But what we are seeing now, Tamanna, is that there is a lot of positive support from the RBI. Even if you look at the recent credit committee meeting announcements, it's not limited just to rate cuts. I think more importantly, RBI is using other tools to get credit offtake going, to get make it easier for banks and NBFCs to lend, especially to the lower strata that depends on credit for their livelihood. So as per the recent MFIN data, there are 6 crore potential borrowers bottom of the pyramid who are not getting loans since last 1 year, when banks stopped lending to NBFCs and NBFCs stopped lending to microfinance institutions. So I'm very positive that all of this will come together, play out positively over the next 3 months. In terms of the results per se, I think we will see largely inline results, but I expect the commentary to be more positive. And I think that's what the investors are going to focus on. But looking at the data that we are seeing, I think a cyclical bottom for the entire banking and financial services industry has been formed. And as consumption picks up, I think this is a sector that will gain a lot from the uptick.
No, so within this space and within this one bucket, Abhay, are you looking at that positive commentary incrementally coming in from your top private banks, or do you think that that alpha will be from your NBFCs or your MFIs, which were which were seeing a lot of heat last quarter, and that is now dissipating?
Yeah, I think the alpha definitely will be from the smaller banks. Especially some SFBs like Ujjivan, Jana, that are expecting a universal banking license soon. Purely for the fact that their valuations haven't recovered, even as the earnings are in sight of being recovery. If you look at the book value multiples, they are about 1 to 1.5 times. So as the earnings improve, I think that there will be both a multiple pickup driven by higher earnings and higher valuation multiple. So that is why I think the smaller banks and some NBFCs, especially the MFIs, which are trading at anywhere from 0.6 to 1 time book value, will also re-rate as their collection efficiency improves. And we are seeing that in the data. So, but at the same time, when things haven't gone well for last 4 quarters, it is difficult for investors to start looking for a turnaround. But whatever we are seeing, I think clearly the alpha will be with the smaller banks and NBFCs, especially those who have still unsecured lending portfolio.
Got it. Abhay, yeah, so you clearly bending towards the ones which were out of favor for the last 4 or 5 quarters to play a catch-up trade. Would that be the best way to put your current thesis on financials?
Yes, that would be a good summary. And catch up, I would just say catch up not to the multiples of the large private vector banks because they have large or higher multiples for the right reasons, but catch up to the mean valuations that these banks and NBFC used to trade at earlier. So that's the catch up we are looking at. So I think that itself is like a one-time recovery in price and then further on the basis of earnings growth.
Now, Abhay, the second question that I have is now, if we move our financials, a lot of the new age sectors are available in the private markets in a big way. Yeah. Where is it that in the public markets do you find opportunities for the themes of the future available at reasonable valuations? Does such a combination exist?
I think it exists, Neeraj, but it's getting harder because the valuations are not stopping at high. Now they are, especially in the consumer internet space, we are seeing the valuations at a level where it could just happen that these stocks go sideways because they are already borrowing returns from the future. And we have seen that happen in multiple sectors. They overheat and then they go sideways. So I think these are great companies that we are talking about in the consumer internet space. They are market leaders. They have gone through the valley of death, survived, thrived. So they will grow. But are they trading at a valuation that investors can say that they will definitely make money? Probably not. Though there are some opportunities that exist. I think more than consumer internet, if we say that where is growth going to come from, our bet has been in our model portfolio on the entire EMS space that Neeraj, you and I have talked about earlier also. So I think the electronic manufacturing, outsourced manufacturing plus ODM, I think these are the companies that still have very high growth left in front of them. And some of them are still available at a reasonable valuation when you build in the growth in there. So by themselves, they may not look attractive. But if you start building in the growth, I think these are the companies that are still available at a price that investors can look at multi-bagger returns.
What about on the retail side, Abhay? I mean, Trent getting punished for business updates that were below par or at least below expectations of the street. Their peers who also reported business updates at the same time, received much better. What would you do with that space, and where do you see that consumption boom going forward now that the first burst of lower GST rates, etc., is behind us?
No, I think the brick and mortar retailers, the large ones, classic example of some of them getting the market fancy and trading at levels where the valuations were just unsustainable for brick and mortar retailers. I think India is a market where we have the highest multiple, highest valuation for brick and mortar retailers. So not surprised at all that these companies are going through a bit of cyclical or business driven degrowth. The smaller ones that are more nimble and focus more on the tier 2, tier 3, and some even starting to look at below that. I think they will continue to see faster growth because of the format. But the larger ones, like the one you mentioned and which I can see on the screen, these are the ones I think will struggle for growth because they also are in metros. They are competing head on with quick commerce, e-commerce players. So I will not be surprised to see them go sideways or go through this correction phase for a bit longer.
What would be the alternative then to brick and mortar play if you still wanted to write that consumption story?
So I think some of the smaller players which are not metro focused but looking at beyond metros, I think their commentary is better. And they are still seeing growth. So I think the story then moves to tier 2, tier 3 cities, names like Vishal, Megamart, and others which will still see growth. But I think more importantly, it is the whole pattern is changing towards digital consumption. You have very strong players led by large industrial groups that have built very strong e-commerce presence. And I think most of the consumption is higher there. The growth is higher than the brick and mortar. So I think that's the way it has played out around the world. And I think India is not going to be an exception to that.
India is not going to be exception to that. It's the Bharat story when it comes to retail. I think that's very interesting. Thank you so much, Abhay Agarwal, for speaking with us. Always a pleasure to have you on the channel and on India Market Open. Well, that's pretty much all the time we have, but we're wrapping up on a really good note. Market's doing well. Even if gold has not hit 4,000, the Goldman Sachs target is 4,900, by the way, for gold. So I don't know where that's going.
Yeah.
So it's truly glittering today.
It's truly glittering. Gold, silver, crypto, and Indian equity markets. With that, it's a wrap on this leg of India Market Open from Tamanna and me and the team that put this show together. Thank you so much for watching.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The market's most influential voices. The visionaries who decode the future of wealth. Unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October.
चाहिए ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The market's most influential voices. The visionaries who decode the future of wealth. Unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी, सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vachurjani, and we'll take you through the next 1 hour of trade. This show is geared towards getting you answers to all of your stock-related questions, and to that end, there are two ways in which you can get in touch with us, among others, but the two that we're most focused on. The number on the top of the screen is where you can message us, I think. Yes, that's right. And the number on the bottom of the screen is where you can call us, and we'd love to hear from you. Get your phones ready and get your numbers punched in, and you can call us immediately. While you're doing that, let me take you through what's happening with the markets right now. And you have gains of about 0.5%, 0.4%, holding on at that level of 25,180 plus or thereabouts. And it's a good sign as things stand right now. And take a look at the broader markets as well. They underperformed in trade yesterday, and the market breadth was actually not very favorable. But you have gains for the broader markets as well, 0.3% for both the mid cap as well as the small cap index. And just to round things off, I was just going to ask for that, so fantastic. The advanced decline ratio is currently just about swinging in favor of the advances. I wonder if that gap narrows through the rest of the session, because you've had gains on 3 days on the trot, and you have over 500 points or close to 500 points gained for the Nifty 50. If you add today more than 500 points over the course of 3.5 sessions, which is quite the move for the benchmark. Let's talk about sectors very quickly, and a few sectors stand out. You have the Nifty IT index, which is down about 0.2%. A little bit of profit taking perhaps after the kind of move that it saw yesterday, and no big moves. While you're seeing a lot of green on the screen, it's not really very substantial moves higher. Metal index is once again buzzing in trade, but its gains of only about 0.6% or 0.5%. The Nifty Bank is somewhere around 0.4% higher. You have the Realty Index, which is only about 0.1%, and the FMCG Index, which is about 0.1%. Newsmakers are there, and I'm pretty sure that you've got a few on your list, Mahima.
Yeah. So counters like Ramke Infra, some counters that are really doing well. You know, it's up 12% as we speak, and one of the stocks that's leading the chart in the total market segment. There's DOM Industries that's doing pretty well, up 6%. RHI Magnesia, GM Pfaudler. There's also Sign DLM. In fact, we also have a query on Sign DLM, is up 5% as we speak. HLE Glasscoat, Infibeam Avenue, some counters that are stealing the show today, but some counters that are seeing pressure includes your Tata Investment, now seeing profit booking. We saw the kind of rally it had because of Tata Capital IPO. There's Moil, which is seeing profit booking today. Banco Products, Sandur Manganese, and Confidence Petrochem and Blue Jet Health, some counters in the red, is what we are seeing in the broader end of spectrum. But with that, let's also welcome in our guest for the day, Asa Jain, Senior Research Analyst at Hem Securities, and Swati Kotkar, AVP Technical Research at Nirmal Bang, joining us now. Welcome to both of you, ladies, and a very good morning to the both of you. We've got first caller for the day, in fact. Shahan is calling us from Kolkata. Shahan, hi, a very good morning to you. How can we help you today? Okay, I think we seem to have lost his call, but we do have his query. So his query is on NetWeb Tech. He's got 40 odd shares at the levels of 729. So he's sitting on profits of around almost 1729. Okay, that's the price at which he's bought. So sitting on profits of almost a lakh rupees now. Asta, I think I'll take this up with you. Your view with regards to where NetWebTech stands. In the recent past, we've seen a good rally in this counter.
Hi, good morning to all of you. Yes, it has seen a good rally, and here the investor is earning handsome profits also. So now talking about the business model of this company, now they are vertically integrated OEM, and they are delivering basically, built-in high performance computing. So they have an edge over their over their peers. And if I talk about their valuations also, I find the valuation seems to be decent when they for the IPO, not right now. So in fact, when this IPO came, we have recommended subscribe, but from there we have seen a sharp rise. Idea here is their business model is quite attractive, but we really need to see how their financial performance is going to be in the coming time. So my idea here is to book some profits, maybe 25% of the quantity, and remain invested in the 75% of quantity and wait for the results to come in.
Okay. All right, so that's a view on NetWeb Technologies. What a move up. It just goes to show, even in a sideways consolidating market, you have a few stocks which just break all its shackles and move up quite substantially, more than a doubler in the last 3 months. All right, let's talk about Anant Raj next. And we've got Shashi, who's writing in from Malaysia, who's bought at levels of 620. That's the average price, 800 quantity, so considerable quantity. And in the green by quite a bit, actually, 70,000 rupees or thereabouts. Wondering for a 3-month time frame what the strategy should be. So Swati, on the charts, what's the view?
Good morning, all of you. Definitely my view is positive because from the month of the September, we have seen a very strong rally from almost 550 to 730 levels. Now on the daily chart, the stock is on the verge of forming the flag pattern. It is under the consolidation phase, forming the pattern of the flag. And I believe that very soon we are likely to see the breakout, which will come nearby 750, 720 are the breakout levels for this particular stock. Any momentum above that level will see the extension of this positive move towards to 800 levels. So I will suggest to hold on your long positions at the CMP. Try to keep the profit stop loss for 680 rupees on a downside and hold your long positions for a target of 750 to 800 levels on the high side.
Got it. All right, so hold on is a view, and you've made substantial gains as well. So congratulations on the acquisition price. Anchal is calling us from Bengaluru. Anchal, thanks so much for being our first caller today. Good morning to you. How can we help you?
Hello, good morning, everyone. Yeah, so I have a question for Team Science and Technology.
Okay.
I hold about 30 shares at an average of 1431, and I'm incurring a loss right now. So I want to understand whether I should hold this or invest more into this, and I'm looking at a long term of around 2 years or so.
Got it. Can you help me with the idea that you had when you bought it, Clean Science Technology?
Yeah, when I bought it that time and when I explored it was into chemicals, so I thought, okay, let's diversify my portfolio, and that's what my thought process was.
Okay, and do you own any other chemical counters?
No, not as of now.
Sure.
So I switched into other areas, which is renewable energy and into renewable energy.
Fantastic. Okay, so I've gotten some perspective, and you intend to hold for the long term. And unfortunate that you've witnessed a bit of a slide. Asta, on the fundamentals, bought at levels of 1400 plus. The stock is currently trading at just above 1050, around 1070. What should the strategy be?
The strategy be to hold the counter. Why? Because yes, the stock has not shown any sort of rise. There are reasons behind it. First of all, their revenue sales, the revenue have got impacted, and that was due to the lower sales of their new product. So that has impacted their revenue, and what we have seen that they were not able to ramp up their sales growth. But now going ahead, what we believe with the launch of the new products, because they have certain new products which they are planning to launch, and those products will definitely increase increase their sales, and I believe that it will going to happen within the time frame of 3 to 6 months. So here the time horizon should be more than 6 months, and one should remain invested in this counter because we believe definitely this counter will again come to 1300 to 1400 levels in the time frame of 3 to 6 months. So hold this counter. Maybe it will take 3 to 6 months to get those levels, but I think there is no logic behind, booking the losses at this point of a time. Regarding accumulation, just see the results and then start accumulating the counter because we are approaching near the result seasons now.
Okay, all right. We've got our next question, and this is on Scient DLM. Do we have the name of this person? Chandrasekhar. Okay, Chandrasekhar is asking this question and asking about Scient DLM. He's bought at the levels of 538 and 35 shares is what he has in his portfolio. From a longer term perspective, wants to know if he can continue to hold because it's kept on falling in the past few months. Astha, your view with regards to Scient DLM?
Scient DLM, the idea here is to stay invested in this counter with a price target of more than 500. 520 to 530 to be very precise. Now, if I talk about their performance of the Q1 of FY26, we all know that the performance was a miss, and that is why the stock has fallen a lot. But if I talk about their near-term business outlook, I find it that yes, the near-term outlook is looking to be very strong because they have got a very strong execution capabilities in the aerospace, industrial space verticals. So I think that capabilities will really help the company in posting good side of numbers going ahead. And also there are some, structural improvement in the profitability can also be expected because some of their business they are now shifting towards the high margin orders. So I think both these points will definitely contribute towards the more upside for the stock prices from here now. Stay invested in this counter, the price target of 520 to 530.
Okay, all right. We've got our next caller. Govind is calling us from Hyderabad. Govind, hi. A very good morning to you. How can we help you today?
Hi, ma'am. Good morning, ma'am. Good morning, Alex sir, and all of the team, ma'am.
Good morning, Govind.
Ma'am, actually, I have purchased Chambal fertilizers 570 rupees at the rate of 500 numbers. The monsoon is good actually, and fundamentally also sound company like how many analysts have told, ma'am. Is it right time to accumulate another 500 numbers, ma'am?
Okay, all right. Govind, I got your question and I'll take this up with Astha. Astha, his rationale is correct. Monsoons have been good and that's a good indicator for the entire fertilizer space, and Chambal fertilizer is what he's chosen. He's already holding 500 shares. Do you think he should add another 500 or maybe some other player in the space?
So Chambal Fertilizers is also looking a good counter in the fertilizer space. And yes, what we are seeing that monsoons are really good, and that is always, helpful to the fertilizer stock. But my idea here is rather than accumulating at this point of a time, just wait for a few more days. Because as I've already said earlier also, result season is already near up by. So definitely after seeing the results, it's a better strategy to accumulate this counter rather than at this point of a time.
All right, so that's the view on Chambal Fertilizers. Hopefully that answers your question, Govind. We've got a question from Shiva, who's writing in from Amravati, and he's got shares of Power Mech, which he's bought at a price of 3,100 rupees. He plans to hold for the next 6 months, and he's incurring a substantial loss. What's the view, Swati, on the charts, and what strategy should he keep, and specifically, where should he put his stop loss?
Yeah, as of now, the view is little bit cautious because already we are witnessing a selling pressure and the stock is sitting in the formations of the low top, slow bottom. I believe that at 2,600 is the immediate support levels. If it manages to maintain those support level, then we are likely to witness some sort of a bounce back rally, which will take a stock towards to 3,000 will be the initial targets, and beyond that level, 3,200 levels can be seen. So you can hold on this particular counter because it's already entered into the oversold zone. So slowly and steadily, we might witness some sort of a reversals from the lower levels. So you may hold the long position. Stop loss can be kept at 2,600 levels. Immediate target will be at 3,000 to 3,200 levels.
Got it. Okay, so that's a view on Power Mech. Hold is a view. Narendra is calling us from Hyderabad now. Narendra, morning. How can we help you?
Good morning, everyone. Good morning, panel.
Good morning.
So currently, Karnataka Bank shares around 300 quantity at the price of 245 rupees. Currently, I'm in 20,000 is lost. Can I hold or can I exit? Can you please tell me the suggestion?
Okay, what is the time frame that you have in mind for Karnataka Bank?
I holding since last 1 year.
Okay.
If you liquid, I will plan to 1 year, I will hold it.
Okay, okay. So, Swati, then on the charts, let me go across to you. 245 is the buy price, and unfortunately, he's lost value, if I'm not mistaken. Let's pull up the chart and see where it's loss of 21,000 or thereabouts. Yeah. So, what's the view on the charts?
See, as of now, we are witnessing a reversals from the lower level. The counter has made multiple, or say the cluster supports nearby 160 levels. In the whole 2025, we have seen that the stock has managed to take a support of a 160. And again, we witnessed some bounce back rally towards 200 to 210 levels. Now, in the last 2 months, the same pattern has been repeated. So I believe that we are likely to witness the bounce back rally. Initial targets will be a 190, beyond that 210 levels can be seen. So at the current level, no need to book the losses. Definitely over a period of time, we will see some sort of a positive momentum. So you can hold on the long positions. Targets will be 190 to 210 levels.
Okay, all right. So that's with regards to where Karnataka Bank is concerned. The next question is an interesting one. Balraj Singh from Amritsar is writing in and asking that he has 10 lakhs available right now for investments, wants to know if he can allocate it to equity or gold or silver ETFs. Asa, not sure if you have a view on this one. Do you think from a 1 to 2 year perspective, if he has 10 lakhs, he should completely invest that in equities, or if you have a view, any kind of bifurcation that he can make in terms of gold and silver as well?
So I think gold is in a real move right now, and it can move further upside from here. But now the upside is limited. This is what I believe. So idea here is to invest in the equities, like around 70% of the allocation can be done in the equity, 70, and remaining 30% can be allocated to gold, but not at the current level. Maybe on the dips, gold is a good choice to go for. So right now, yes, and in fact for equities also, I would suggest that as the result season is now, it will be starting now, I suppose, with the TCS numbers. So let's wait for the result season and then start buying the equities also. So, but the whole idea is 70 to 80% equity and 20 to 30% gold is what I believe one can allocate at this point of time.
But as the irrespective of earnings, if he wants to invest some money in the equities, what would your top picks be?
Right. So I think banking is looking very, very strong to us. In public sector bank, SBI is our preferred choice. In fact, L&T is also looking good to us. They have got strong orders, and we believe on the basis of those orders, their quarterly performance should be really good. So L&T is looking good to us in that space. If I talk about power space also, I think power stocks are really buzzing right now. In that, power grid is also looking good to us. But I believe that it's better to wait for the numbers and then make any sort of decision. That will always be a risk-free decision, I suppose.
Okay, that makes sense. In fact, Balraj also talked about silver, and the interesting part is that in past so many years, this is the third time that silver has hit the $50 mark. Last 2 times when it had hit the $50 mark, it had come back to the teens levels. But this time, what analysts are suggesting is that the fundamentals are looking strong. The demand for silver is very high versus that of supply, and there could be a possibility of correction, but not to the levels of, coming back to the teens mark is something that I read recently.
Because, and it's a very important point, because a lot of the utilization of silver, and by the way, we've said this in the past, but it bears repeating, 60% of the demand for silver is not for its precious metal status. It is because of its industrial usage, and it's used in renewable energy, it is used in chipsets, it's used in various other technology. So therefore, from that perspective, the expectation is that because of the way that we're going on renewable and various other technology, the demand for silver is not going anywhere. And by the way, you can extend that to copper as well, to say that copper is absolutely critical for so many technology pieces that we use in our daily lives.
Right, absolutely. And copper also has seen a significant rally, right? 20% year to date is what we've seen on copper as well. But moving on, we've got our next caller. Venkat is calling us from Bengaluru. Venkat, hi, a very good morning to you. How can we help you today?
Dr. Manna, very good morning to you, and Alex also. Great talking to you.
Venkat, this is...
I'm holding about
Venkat, sorry.
200 shares of GAIL.
Venkat, sorry, you got the name wrong. This is Mahima.
Mahima.
The earlier show has Tamanna.
Oh, I'm sorry, Mahima. Good morning.
No worries.
I'm sorry, I apologize for that.
No worries, no
See,
worries.
anyway, my query is regarding GAIL. No, I'm holding 200 shares of that.
Okay.
And at the rate of 187. I've been holding the stock for about 1 year now, but I've been dealing with this stock for another about maybe 2-3 years. I've been making some profit and everything. And for about 1 year, there's been not much of a movement in the stock. I would like to know what exactly is the outlook of this particular stock and how long you think I'll have to wait for getting some good profit on this. And will it move upwards? I would like to know.
Okay. And Venkat, I believe you want a fundamental view on this one.
Absolutely.
Okay, all right. Okay, got your question. I'll take this up with Asta. Then Asta, what he's saying is correct. The charts have not moved much for GAIL. I mean, it's not given much of a return to its investors, and wants to know as to when this can be profitable for him. Your view?
Yes, because I think there is a reason behind it, although I'm justifying the chart performance on the basis of fundamental, and fundamental says that when results are not good, because what we have seen, their revenues were moderate, especially we have seen the weaker numbers on their gas trading and petchem segments. So I think those were the main segments where we have seen some muted sort of performance. But going ahead, I believe that they have got a very strong liquefaction capacity first of all, and then domestic, if I talk about the domestic gas supplies also, it has been increasing a lot. So on the basis of these factors, we believe that definitely GAIL will show a strong up move going from here. Maybe it will take some times, but I think level above 200, especially if I talk about 200 to 220 are the targets which we would like to set for this counter in the coming months. So idea here is to stay invested in this counter for the price target of 200 to 220.
So that's the view on GAIL. And Venkat, it's so nice that you've evidently been tuned in to NDTV Profit from morning, and I will tell Tamanna that you said hi. Arun is calling us from Bengaluru. Arun, hi. Thanks so much for calling us. How can we help you today?
Hi Alex, hi Mahima. Good morning.
Good morning.
Hi Arun, good morning.
Yeah, I have a query on the CDSL. So I'm holding 114 quantity with an average price of 293. So my question was on the whether I had to hold it or book the partial profit. I have to book the profit and rotate that amount into BSE because BSE is down now.
Yeah.
So I am okay to hold for 4 to 5 years.
4 to 5 years. Okay. But is that on CDSL or is it on BSE?
Yeah. Anything is fine.
Okay, so then from that perspective, let me get you a fundamental view. Asta, the reason why BSE has been chop and churn recently is fairly well known. There are potentially regulatory changes that could affect their business, and there are estimates out if it does come to pass on the derivative side, what the implications for the EPS will be. But specifically on CDSL, look at the buy price, 293, and the kind of gains that Arun has made, it's absolutely stellar. If he has a time frame of 5 years, should he bother at all about the notional gains, or should he simply look far out into the horizon?
So I believe that definitely he should continue to go with the CDSL, and there are various reasons behind it. As you have already told about BSE, the negative point, so I am now focusing more on CDSL. See, first of all, their performance really depend on the number of IPO listings. And what we have seen that this quarter, the IPO listings were really, on a high number. So definitely that will help their revenue. In fact, their continued investment in the human resources, in the technology will definitely help them going ahead. So my idea here is to go with the CDSL, and I think CDSL is a stock which can really give good sort of returns in the coming years. So out of these two, CDSL is my choice, and I would like to recommend a hold on this counter to him.
What is the view on CDSL? It is now time, ladies, for the rapid fire round, and this is where we throw as many questions at you over the course of 2 minutes. The first one's coming all the way from Moscow, and Karthik is writing in asking about CG Power, whether it should be bought at this price or not for a period of 5 years. Asta, what's the view?
CG Power is looking good to us, and definitely he can buy this counter for the perspective of 5 years, because we've seen good revenue as well as bottom line growth of 15% in the quarter gone by.
Okay, KV Rao is asking the next one about Hindustan Copper, holding 150 shares, bought at the levels of 322 on the chart. Swati, your view?
Definitely, you can hold on the long position. Upside 360 levels can be seen. Downside, you can keep a stop loss of 335 and hold the long position.
Okay, short answers, please. Suzlo and Energy is the name of the counter. Mohammed wants to know what levels of 61 or thereabouts should he hold, and what are the short-term targets? Swati?
Short-term target will be at around 58. You can hold the long positions by keeping a stop loss of 52.
Okay, Siva is asking the next one. Fresh entry for Polycab. Is that recommended? Swati, your view?
At the current levels, I will not suggest to take a fresh long position. Any dips towards to 7300, one can take an opportunity.
MGL, Mahanagar Gas. David from Bombay is asking about, Mumbai is asking about this 3 to 5 years is a holding period. Astha, what's the view?
Yes, definitely it can be held from this time perspective. However, initial price target can be set at 1350 to 1370 odd levels.
Okay, Tata Motors is the next one. Reshma Bhatia from Pune wants to know if she can continue to hold the counter. She's holding 500 shares at the levels of 592. Astha, your view?
Yes, she can hold this counter for the price target of 750.
Okay, Sridhar from Karimnagar wants to know about whether or not you can play the copper story through a stock. What's the view, Astha?
I think Hindustan Copper is one of the stock which can be already, have shown certain sort of momentum. So right now, just wait for some price fall and then make entry into this count.
Okay, Samman Capital is the next one. Sunny wants to know if he can continue to hold for the next 2 to 3 odd years. Astha, your view?
Yes, Samman Capital can be a hold for the next 2 to 3 years perspective.
Okay, all right. Sunny says that I've been misreading his messages, so luckily the question was taken by you on Samman Capital. Hope that is good. But Astha, Swati will be back after this very quick break to ask you more questions. Viewers, do stay tuned and keep your questions ready. We'll be back after a quick break.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The market's most influential voices. The visionaries who decode the future of wealth. Unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
Welcome back. You're watching Ask Profit, and this is a show that gets you answers to all of your stock-related questions. The standard ways to get in touch with us. One is WhatsApp number on the top of the screen, or you can call us on the number at the bottom of the screen. I must clarify that we've misread Sunny's question for a second time in a row, but let me amend that. Let me clarify. Samman Capital is what we asked about, and he's already holding at levels of 137. He's wondering whether to buy more at the current level, to add more at the current level, and what the best price is to add for a period of 2 to 3 years. So Swati, let me come to you on this one. On the charts, what's the best level to accumulate?
If you looking for a longer term horizon, I will suggest to the best price at around 140 to 130 level. Those are the attractive levels to take a fresh long positions. So wait for some more correction or any dips towards to 140. You can definitely take a long position.
Okay, we've got our next call. I mean, I hope we've now taken the right query.
Pretty sure we have.
All right, we've got our next caller. Sanjay is calling us from New Delhi. Sanjay, hi, a very good morning to you. How can we help you today?
Yeah, madam, very good morning and thanks for picking up my call.
Our pleasure.
My
Sanjay.
question is, I have some funds somewhere around 1,50,000 and I wanted to, looking for an auto sector, and I've shortlisted this Uno Minda.
Okay.
What would be the right level to put these funds over there? Current market price, or shall I wait? Or what would be the right entry price in this Uno Minda script? Can you help us out?
Sure, Sanjay. I'll definitely ask this to Swati. And Swati, do you think this is the right time to make an entry into Uno Minda, or maybe wait for some time? And what levels would be the right levels to make an entry?
I think that the trend of this particular stock, Uno Minda, is really positive, and today we have seen a very strong breakouts of a flat pattern on the daily charts. If you don't want to miss out the rally, then I will suggest to try to buy at least 20 to 30% at the current market price, because I believe this rally is likely to be extended towards to 1450 to 1500 levels. And another buying positions can be accumulated within the range of 1250 to 1150. Those levels are the really good range to take a long positions or a fresh long position. So you can add 20-30% at the CMP. Another parts you can add on any dips towards 1150 to 1150 to 1200 levels.
Got it. All right. We've got a next question on Adani Green, and I asked a follow-up question because the numbers look very large here. Let's pull up first of all what the question is. Anurag has got this question. He's bought at levels of 1160. The current price is lower than that, of course, 1068 or thereabouts. But his losses are quite considerable because he's got 9,000 shares. So he's bought a very significant quantity and he's wondering what the long-term outlook on the stock is. I asked him how much of his portfolio is on this one stock and he said about 50%. Asta, so therefore he's taken a concentrated bet on, but he's taking a concentrated position in Adani Green. What should he do? There's a lot that is in the works for this company. You're talking about wind energy addition, you're talking about Khavda, where you're talking about solar power. They've just commissioned more in the way of capacity, if I remember correctly, 16 gigawatts currently operational in Khavda. So what's the view on Adani Green?
So view is positive. First of all, they have posted a very strong set of numbers. So that is major, positive for the company. Secondly, you have rightly said that they have commissioned 1.6 giga capacity in Q1 FY26. And I think that they have commissioned, and in fact, their commissioning is also started picking up now. So I believe these two factors, along with the robust execution pipeline which this company is having, definitely make it a good investment option for the longer term. So yes, one can have a longer term perspective on this counter here, although the quantity is high, but I think long-term perspective is, if long-term perspective is there, definitely it is a hold from my side.
Okay, all right. Hold on Adani Green is the view that Asta has. Standing disclaimer, Adani Green is also a part of the Adani group of companies and so is NDTV Profit. We've got our next caller. Mallikarjun is calling us from Karnataka. Mallikarjun, hi. A very good morning to you. How can we help you today?
Hi, very good morning. So my question is, I bought NSDL shares at 1,200, only small quantity, 10 shares, but I wanted to invest 1 lakh rupees on NSDL share. So which price is good to buy?
Okay, all right.
That's my question.
Oh, okay, all right. I got your question, Mallikarjun, and I'll take this up with Asta quickly. Asta, your view with regards to where NSDL is concerned, and just to give viewers also a perspective, NSDL versus CDSL has always been a debate. Which one would you pick?
CDSL as of now is a choice of mine. But yes, we should not forget that it is a new IPO. It came in July, July only at a price band of 800, if I remember it correctly, on the higher side. So from there, we have seen a sharp rise, and the main reason behind it, the valuation, because they have bought at a very reasonable valuation. But now what I believe, the company's fundamentals are very, very strong. No issues in that because the number of the active payment account with the NSDL, they have shown a very strong rise of around 13%, if I'm not wrong with my numbers. So they have shown a very strong rise of around 13%. CAGR, I'm talking about the CAGR over last few years. So idea here is to stay invested in this counter, and definitely if he wants to make a fresh entry then definitely lower levels are good for this counter where he can make the fresh entry. So rather than making fresh entry at this point of a time, I would suggest him to make a fresh entry at around 1150 to 1170 zone. So those are the good levels to make a fresh entry also in this counter. Yes, but one can definitely look upon this counter as a fresh entry also.
Okay, usually we intersperse our questions and we take one caller and then one WhatsApp, but I'm going to make an exception because we've got a caller all the way from Tokyo. Nagendra is calling us. Nagendra, thanks so much for making the long distance call. I'll ask you quickly, what's your question?
Hi, thanks for taking my request. A great fan of your show, and thanks a lot for all your efforts. It is really helping us out a lot.
Means a lot to us.
My query is, I have 2 lakhs money with me. I would like to invest either in NTPC Green or BSE. Please suggest me which is the best one to go with at this point of time. Also, if both are not at right level, please suggest me which is the right level to enter.
Okay. All right. And you're looking based on fundamentals, you're looking for the long term. How do you define that long term?
Long term. I would like to invest on behalf of my kids.
Sure. So very long term. Okay. So Asta, on the fundamentals, both of these counters, completely different plays. You've already spoken about BSE. I wonder if you have a counter view for the very long term to say you can buy right now. The question is, do valuations account for the fact that there could be disruptions?
Yes, and along with that, I think the news flow is also not very, very much positive. So on the combination, if I take both these combination, then definitely BSE is not looking attractive at all to make an entry in. Now, if I talk about NTPC Green also, I'm not very much, big optimistic about this counter as well as. So my idea here is rather than choosing these two counters, it's better to go with the banking side because we believe that banks are well placed right now to cater the opportunities present in the sector, and in that ICICI Bank in the public banking, in the private banking space, and SBI, as I've already told you, that in the PSU banking space, these two counters are looking good to us. So rather than going for NTPC Green or BSE, it's better to go with the other sector. And in case if he has to, mandatorily choose between these two, then NTPC Green is looking better option.
Okay. All right, so it's a comprehensive answer and fairly answered as well. Asta doesn't really like these two more than she does ICICI and SBI. Let's talk about the next question. We've got Balasubramanian who's writing in from Bengaluru and asking about IRCTC, which he has gotten in the IPO allotment. 62 rupees is, of course, the acquisition price per share, and he's missed the chance, he says, of booking profits when the shares were sold above or when they went above 1,100 levels. He's wondering whether to book profits now or to hold. What's the view, Swati, on the charts?
My view is positive at the current market price because already in the 2024 we have seen a sharp correction from 1100 to almost 650 levels. Now the slowly and steadily is changing the trend from downwards to the upward. I believe that the counter has shown a very strong formations of a support nearby 650 levels. So I believe that this rally is likely to be extended towards to 820 will be the initial target. Beyond that levels, 950 levels can be seen. So you can definitely hold on the long positions at the current market price.
Okay, all right. We've got our next caller. Nishad is calling us from Mumbai. Nishad, hi, a very good morning to you. How can we help you today?
Yeah, I wanted to know about RateGain Technologies.
Okay.
I'm holding 100 shares at 621. I want a short-term view around 3 to 6 months.
Okay.
What targets can I expect? I wanted to sell off maybe half my quantity.
Okay, all right, Nishad, got your question. Swati, your view with regards to where RateGain is concerned, he is looking to sell half of his quantity in the next 3 to 6 months.
It's positive at the current levels because the stock has given the formations of a rounding bottom patterns, and I believe that it has a strong potential to reach up to 800 levels. At the current market price, you can at least book the partial profits because it is trading nearby the overbought zone. So we might attract some sort of a profit bookings at the higher level. So partial profits can be booked at the CMP. Second partial you can hold on by keeping a tight stop loss of a 650 levels on the downside, and I'm looking for a target of 800 to 840 levels on high side.
Okay, all right. So let's take our next question on ITC hotels, and this is a question from DJ Rao. He's bought at levels of 233 in July of 2025. It has been falling after that, he says, and he's wondering what are the prospects for the next 1 year and where would you place a stop loss? Swati, on the charts, what's the view?
Yeah, as of now, we are witnessing a little bit of a selling pressure in this particular stock, ITC Hotel. I believe that for a short period of time, we might witness more selling pressure, which will drag a counter towards to 200 levels. From there onwards, we will see some sort of a reversal. At the current levels, my view is a little bit cautious, but you can hold on the long position as long as stock maintains the supports of 200 level. A bounce back rally can be seen up to 240 to 260 levels.
All right, so that's the view with regards to where ITC is concerned. The next question is from Akshay, who's writing us from Andhra Pradesh. He says he's a beginner in the stock market and wants to know a suggestion as to what counter can he enter into today with a 5,000 rupees budget. It's a small amount, he knows, but he's starting his investing journey.
And
so everyone starts with, in fact, 5,000 is a big amount. I think I started with $1,000. So that's completely fine, Akshay. Asta, I'll take this up with you. Since he's a beginner, an investor, which stock would you recommend him to continue to hold, and maybe some advice from the expert?
Yes, so I think, yes, he can start investing now. But because he's a beginner, so my idea here is to go with a large cap, stocks rather than mid cap stocks, because what we know that when global markets are not in a good condition, then definitely mid cap stocks, especially when emerging markets are not in a good condition, then mid cap stocks, they really take a beating. So here, start with the large cap stock because these are a good long-term investment. Maybe the returns are not as high as the other counters can give, but here and when the safety is more. So for that reason, I would like to go with L&T, and I would recommend L&T to him at this point of a time, because in fact, I believe that L&T has already seen a strong, momentum towards the downside, but now it has started moving upside on the back of the order inflow which it is getting, and the industry tailwind is also there. So L&T is my stock, which I can recommend it to him at this very point of time, with a price target of around 4,000 at the initial levels. But for the longer term, the targets are really higher.
What is the price of, I'm just looking it up. I think you should be able to buy a couple of others as well that Asta has already recommended. You should probably be able to slip in an ICICI Bank as well. If you start with the Larsen & Toubro, which is about 3,750 and then another 1,400 or thereabouts, just more or less very close to your amount that you've identified. And you can always buy whenever you get the opportunity. Could be next month, could be in a couple of months, just accumulate over a period of time. All right, we've got our next caller. Shankar is calling us from Bengaluru. Shankar, hi, thanks so much for calling. How can we help you today?
Good evening, Alex. I am really appreciate the evening 4 to 4:30 content. Sorry, 4:30, 5 to 5:30 content.
I'm glad to hear.
Everything is superb and good, distinguished guests you are organizing. Thanks, and your questioning is also very good.
Very, very kind of you, sir.
Good knowledge you have.
Thank you,
I learned a lot from you, sir.
Thank you, sir. Now, this show is meant for your questions, so can we'll get to that now.
Yeah.
What's your question, sir?
Sir, I would like to know whether can I invest in Nippon AMC now, because a lot of recommendations are there for asset management company. Is it right? Because PE is very high. Financials are good, but just wanted to get the views of experts.
Okay, and you intend to hold for the long term, right? Okay, I'm assuming that you want to hold for the long term. Asta, on the fundamentals, AMC space, it's absolutely... It's gone ballistic over the course of the last 5 years. I was looking at some of the numbers. Assets under management for the industry are over 75 lakh crore. And just about 5 years back, it was at, what, about 10 lakh crore or thereabouts? And for example, just to put some numbers out there, right? Equity AUM 5 years back in March of 2020 was at about 5 lakh crore. Right now, you have the largest category, which is the sectoral and thematic actively managed category, that has about 5 lakh crore. Just puts things in perspective. There are over 30 lakh crore rupees of assets under management in just actively managed equity schemes. So the question to you, in the AMC space, which is rising from strength to strength, what would be the top pick? Would it be Nippon?
Would like to go with HDFC AMC as, I think that is a very, very strong counter. Although if I talk about the Nippon also, they have got a very strong, products. In fact, their product suite is diversified, first of all, and they have got a very strong market share. In fact, they are, if you read their, con calls also, so management is really positive about launching new products. And in this kind of an environment, I believe even Nippon is also a very, very good counter. But if I have to go with any one counter in the whole sector, then HDFC AMC is my preferred choice.
Okay, all right. So that's with regards to where, these broking houses are concerned. We've got our next question. This is on CAMS. And from a longer term perspective, Arjun from Bengaluru is asking this question. Wants to know if we can continue to hold for the next 5 years. We've got a lot of long-term queries today. Asa, again to you, CAMS, what's the view like?
Yes, for next 5 years, there's no harm in, staying invested in this counter. So this counter is looking good to us from the next 5-year perspective, and one can definitely have a hold on this counter. Now, if I talk about their fundamentals also, their MF revenue continue to grow. In fact, if I talk about their alternatives also, because they are now solidifying their leadership position and they are having a very strong set of numbers. So I think CAMS is a good choice to stay invested in. And yes, long term, 5 years is definitely a time horizon where one can see a good returns in this counter, because the equity markets will continue to go perform over the period of 5 years, and definitely CAMS will be beneficiary of that.
Got it. Okay, I'm going to try and get a view on this. Sandesh from Bengaluru is asking about Dynacon's Systems, I believe. It's a stock that he bought at levels of 1006. It is currently trading at 991. Swati, do you have a view on this one, and what would it be?
Yeah, as of now, view is definitely positive. Slowly and steadily, the counter is going up. I believe it in a short period of time, 1020 is the facing initial resistance level. Any more about that level, we see the extension of a more rally towards to 1050 to 1070. So you can hold on this particular counter. Downside, it has a very good support at 960. So by keeping that as a stop loss, you can hold on the long position.
Okay, the next one is from Rodney, who's writing us from Pune, holding about 250 odd shares of BSE. Bought at the levels of 2709. So 2709, yes, that's correct. I mean, he wants to know if he can continue to hold or not, and what should he do. Swati, I'll again come to you. Your view with regards to where charts are concerned for BSE.
See, as I told earlier also, BSE already seen a very strong correction in the last 6 months rally. Now we are witnessing some sort of a reversals from the lower level. The counter has very well placed above the oversold zone. So we believe that the 2000 is acting as a very crucial supports level. So as long as it holds that levels, a more rally can be witnessed into this particular stock towards to 2500. So those are the initial targets. Beyond that level, 2800 levels can be seen. So you can definitely hold on the long position.
Okay, all right. So that's with regards to where charts are concerned for BSE. We've got our next caller. Kiran is calling us from Hyderabad. Kiran, hi. A very good morning to you. How can we help you today?
Good morning, ma'am. Thank you for Asta ma'am and Alex sir and Mahima ma'am and everyone else in the panel because NDTV Profit is very, very helpful in India's growth story, like regarding the equity markets, ma'am. Like many investors like us are like being advised and
yeah, Kiran, thank you so much.
Very thankful.
Thank you so much. That means a lot, Kiran. You've certainly made our day.
Yes, ma'am. Ma'am, my query is regarding Gravita India, ma'am. Like I'm holding 90 shares, ma'am.
Okay.
At 1556 rupees, ma'am.
Okay.
So I would like to hold it for the next 3 months, ma'am. Is there a possibility to
see some
to go to
profits?
its not its previous high, at least to levels of 1650, 1700 month in the near term if I hold it for 3 months, or else I would like to know any other counter. If they ask me to quit from this counter, any other suggestion also I would like to know, ma'am.
Fair enough, Kiran. I got your question and I take this up with Swati. Swati, do you think that 1650 and 1700 levels is possible on Gravita for the next 3 months? If not Gravita, any counter that you're looking at right now which is attractive on the charts?
Yes, Gravita 1600 levels can be definitely possible because those are the resistance level provided by the 20 days moving average. So a short-term bounce back rally can be seen, but I will suggest to keep a strict stop loss of a 1520 so that you should not face a major losses in this particular stock. Apart from this stock, I will suggest go for a long positions into the HDFC Bank or the Kotak Bank and the L&T. These three counters are really doing very well. So if you want to switch over to your capital, try to invest into those counters at the current market price as well.
It is now time for the second rapid fire of the show, and I'm going to start with a question from Ramana. She's asking about GMDC, which is bought at levels of 552. She's wondering whether to hold for the long term. Asa, what's the view?
Definitely, our hold is recommended on this counter from the long-term perspective with a price target of 650.
Okay, Shivakumar from Bengaluru is asking this interesting question. He says a lot of listings have taken place this week. Any IPO that you're looking at, Asta?
So I'm positive on LG Electronics IPO where the listing is not going to happen, but it has already opened for subscription. So go with that IPO.
Okay, Polymedicure is the name of the counter. Mangaldas wants to know, he's bought at levels of 2,900. Should he hold on? Swati, what's the view?
Yes, you can hold on this particular counter by keeping a stop loss of 1860 levels. Upside position 1920, 1940 can be seen.
Okay, Dixon Tech is the next one. Wahida from Dubai is asking if she can continue to hold or sell. Bought at the levels of 16,640. Swati, your view?
Definitely, you can hold on the long position by keeping a profit stop loss of 17,000. Upside levels can be seen up to 17,700 to 800 levels.
Okay, Asian Paints holding for a period of 2 years. SD Surabhi wants to know whether to hold on. Asa, what's the view?
Yes, a hold is recommended for this counter. Price target can be 2450 to 2480.
Okay, Indocent is the next one. Maddie is asking this question. Fresh entry at this point, is that recommended? Swati?
Not at the current market price. Wait for some more time. Any correction towards to 730 to 720 levels can be taken as a long positions.
Vikran Engineering is the name of the view of the stock. Biju wants to know whether to hold. Asta, what's the view?
Yes, our hold is recommended for this counter. Price target can be set at around 105 to 110 because it is a recent listing only.
Okay, Sigachi Industries is the next one. Ravi is asking this question. Wants to know if you can continue to hold or average. Swati, your view on the charts?
You can hold on the long position, not to average at the current market price. Positive momentum can be seen towards 245. If you want to average it out, 30 to 34 levels are the attractive levels to take a long position.
Top alcohol pick. Asta, last question. Top alcohol pick. Not
the brand.
Not the brand, the stock.
Yes, because I can only recommend stock only. I'm far away from these things. So United Spirits, yes.
Sorry, I should have clarified. And I completely understand. Asta, thanks so much. Swati as well. Thanks so much for joining us today. Absolute pleasure as always. We've done 40 questions. That's why I slipped in that last one. It's a good round number. Well, that brings us to the end of this edition of Ask Profit from Mahima and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. Up next is Know Your Company, and this is NDTV Profit.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी, सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The market's most influential voices, the visionaries who decode the future of wealth, unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी, सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
जान रहे दिल ये तो जान दी है तू
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold?
%70 returns in 6 months. What should you do with this company? Welcome to KYC. I'm Hiral Dadia, and with me is Varsha Chandani. This company has actually given 900% returns over the last 5 years. Is there more steam left? Yes, we're talking about Sangvi Movers, and that's the company on KYC's radar. Let's quickly understand what this company actually does, and before that, we'll take you through the key questions that we need to ask the management from here on. First up, wind EPC as a business is something which is growing. Now, what is the expected contribution from this business versus the existing crane business? Because wind EPC is absolutely a new entry in Sangvi Movers' business profile. Moving on. On number 2, you're talking about what will the margins look like? Because the moment a company enters into a new business, there is some bit of pressure that does come in. But on a blended basis, what's that trajectory looking like over the next 3 years, Varsha?
Yep. And we would also want to know the order inflows that is expected for the year. We do have the current order book which stands at around 700 odd crores, but we would want to know what is the inflows expected for next few years. Also, company is expanding aggressively when it comes to Saudi Arabia. We would want to know what is the strategy out there, because they want to become a one of the top 5 players in Saudi Arabia by 2030. And we would also want to know the capex plan for Saudi Arabia and for India. So overall, what is the capex plan for the company in Saudi Arabia, considering the aggressively how company is expanding? So these are my key questions that I would want to know.
So lots to know from the company who's already given returns of nearly over 70% in the last 6 months. Is there more steam left or not? But first up, about the company, clearly, as we mentioned, it's a company which rents cranes, heavy lift services across industries. Now, the question over here, and the reason why we're speaking to them, is because they've expanded into wind energy EPC business via turnkey solutions, and they're offering projects for heavy lifts and infrastructure projects. Now, when you talk about wind EPC expansion, that is the critical part, because the subsidiary also secured a little over 400 crores of wind order from IPPs, and they're also venturing, as Varsha mentioned, into the Middle East market for the wind business. Now, this contributes nearly 34% of the revenues, and this has just jumped in a year and a half. Initially, when they started off, it was nearly 4%. So is there further steam where probably it could become 50-50 between wind and the crane businesses as well?
You know, continuing with the segment mix, if I were to talk about the crane business, contributes almost 63%. Well, you know, a year and a half before, the company was wholly a crane business, but now, as Hiral mentioned, that they are venturing into EPC, wind EPC, or they have already ventured. So 34% of business comes from wind EPC and, you know, 2.4% from project EPC. I would also want to highlight how their order book is, you know, looking like. So total order book as of June 2025 stand at around 767 crore, out of which they've already done revenue or already booked revenue for rupees 273 crores. So the unexecuted order book stands at around 494 crore. We would want to know, out of this 494 crore, how much is that EPC segment order book that the company has? And, you know, overall, if you see, so a good order book at, you know, 797 crore.
Yeah, and I think we were just discussing before the show that 1,000 crores is what they are aiming for now. How true that number is going to be or not, because it was one of the con calls where this number was discussed as well. But moving on, if you talk about their capex plans, 321 crores is what they've planned, and 114 odd crores is what they've incurred in the first quarter of FY26, as you can see on your screens. They've said the capex will be funded through a combination of internal accruals as well as a long-term debt. And why the debt portion is important is because their debt to equity ratio is also pretty favorable. So that is one of the positives that we will be talking about from here on.
Also, you know, I want to highlight that moving on, when we'll be speaking about, you know, income statement or financials, this is the key question that we need to answer for, because if you see the EBITDA margin, there have been pressure in EBITDA margin when it comes to FY25 and Q1 FY26. Why? Because of companies venture into wind EPC, which is a lower margin business but high volume business. So if you see the crane business, the margin is almost 56%, but for the wind EPC and project EPC, the margins are lower at, you know, 11 to 13%. So one of the reasons why Sangvi movers have seen that pressure in margin, because of the, you know, increase, or rather because of venturing into EPC, wind EPC.
Okay, so those are the key factors with regards to where about the company goes. But let me quickly take you through the rating parameters from here on. We're talking about the income statement, balance sheet, cash flow, return ratios as always, shareholding, street credentials, the valuation picture and outlook. These are a few of the things that we will consider. But Varsha, you're pointing out something when it comes to the income statement as well, specifically with regards to margins. What is it indicating so far?
Yeah, so, you know, as you see, the income statement for this company, it is good. I mean, if you see the last 3 years, CAGR revenue has been 30%, 3-year EBITDA has been 28%, net profit has been 76%. This would have been more if company wouldn't have ventured into EPC. But because of the entrance into wind EPC has a lower margin, like 11 to 13%, while their crane business has a higher margin. So that's one of the reasons. If you see prior, you know, 2023, from 2023, the EBITDA margins were higher. See, in FY24, the margins were at 63%. Why? Because company was into crane business. But fast forward, if you see FY24 and FY25, the margins were lower because of the entrance into wind EPC, which is a lower margin business. Even in Q1 FY26 also, if you see, the margins are lower. Over the margin trajectory, if I were to talk about, in FY22, company had 47% of margin. Fast forward to FY24 at 63% because of that crane business. But if you see in Q1 FY26, the margins are 38%. Now, this is a new normal margin for the business going forward. So you won't see 63% of margin of Sangvi movers because of the business shift that the company has seen. So overall, we have given this a thumbs up because this is the new normal numbers that you would be seeing in Sangvi movers going ahead.
Okay, so that's with regards to your income statement, but let's look at the balance sheet. You know, the debt has seen a notable increase, but that's particularly happened between FY23 to FY24, and this is suggesting increased borrowing for expansion or operations. But if you take the debt to equity into consideration, and if you have that matrix here, the ratio remains relatively low, which is indicating a healthy equity-heavy capital structure. And the increase that we saw in FY24 reflects the rise in total debt. So in summary, the balance sheet over the last 3 years reflects a fundamentally sound company with a strong equity base and healthy liquidity. And the moderate increase that has happened in the debt is likely driven by expansion activities, which should be assessed against the company's corresponding revenue and profit growth that Varsha just took us through. And this will actually determine if the deployment of the capital has been efficient, and hence a thumbs up coming in on the balance sheet.
Talking about cash flow statement, let's see how that is shaping up. So if you see in FY23, the cash flow from operations was at 257 crore, fast forward to 24, 304 crore. But in FY25, the cash flow from operation has reduced drastically. Why? Because of, again, the change in business mix towards low margin, longer cycle segment. Now, if you see that one of the main reasons why you're seeing a depressed cash flow from operations in FY25 is because of high receivables. So the receivables jumped from 118 crore to 166 crore. And the negative net cash flow that you're seeing, that is 35 crore, is because of low CFO, that is low operation from cash flow, and also company did some investment, or company is investing, and one of the reasons why you're seeing that negative 35 crore. So overall, because of the higher receivable cycles or because of the higher debtors on the cash flows, on the cash flow statement, is one of the reasons why you're seeing that, you know, depressed cash flow from operation when it comes to FY25.
Okay, let's quickly look at the return ratios as well. Now, you know, while the EBIT has grown, if you talk about the capital employed, that has actually surged faster, and mainly due to the capex and the working capital strain. And this is what has actually diluted the return on capital employed, because if you see the downtake from a 21% in FY24, it's actually come down to nearly 13% in FY25. Now, the heavy capital expenditure that they've done is for fleet expansion, and this has been funded partly by internal accruals and the debt. Secondly, if you talk about the business shift that has happened to EPC, that's the wind business, the lower profitability per rupee of capital in EPC versus the rentals that they get directly has pressured the return on capital employed, and hence that 13% number there, and hence a neutral rating on that one.
You know, talking about the shareholding, not a dramatic thing over here. We have given a neutral rating. The good thing is the promoter share has not decreased, is you know, at 47.25%. Well, FII's stake has been stable at 1.4%. Same goes with DIIs, and same goes with public. So nothing a dramatic change when it comes to, you know, shareholding pattern, and one of the reasons why we have given a neutral rating to this.
Okay. Let's quickly look at the street credentials from here on. Overall, if you talk about the performance, 24% up over the last 1 month. 6 months, as I mentioned earlier, 72%. What is interesting is 5 years is nearly 950% on this one. It's just your YTD in 1 year is subdued slightly at 12 to 32%. Though good return so far, no investor has made a loss, and hence a thumbs up.
Well, you know, talking about the valuations over here, now there was a time when Sangvi movers used to enjoy a PE of, you know, 45, 50, but then it was a crane company. Now the valuations are, if you see the TTMP stand at around 21x, because now this company will get the valuation of wind EPC business only. The 3-year average of this company is around 22x. So valuations are not that overvalued and not that undervalued. So overall, a fair valuation, I would say, at 21x PE. But do remember that I don't think so that company would get you know, 50, 55, 60 PE, because the wind EPC, because of the shift in the wind EPC business, so it will get the valuation of wind EPC players like. So overall, a fair valuation, and hence a neutral rating for valuations.
Okay, moving on. Let's quickly look at what the outlook is looking like. Now, clearly what the management has indicated is that the expansion, what they're looking at, is mainly in the wind EPC business. Secondly, their debt to equity will remain lower at 0.35 times, which is a positive. The growth will be on the back of the opportunities that they are exploring in Saudi Arabia as well. And their vision is to be within the top 5 crane companies in Saudi by 2030. And this is rental companies. Very lastly, they have an ambitious revenue target as well that Varsha and I were discussing, but they've indicated around 1,000 crores for FY26 in one of the conference calls. And this will be backed by a robust order book. And the management is expecting to surpass its initial revenue growth target of 30%. We will reconfirm this with them as well. But very quickly, let me take you through the final ratings. A thumbs up on the income statement, a thumbs up in terms of the balance sheet as well, if you can have that one on the screens. Neutral on cash flow and return ratios. And if you see the other ones where you have, almost 1 thumbs up and 3 neutrals, which takes you to a total rating. Let's get that one, 5.518, which is also a pretty strong rating from NDTV Profit. But let's also get in Rishi Sanghvi, MD of Sanghvi Movers, to join in. Rishi, welcome to the show and always a pleasure to speak to you on NDTV Profit. A couple of questions that we started this conversation with was the way you're shaping up the wind EPC business versus your crane business. Currently around 34% of your revenues coming in from there. You are looking to expand on this front. What is that combination going to look like in the next 2 to 3 years? One, the quantum of contribution that will come in from the wind EPC business, and two, because of the expansion, the kind of pressure it could put on your blended margins.
Hi, Hiral, and good afternoon, and thank you for having me on your show. So, at the start of the year, we had indicated that our core crane rental business would grow between 10 to 15%, and our overall revenue would grow around 25 to 30%. So this year, we have already secured an order book which is 1,000 crores.
Rishi, I'll just have to interrupt over here. We have the Finance Minister Nirmala Sitharaman speaking at the Global Fintech Fest. Let's quickly listen into that.
Well, I like to benefit from the conversations which are going to happen here. Equally, I'm not here to say, oh, the government has come to inaugurate. No. It might be the way Chris has put it out, but I'm here to just let you know what we have done till now on the request of the industry and what we will want to take away from these 2 or 3 days deliberations. So take what I speak in that spirit. So formally, it gives me immense pleasure to be here, especially in its 6th edition of the Global Fintech Fest. Actually, over the years, it has gathered so much momentum that it has truly evolved into a global forum and an assembly of accelerating collaboration and shaping the international discourse on the future of financial technology. It also sort of reaffirms India's ascendancy as a global fintech leader and setting benchmarks in innovation, in scale, and in inclusion, while strengthening the collective resolve to shape finance as a force for global good. There are observations which one can always immediately make when you do it for the global good, when you do it as a public infrastructure. The simple motive is that it should be for the public good, and at no point in time it gets weaponized. It is important to constantly remind ourselves that technology cannot be, in that sense, truly mastered, but having obtained certain proprietary rights over some parts of it, we should refrain from weaponizing it. I'm purposely adding this one line because constantly globally we see technology advancements sometimes being turned inward, that global progress itself gets questioned because of weaponizing it. So the Global Fintech Conference that you're holding 2025, this edition, with its timely theme, Empowering Finance for a Better World, powered by AI, captures the spirit of the moment as we harness the potential of artificial intelligence to build a financial ecosystem that is more inclusive, resilient, and sustainable. Fintech in India is not a niche urban convenience. It is a nationwide enabler of economic empowerment. Fintech in India has again not merely digitized payments. It has democratized finance. It has transformed financial access into a public good, empowering millions to save, invest, borrow, and insure themselves with dignity and transparency. India's journey in innovation and adoption with respect to new financial technologies is a story of unprecedented transformation. The scale of this transformation can be best understood through the numbers that define it. In a span of a single decade, we have connected a population equivalent to that of the entire European Union to the formal banking system, opening over 56 crore Jan Dhan bank accounts. India is now ranked third in the world for the number of fintech companies and also leads in digital payment volumes, having processed over 18,580 crore UPI transactions worth 261 lakh crore rupees in 2024-25. Nearly half of the world's real-time digital transactions happen in India with adoption rates of 87% compared to the global average of 67%. Government of India has leveraged digitization by introducing direct benefit transfers as a system for all its social welfare schemes, which has significantly actually boosted the welfare efficiency by reducing subsidies and leakages. It has resulted in a savings, which is worth mentioning to this August gathering. The savings is 4.31 lakh crores of Indian rupees. And between 2014 and 24, this is the saving of 4.31 lakh crores because of DBT being adopted completely by the Government of India, 16-fold rise in beneficiary coverage. So not just your saving, but actually you've reached a larger number of beneficiaries. Technology has facilitated it for us. So a shift from paper-based disbursals to direct digital transfer has ensured that public funds reach the people that they are meant for and not for ghost entities. So the DBT model presents a valuable lesson, and as the first spark, I would say, it can also absorb a lot more better technologies, better innovations, better ways of handling technology, and so on. You have a world out there for you all to be innovative, even about improving the DBT's efficiencies. So the contributions of startups, engineers, entrepreneurs, investors in this have been immense. So the Government of India's policy has actually to play its role in nurturing the growth and innovation of fintech sector through a balanced approach, balanced mix of policy support, digital public infrastructure, and forward-looking regulation has actually shown the results. I'll list, instead of getting into details, Aadhaar, UPI, Account Aggregator Framework, DigiLocker. All of them have really decisively changed the contours of how public finance is handled for the betterment of the citizen. India has actually stepped decisively into the global AI arena with the launch of the $1.3 billion India AI mission. It is a comprehensive strategy spanning the entire AI value chain. And that is the reason I first of all wanted to say that amount not in rupees but in US dollars. Commissioning of 34,000 GPUs at concessional rates to spur innovation across startup ecosystem, researchers and academic institutions. launch of the AI, which is India AI Data Sets Platform, AI Kosh as it's named, incorporating 2,000 plus verified and indigenous data sets, use case across sectors, and sandbox environment, supporting development of 4 foundational LLMs that cater to India context by supporting vernacular languages and are multimodal in design. Setting up 4 centers of excellence and India Future AI Skills Program to boost India's AI talent pool. So these are first lot of steps that we have taken with the AI, meaning India AI mission. Now a word about the GIFT City. GIFT City is a bold vision, an initiative of the Honorable Prime Minister, Shri Narendra Modi, even when he was the Chief Minister of Gujarat. Now it is in a full bloom. It presents immense opportunities to the fintech sector. GIFT International Fintech Innovation Hub is the city's fintech incubator and accelerator where fintech startups can secure funding, obtain legal guidance, and scale their businesses. It has a network of industry experts, investors, mentors, and corporate bodies that will help fintech drive innovation and support them for their growth. Fintechs must leverage, I'll appeal to you all, you must leverage opportunities in the GIFT City. In this context, I am pleased to launch today the foreign currency settlement system in the GIFT City. So that tells me I don't need to explain what it is. You're quite aware of the importance of such a step, and I'm indeed grateful to the GIFT Authority who are all present here for having come forward on this. So, for those of us who would like to hear what exactly it is, transactions in foreign currency by entities in IFSC are currently settled through the correspondent banking arrangements, which is routed through different participants and multiple nostro banks. Such transactions are not settled on a real-time basis and usually settle with a lag of up to 36 to 48 hours. That's the present story. But foreign currency settlement system, which gets launched today, seeks to solve this problem by doing a few things. One, facilitating seamless and efficient settlement of foreign currency transactions within IFSC on a real-time basis, not 36 hours, not 48 hours, just as it happens. Enhancing liquidity management and operational resilience. Ensuring compliance with regulatory oversight under the Payment and Ensuring Settlement System Act, that is the PSS Act, by the IFSA, the authority which is there. So the FCSS will be a payment system within the IFSC designed for settling transactions in foreign currency on a real-time or near real-time basis. So I congratulate the IFSC on taking this kind of a forward-looking step. So with the operationalization of the FCSS, GIFT IFSC will now join a select list of financial centers that include Hong Kong, Tokyo, Manila, and so on, that have the infrastructure to settle foreign currency transactions locally. So together, these initiatives spanning policy, infrastructure, AI, innovative culture, and also regulations illustrate how Government of India has laid the groundwork for a vibrant, inclusive and forward-looking fintech ecosystem that is powering India's rise as a global fintech leader. We have also been working to strengthen the factors that support functioning of GCCs in India, including framing appropriate policy framework. India's 1,800 plus global capability centers are at the forefront of the country's remarkable transformation into a powerhouse for technology-driven innovation and impact. Over the past decade, India's GCC landscape has evolved from cost arbitrage hubs into high-value engineering, R&D, and innovation centers, particularly in the banking, financial services, and insurance domain, the BFSI as you use an acronym. India's fintech GCCs are enabling multinationals to, 1, launch new digital financial products faster, reduce costs and time to market, and deploy AI-led financial services at a global scale. So India offers an unparalleled opportunity for fintech GCCs to scale innovation, as we have a deep talent base and also a favorable government policy. India offers access to cost-effective and high-quality technical, entrepreneurial, and financial services talent pool. Global financial services leaders have immense potential to build, to scale, and to transform from India through setting up fintech GCCs that not only serve the world, but also shape its future, the financial architecture. The theme of the GFF 2025, Empowering Finance for a Better World Powered by AI, is apt given the rapid developments in AI across the world. Just as the internet and mobile technologies defined the first chapter of fintech growth story, the next, or what is being shaped now by AI, blockchain, and intelligent finance. Sorry. Fintechs must use the technologies to design better product and services. Thank you. Next. So fintechs must use the new technologies to design better product and services. They must also continue to enhance transparency, predict risks better, and personalize services responsibly. So India contributes 16% of global AI talent and is among top 3 talent markets. Indians are the second largest contributor to public Gen AI GitHub projects. It is estimated that all AI-enabled GCCs will, in all likelihood, contribute 30 to 35% of revenues of the India's AI services market by 2028. 30 to 35% of revenues of the India's AI services market by 2028. The potential for becoming the global hub for India and for building various AI products and services is very high, is not an exaggeration. Given the large population, with nearly 650 million smartphone users, we should create scalable models for sectors beyond finance, such as healthcare, education, agriculture, MSMEs, exports, and so on. India can also build AI products that fit diverse use cases across the world. It can be a laboratory for developing and testing AI aids. Our AI stack must be rooted in Indian languages, local contexts, and multimodal interfaces so that it can be widely accepted and accessed by our citizens. Focused approach across the AI stack can make India the AI torchbearer for the global south. So as this new wave gathers momentum, fintech innovators, investors, and regulators all have a shared responsibility to build systems that are not only innovative, but also resilient, secure, and inclusive. Undoubtedly, artificial intelligence is transforming finance, transforming governance, and also everyday life. But as we harness its powers, we may remain conscious that technology must always serve humanity. Even as AI opens extraordinary possibilities, we must confront its darker side. The same tools that power innovation can be weaponized for deception and for fraud. I'm not personalizing it, but I can say I have seen several deep fake videos of myself being circulated online, manipulated to mislead citizens, distort facts. It was a reminder of the urgency with which we must strengthen our defenses. The new generation of fraud is no longer about breaching firewalls. It's about hacking trust. Criminals are using AI to mimic voices, clone identities, and create lifelike videos that can manipulate people. So, in order to address the impersonation and false representation targeting investors, it is heartening to note that SEBI, in partnership with NPCI, has launched a dedicated @valid, which is a UPI handle for SEBI-registered investor-facing intermediaries, with category suffixes such as .brk for brokers and .mf for mutual funds. Major brokers covering over 90% of investors and all mutual funds have already enabled it. The @valid handle establishes a verified, secure payment channel in the securities market while preserving existing payment options, improving safety and accessibility without disrupting user preferences. So SEBI has rolled out SEBI Check, which allows investors to verify UPI IDs and bank account details, that is the account number plus the IFSC, of registered intermediaries across the UPI, NEFT, RTGS, and IMPS before initiating payments via the web portal and the Sarthi application. So the framework embeds responsible use of technology through privacy, preservation, verification, secure processing, audit trails, continuous improvements, which are informed by flagged mismatches and user reports. So, this is a good moment, I would think, to reflect on what kind of financial future we wish to build and how do we get there. So I have 4 messages, each with a few details. First, Fintechs must essentially focus on the fundamentals, such as revenue growth, innovative product offerings, profitability, risk and compliance capabilities. So within that first message, I would like to add, as many of the fintechs mature, there will be challenges of meeting heightened expectations around financial performance and regulatory compliance, while continuing to innovate in the face of emerging competition. Focusing on fundamentals provides the cushion to continue innovating, investing in R&D, and weathering downturns.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The market's most influential voices. The visionaries who decode the future of wealth. Unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Hello and welcome. You're watching Markets at 12. I'm your host, Anushi Vakharia. Interesting set of management that we are talking to today. It's in the co-working space solutions that we are looking at. I'm talking about office space solutions. In fact, we have the management with us. Amit Ramani, the chairman and MD of the company, joins us. Hi, Mr. Ramani. Thank you so much for taking out the time. It's a pleasure speaking to you once again. Now, the big update that we are looking at in terms of the new center that you've launched in Powai, Mumbai. Talk to us about this particular development. You have about a huge presence as well in Mumbai. So just want to get your sense in terms of the launch of the new center as well as your outlook for the MMR region.
Sure. So, Anushi, I think it's very interesting that, we continue to expand our presence in Mumbai. We currently, with this new center of about 50,000 square feet in Supreme Business Park in Powai, will be the 35th center in Mumbai. And I think we cover from South Mumbai to Navi Mumbai. Pretty much we have a center within about 10 to 15 minute driving radius now all across Mumbai, including cities like Bangalore and many, many others. I think we have been able to achieve this. So I think very, very bullish on the MMR region. There is a global fintech summit going on. And I think we believe that with the expansion of the GCCs in the market and the new GCC policy that the Maharashtra government has just recently launched, I think Maharashtra will see a large portion of people now coming into the MMR region. And our large presence today of almost 1 million plus square feet across 35 centers, we will continue to expand in the MMR region. So very, very positive about the expansion that is happening.
Mr. Ramani, just want to understand a couple of metrics, in terms of these large centers that we look at, currently about 59% of your mix or so. How do the margins or let's say the realizations differ from, the small seat centers or, the small seats that you have in your portfolio?
So, Anushi, as you're aware, we have three different type of options available. We have the Office flagship product, we have Office Gold, and we have Elite. So all of the margins are a bit different in all of these scenarios. Obviously, when you do a straight lease, and it's most likely when we have the demand already with us or a large portion of the demand, which we call as managed office. In that scenario, typically the margin profile at the contribution level at the center would range anywhere between 30 to 35%, right? And then once we do these co-working centers, which typically in our case are in the managed aggregation model, which is in partnership with the landlord in a profit share or revenue share model, there obviously our margin profile is more closer to 24 to 25% because obviously we are sharing a large portion of that profit or revenue share with the landlord. So I think but obviously the return on capital employed in managed aggregation is much higher versus in straight lease, it's lower because we deploy all of our capital in that scenario. So that's how it works. And then depending on the tiering of the product. So if it's a flagship product, there's a different margin profile. If it's an elite product, it's a different margin profile. It's also dependent on the micro market that we're operating out of because the base rental, technically speaking, is ultimately the driver for the level of throughput that we can get, right? So I think from that standpoint, there are various parameters, but I would say in a straight lease about 30-35% and in a managed aggregation about 24-25%.
So, the focus has remained on the managed aggregation model that we are seeing in the last few fiscals that you've described, that your focus is over there. In the current fiscal year, projecting that the margins will remain in the similar levels, but with the launch of more of these gold centers and even the elite centers that we are looking at, what's the kind of profile that you're building for the next 2 to 3 years?
So, Anushi, we think from our standpoint, we are very clear that our flagship product is going to continue to be a large portion of our portfolio. It's 85% of our portfolio. And the remaining would be gold and elite, which would be about 15%. Currently, the mix is about 90-10, and that will shift to about 85-15. We also believe strongly that the managed aggregation model, right, I think is a big part of our business model. And I think we have done really well. Out of the 260 odd committed, including our centers under fit out, almost about 65% of that portfolio, or almost 180 plus locations, are in managed aggregation, which is, we believe is a great model, which works, is a win-win for the landlord, is a win-win for us, and continues to allow us to have return on capital employed in the 65 to 70% range, which I believe is fairly high for any publicly listed company. And I think we want to continue to be in that direction. So that's the mix that will continue.
Mr. Ramani, from the previous conversations that we've had, you've remained steadfast in terms of your guidance, which is a 30% of a growth guidance for FY26. Along with that, seat additions also, we are looking at around 40,000 or so for FY26. I just want to understand the picture forward. Now, in terms of competition, if we are looking at, there's a couple of listings in primary markets which are happening. Want to get a sense, while you remain confident of your FY26 outlook and even the medium-term outlook, what are some of the challenges that are still there in the space?
Anushi, I think firstly, I'd like to congratulate all my competition that are getting listed. I think it's great for the industry. An industry that did not exist 10 years back today has almost three players are listed and one more is on the way. So congratulations to all my peers. And I think all kudos to the industry and the great entrepreneurs that have delivered in that space. Anushi, even in the public or the private space, the competition already existed, right? I mean, the top 5 or 6 players in the country control 60% of the market, but there are 300 plus players, right, in the market. So I think it's a great thing for the industry. But I think the branded players, including us, who have a market leadership position, I think will continue to do well. The industry today is almost touching close to about 78 million square feet of the total about 900 odd million square feet, projected to cross 100 million square feet in the next 18 months. So I think an industry that didn't exist and now is almost going to be about 10 to 11% of the total commercial real estate market, I think is a great outcome. And I think clearly for us, we believe that with our large network, with our integrated platform, which offers co-working, managed office, design, build, furniture, IT services, all of this under one platform, I think the future is looking very, very bright. India is one of the least commercialized markets. And as the continuous growth of the urbanization happens and people move more into cities and into services, I think commercial real estate would grow. And I'm very, very bullish on the co-working flex industry as well, which will continue to grow with the commercial real estate market as it expands.
Right. Thank you so much, Mr. Ramani, for taking out the time and speaking about the outlook forward. Well, that's office space solutions for you. But moving on to NDTV Profit, it's reporting live from Asia's premier media and entertainment convention hosted by FICCI. Now, this dynamic event brings together over 2,000 global and Indian industry leaders for unparalleled networking, insightful policy discussions, and high-stakes deal-making. Now, this powerhouse gathering shapes the future of media as well as entertainment. My colleague Charu and Malika joins us. Charu, Malika, what's the mood there?
It's extremely exciting, Anushi. Thanks for that. As you said, this is a convention of media and the media and entertainment industry, bringing together over 2,000 people. We'll have 50 sessions packed throughout 2 days, and a lot of things will be discussed, right? From artificial intelligence to the integration of AI, whether it's about enhancing movie experience or it is about regulating deepfakes, whether it's focused on the sports industry, integrating AR and XR into cricketainment, that's what they call it. Also, Maharashtra is committing about $400 million into building more animation and XR hubs across the state. We actually just had a panel discussion with Akshay Kumar and Devendra Fadnavis, which was quite insightful as well. But I'll give it over to Charu to give us some more insights into the agendas ahead.
Thank you so much, Malika. So as my colleague just mentioned, we are here at a convention that is, a consolidated effort of media and entertainment and all of its stakeholders, and several important panels which have several important speakers ranging from, companies like Netflix, JioStar, Meta, and Google are going to be speaking. They are going to be speaking about, 25 years of the last 25 years of the orange industry, that is the industry that deals with the creativity. So what are they speaking about? First of all, they are speaking speaking about the enhancement in the technology, how the technology in the entertainment industry is developing and how there is scope for so much more happening. In fact, the Chief Minister of Maharashtra just had a panel inside, and he spoke about how he's going to be dealing and developing the film city in Goregaon. Now there is over 500 acres of land in Goregaon, and he has said that in 1 year some development projects on it are going to start, and within the next 4 years some completion of sorts is going to be seen as well. Apart from that, there have been conversations about lighter regulations, making regulations easier on advertising, and so much more is in the house, and we'll keep the developments rolling.
Okay, excited to hear that. In fact, we'll be tracking, these conversations, covering a whole host of these topics. Thanks for that, Malika and Charu. But moving on, government is gearing up for a strategic stake sale in 2 public sector banks, aiming to offload minority holdings through offer for sale. Shrimi joins in with more details in this one. Shrimi, what are your sources indicating?
Well, the government is gearing up to kick off the process of selling minority stakes in select public sector banks through offer for sale route, and it's all set to happen within this financial year is what indication we are getting from the North Block. And in fact, sources indicating that at least 2 banks are expected to be the part of the first round of the stake sales. In fact, merchant bankers and transaction advisors have been working on the plan since August, suggesting that groundwork is kind of already quite in an advanced state. So typically it takes around 6 months to kind of complete a transaction, through the OFS route, slightly faster than the disinvestment, which involves multiple layers and process approval stages, etc. So official indicating that center expect a meaningful progress on some of these deals, some of these transactions within the current financial year, and we may see some progress as soon as November last week or December is what indication we are getting. So for the understanding of our viewers, the government aims to offload about 20% stake in total across 5 public sector banks in a phased manner, which includes the Bank of Maharashtra, Indian Overseas Bank, UCO Bank, Central Bank and Punjab and Sindh Bank. Now, in each of these, the government is actually trying to bring down its stake to below 75% in line with the SEBI minimum public shareholding norms of 25%. All these 5 banks are currently below the MPS threshold, making this entire exercise, the OFS exercise, very, very crucial to bring them into compliance. Now, sources hinting that government is, quickly moving on this, pushing ahead with the preparatory work, irrespective of the MPS deadline, in order to kind of ensure that this entire process gain momentum, before the end of this fiscal year. So both DPAM and DFS work in tandem, closely tracking both bank-specific factor and the broader market indicator, ensuring the maximum realization. And as you know, most capital raising in PSU Bank has been done through QIPs, which help them, of course, banks to strengthen their capital, but not kind of reduce the government stake. But the OFS route, however, directly brings down the stake ownership by also kind of improving the overall liquidity and widening the public participation. So, of course, in short, the process is now underway. 2 banks are likely to go first, and within a month or 2, the government, expect to make visible progress on stake sales across these key public sector lenders.
Okay, thank you, Shrimi, for that update. But that's all the time that we had on this edition of Markets of 12. Stay tuned to NDTV Profit.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
चाहिए ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
चाहिए ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The market's most influential voices. The visionaries who decode the future of wealth. Unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
Hello and welcome. You're watching NDTV Profit. I'm Anushi Vakharia. Now, primary markets, we've seen a couple of listings today, and one such particular company in focus is Glauus Limited. Now, this is in the logistics space that we are looking at. The company, if we see, had received an overall subscription of around 2 times, and they came out with a price band of 120 to 129. However, if you look at the listing, we've seen a weak sort of numbers in terms of how the stock has done so far on its first day. But to talk to us more about the outlook and the strategy forward, we are joined in by the promoter and MD, Mr. Manikandan, as well as Mr. Senthilville. Thank you so much, gentlemen, for joining NDTV Profit and having a conversation with us.
Thank you, madam. Thank you so much. Thanks for having us on the show today.
Right. Mr. Manikandan, I want to start off the conversation with you. It's the first day that we are looking at post-listing. We are seeing a 30% of a downtick. Just want to get an overall sense in terms of your business background. What are the kind of concerns that investors are seeing right now, seeing that it's an overall weaker set of numbers that we are looking at against the kind of subscription numbers that you had clocked in?
First thing, we can't comment on the market forces, but we are going to do what is for the company. To look at the strategy wise, we have been with the IPO proceeds, we are going to invest in that purchase of the trailers, 150 trailers and 1,000 containers. This will definitely enhance the growth of the company going forward. So we look at the positive sides of the market and the positive side of what the company is going to go forward.
Mr. Central, coming to you, overall, if we see in terms of freight rates, there's been volatility because of US tariffs in place. So just want to get your overall sense. Is this one of the factors which is leading to that kind of lower confidence in terms of where the investors are? I want to get your sense in terms of how the freight rates are shaping up for currently, if you compare it with the last quarter, and what are the trends that you're seeing in the next upcoming months?
So freight levels are, yes, there is a lot of movements on the freight levels. So currently the freight levels have been stabilized. It has come for the all-time highs and it has been stabilized currently. And to have our existing customers and their commitments to get fulfilled, we have given them a long-term contracts, which we have backed up with our existing vendors. And going forward, we are very positive doing the same way. This is how we have been doing, and we had moved in last financial year 112,000 odd TUs, which is a sizable number. And going forward also, we are very positive on this with the same pricing strategy.
Okay. Mr. Central, will just want to understand on overall business model and even the proceeds that you're seeing so far. You plan to increase the fleet size. The CAPEX plans are already in place. You're going to be utilizing the fresh issue proceeds as well. Just want to get a sense in terms of the timelines. What's the kind of strategy that you're building for FY26-27 in terms of growth?
So we are trying to do a backward integration by investing on trailers and containers. So this will reduce down our dependency with our existing vendors. At the same time, this will also give a lot of cost reduction in our books. So we are very positive, and the deployment we are trying to achieve in with the next 6 to 8 months. This is what we are trying to do, the deployment, and we are very positive going forward.
Okay. If you're looking at one of the risks that you had cited is that dependence on third parties to execution portion of your orders stands. Just want to understand, going forward, will this dependency come down? Want to get an overall outlook in terms of that. You're already increasing the fleet for the same, but what's the kind of percentage right now that we are looking at, and how will this come down eventually in the next 2 to 3 years?
So in terms of fleets and the trucking part, the dependency will come down at least 75 to 80%, which we are currently using the market outsource vendors. So this will come down 75 to 80% when we infuse this 150 trailers in our books. And containers, buying out containers will only minimize the dependency. Maybe it can do like maybe 5 to 6% dependency from our existing vendors.
Okay. In terms of financials, if we see, you've reported about 90% of our revenue growth in FY25. Want to get an overall sense in terms of what's the sustainable number that we can see for the top line going forward, and margins, will they continue to remain in this 8% of range that we are looking at, or are you looking for a further uptick in the next 2-3 years?
If you look at the overall thing, what we have been doing, we are predominantly an Asian operator. 80% of the revenue comes from the Asian region. To look at going forward, we will be looking at the market like West, like Africa, Europe, and North America and South America. These are also, if you look at predominantly, we are a South-based company. Looking at going forward, we'll be moving the much higher sales force in the West and the Northern region. So that way, that you can see a lot of growth in the company's projection. Yes. And also to add with Mani's comment, so this backward integration on the trucking and container will definitely enhance the margins in the upcoming years.
If you can give us a range for the same?
So range, we are very bullish. Currently we have done the PAT percentage of 6.1% in FY25. So we will be scaling up. That is for sure.
Okay, but I just want to understand on overall industry standpoint, if you are looking at, are there any challenges that you see in particular in respect with competition or any macro headwinds with this tariffs in place? Because if we compare this particular year with even last year or so, just want to see what's the kind of difference in terms of the industry outlook.
Madam, if you look at the tariff, it's mostly happening on the US side. If you look at the Glautis, our percentage of it's like close to 1 to 1.5% of the volume we have been doing to the US. So we are not a US player yet, actually. Maybe going forward, we will be doing a lot of shipments to the US and those regions. But right now, we are predominantly in the Asian region, and we don't see much of this tariff going to impact us at the moment.
Okay, and Mr. Centerville, coming to the overall contribution that we are looking at, renewable sector contributes about 47% of the overall top line. Is this the mix that we'll continue to see forward? What as you plan to diversify in other sectors as well? Just want to understand which sectors would be in focus going forward, and what's the kind of shift that you see in terms of the percentage?
So percentage will not go shift because there is enough potential in renewables. So renewables, this will remain same. The number of the shipments and the execution will keep going up year on year, especially on the renewables. But we will also try to spread in verticals like automobile, retail, home fashions, and agro. So these are the other three verticals we will be trying to focus more.
All right, not the best debut for Glautis on Dalal Street. But with that, let's kickstart Profit Buzzers. My name is Alex Matthew. With me is Puneet Javeri, and we'll take you through the next 1 hour of trade. And indeed, let's take a look at where the markets are this afternoon. We've held on to gains somewhat. We're off the high point of the day, just a shade off for the benchmark. And we've had a little bit of chop and churn, but for the most part, we've stayed in the green. We'll look at the internals of the benchmark in just a bit, but also mark the broader markets for you. And they've been underperforming over the course of yesterday. Today is no different. And you have the mid-cap index that's up just about 0.2%, small cap index trading in the green, just about similar to yesterday's move. And let's also take a look at the market breadth, because about 2 hours back or an hour back, you had gainers that overshadowed the losers. That has flipped just a tad bit. It's not a very wide gap. I wonder if that widens towards the end of the session, especially because we've had 3 days of gains for the benchmark, and you might see some profit taking. It is in evidence in the IT space, for example, where you have cuts of about 0.33%, where you have gains in yesterday's session of over 2%. But a lot of individual counters that are making the headlines today.
Well, definitely. And I think, throughout the day, we've had some interesting updates coming from players like Gabriel India, amongst others, and they are now leading the charge. So when you look at the BSE 500, you'll see a lot of individual names starting to have that kind of outcome. And you can see RHI Magnesita almost up 12.8% right now. HLE Glasscoat is back in the green. It started off post quarter one essentially with a very strong set of gains, then some sell-off, and now back in the green. IPCA Labs is the other one. Let's quickly look at Gabriel India as well very quickly, because that's the other one that's been in the news post joint venture announcement, and we'll get Vansh to talk a little bit more about that as well. But largely a lot of individual pockets that are in favor, and as you rightly mentioned, Alex, that we saw a lot of gains yesterday on the IT pack. Now there is some sell-off that's come in on that, but largely a positive day nonetheless post the Nifty 50, while we've given up some gains from the morning.
Yeah, absolutely. And some stocks where you've seen tremendous gains in the recent past, where you're seeing a little bit of profit taking. Tata Investment is one of them, where you're seeing cuts of about 6% or so. At this point, let's pull that up and see where it is at. Of course, in focus on account of the Tata Capital IPO, but down about 6.3% after the tremendous move up that it's had in the recent past. We've got Mr. G. Chokkalingam, who's the founder and managing director of Economics Research, joining us right now. Mr. Chokkalingam, thanks so much for taking the time. And I do want to start by asking you about banks, and we've seen in the recent past tremendous up move, particularly for public sector banks. And we had an exclusive update today that was broken by my colleague in New Delhi, Shrimi. She spoke about the fact that the divestment wing of the government is now looking at 2 public sector banks that they will divest stake in through an OFS. It could be one of 5 options. I will read out the list to you. They're Bank of Maharashtra, Indian Overseas Bank, UCO Bank, Central Bank, and Punjab and Sindh Bank. Do any of these stand out to you as key stocks to invest in?
Yeah, definitely. There are 3-4 insights I learned about these public sector banks in the recent time. First of all, no need to worry too much about government divestment. It has been happening in the last 10 years, and still many PSU banks created a lot of wealth. So one should not forget that. And second, one should always give importance to price to adjusted book value and the quality of assets. And if you see that among the list you have given, Bank of Maharashtra tops. It is one of the most attractive PSU banks. And in fact, the September quarterly business numbers have come. The credit growth of over 16% is far above industry credit growth. And also, third thing, if you look at this divestment, the quantum of divestment by the government, which is minimal for Bank of Maharashtra when you compare with its overall market cap and what government would dilute to fulfill the regulatory norm. So I don't think there will be a major concern, and it would be easily absorbed. The second bank in this list I like is Central Bank of India. Yes, the quantum of divestment could be very high because government holding is very high. But however, this is also almost on par with the Bank of Maharashtra in terms of quality of assets and also growth and profitability. So these are the 2 stocks I would say that investors can consider if there is any fall. And also this morning we saw, the statement that the net NPA is likely to be, same level like March 2025. And which is around 10-year record best for the PSU banks. And lastly, very interesting data point is that most of these PSU banks have got very high CASA ratio, low cost deposit ratio, particularly bank like Bank of Maharashtra and Central Bank of India. And that is going to help them, in difficult time to maintain the margin profitability. So therefore, I believe that these PSU banks can in fact outperform the benchmark indices for next 1 to 2 years quite substantially.
Got that, Mr. Chokalingam, and a couple of them in the story by Shrimi as well could actually be in the next month or 2. So that's something to watch out for as well. But another key stock that you should have on your radar is Trent, after brokerage notes from Morgan Stanley as well as Equirus have come in, and this largely on the company's quarterly update that's coming in terms of growth. Let's get in my colleague Mahima to get us some perspective of what's putting pressure on the stock today. Mahima.
Right, so Puneet, as you rightly mentioned, yesterday it came out with its Q2 business update where growth was around 17%. The expectation was around 20 to 25%. So it's come much lower than that. Last quarter also they did 20%, which has not been, the story so far. And this is the lowest in the past 4 years that we've seen. In terms of what brokerages are saying, where Morgan Stanley says that Q2 is a notable miss. However, they've still maintained an overweight with a target price of 6359 on the counter. They're saying Side had 13 new store additions, and that's the highest in past 5 years. Plus, they expect standalone EBITDA margin to improve by around 165 basis points in Q2 itself. Equirus, on the other hand, has downgraded to reduce with a target price of 4474 from a 5759 earlier. What they're saying is that Q2 is poised to be the 5th consecutive quarter where they've seen a sequential moderation in terms of the top line. In terms of the quarter where peers, in fact, V-Mart, V2 Retail, etc., have come out with a strong business update, Trent has been a disappointment. Street expectation of 26% top line over FY25 to 27 appears to be unachievable from here on, is something that they've said. And against the backdrop of earnings downgrade and visible growth moderation, they're saying that they foresee valuation multiple correction ahead is what they're penciling in, and we know that for Trent the valuations are trading at very high multiples. In terms of the other brokerages, Goldman Sachs has maintained neutral but cut the target price to 5,300. They've lowered the EPS estimate also by 5%. UBS has maintained a buy with a target price of 6,200. They've said that overall this has been a weakening trend from Q4 onwards, but they're seeing a cyclical weak phase for this high growth company is what they're saying. Growth acceleration going forward could serve as a key catalyst. So these are the views that brokerages so far have given with regards to a Q2 update for Trent is concerned.
Got that, Mr. Chokha. Got that, Mahima, as well. But that's largely essentially on Trent as well, and that's been one of the key stocks. The other one is Canara HSBC IPO as well, which is opening on October 10th. I got a chance to speak to Mr. Anuj Mathur, the managing director of the company. Listen in to what he had to say on product mix, amongst other key aspects.
So as a company, and over the last many years, we have been selling traditional products. Our forte has been selling more of traditional products, and that is because of the customer profile which we have, particularly in Canara Bank. Now, if I see last year, last fiscal, we saw markets going up, and as a result of that, the entire industry witnessed growth of ULIP business. If you look at FY24, our ULIP business was less than 45%. Last year, it went up because of the customer demand. And we believe in selling what the customer is looking at. So last year, I'll say, was more of an aberration. What we have seen now, in fact, if I talk about the last 3 months till June, and that information is there in the offer document also, our ULIP contribution has come down, and we are seeing customers again looking for guaranteed products, non-par products. So that's something which has happened. Last year, I'll say, was more of an aberration. And now we see demand coming back for traditional products, and which is where we have the huge opportunity.
The other question, Mr. Mathur, was on the way you distribute these products as well. Almost 87% for FY25 was coming from the bank assurance channel, and a huge dependence out of that 87 on Canara Bank itself of roughly over 70% in terms of distribution. Are you trying to integrate other modes in terms of reaching the consumer as well? Because that seems to have a very high essential, weightage on Canara Bank to distribute your products. So any perspective that you can offer on this particular aspect?
See, first of all, I'd like to mention that bank assurance is a very good distribution model and a very cost-effective model. So as a company, our focus has been on bank assurance, and that will continue. Let me just clarify, our current contribution from Canara Bank is little less than 70%. And then we have HSBC, which is selling about 13 to 14% is their contribution. Then we have other RRBs, which are contributing another 7 to 8%. So in aggregate, our banker is around 90%. And then we have alternate channels. So we have digital, where we are selling directly to the customers through our website, through our web aggregators. We have brokers, we have DST channel, which is direct sales by our employees in open market. Then we have defense, where we sell to defense forces directly by our employees. And recently we have launched agency. So as a company, we are diversifying. And you will see over a period of time, the contribution from alternate channels will increase, as a result of which the total business will grow, but in terms of percentage of each channel, it may come down. So we are diversifying, and as I mentioned, there's big growth opportunity which is available to us, which is what we are going to capitalize on.
Since September 22nd, we've seen the GST benefit also come in for insurance players as well. What have you actually seen on the ground in this particular point of time? Do you see a lot of people who were on the sidelines, on the fence, coming out post September 22nd and getting that insurance policy? Is that something you've seen on the ground?
Yes, I think it's a very big benefit which the government has extended, and I'm really grateful to the government for making this GST exemption. We are seeing that now products are becoming more affordable. And insurance is a very basic need, and with now the premiums being more affordable, premiums coming down, we see that more and more customers will now go for insurance policies. So we see a huge demand coming for insurance policies from the customers. The market is going to expand. And particularly, we are also going to see huge growth because as we are seeing growth coming from tier 2, tier 3 cities now, with affordability, with GST going away, we see expansion happening in the market.
Well, that was the management of Canara HSBC Life Insurance. The IPO opens on October 10th as well. But Mr. Chokalingam, let me first ask you in context of Trent, would you look at that particular stock given the particular weakness? We've seen a significant correction in the stock price post and I think we spoke about it last week. Would you rather prefer the second-rung companies like V-Mart, V2 Retail, where the growth is expected to be higher going forward?
First of all, on Trent, now it is trading at over 100 PE on a trading earning basis. And as your colleague has covered, the 17% sales growth is a 4-year low for this latest quarter. So if sales is growing at around 17%, I am wondering whether profit can grow at 50%. Then only the trailing P of 100, in my view, can be justified. I doubt very much. And as you mentioned rightly, we have been covering this stock on this channel for quite some time. I've been quite pessimistic. And I believe I would be comfortable to relook at the stock only the stock price goes below 4,000. Otherwise, I would not, recommend a buy. As far as other companies also concerned, I would advise a little caution because all of us know that there is a structural change in terms of e-commerce now slowly eating into the physical stores pie. So therefore, one should be very, very cautious. One should not, miss the link between the valuation and profit growth. So if profit is growing, at least half of the rate at which the P is trading, then only I would consider. Otherwise, I would look at some other sectors and segments instead of looking at the stores businesses.
Right. And it's a fair argument to make, and that's probably the reason why the stock has seen the kind of selling that it has over the course of yesterday and today. The margin for maneuverability for this counter is not very much because the expectations that have been built in are so significant that any disappointments on the downside have a bearing on the stock price. Let's talk about another set of stocks, and this is on the back of business updates. We spoke about that at the start, but something like a Metropolis stood out earlier on in the session. It was gaining quite considerably on the back of the business update that it shared. It has lost a little bit of ground, but it's still holding with gains of about 2%. We've also got Shyam Metallics to talk about. Let's bring in Vansh to talk about those two as well as KRN Heat Exchangers. What stands out about these, Vansh?
Well, thank you for that. So let me start off with Shyam Metallics first. Now the company has reported their Q2 business update and the update has been largely negative. What we have seen is that stainless steel sales have been declining by about 11% on a YOY basis, and the September sales average realization for the stainless steel was up by 8%. And however, for the aluminium foils, we have seen a decline of about 4.1% on a year-on-year basis. And in terms of realizations for aluminium, we have seen an uptick of about 12% at 393,000 metric tons for aluminium segment as well. Moving on to Gabriel, now the company is in a pact to form a JV with a shareholding in the ratio of about 51:49. Now the company would be investing about rupees 29 odd crores in one or more tranches. Now the company intends to carry on their marketing or any type of engine oils through this particular JV as well. Third on my list is Metropolis Healthcare. Now the company has reported their Q2 business update. The update has been largely positive. They have consolidated revenue growth for the company stood at 23%, and the growth has been similar to the Q1 despite lower incidence of seasonal illness as well. Also, if I talk about the core diagnostic operations in terms of margins for this particular segment, we have seen an uptick and we have seen a high single-digit margins for Q2 FY26 versus a low single-digit margins in Q1 FY26 and a break-even in Q4 FY25 as well. Fourth on my list is KRN Heat. Now the company has signed a trade agreement with Spear Refrigeration. Now the agreement is to acquire bus air conditioning divisions of Spear Refrigeration. Now this will further enable the company to expand the product portfolio across transport and mobility cooling segments as well. So these are some of the stocks that remain in focus.
Got it. Okay, let me go across to Mr. Chokalingam on Metropolis, because this is an update that stood out to me in the morning as well. Mr. Chokalingam, specifically on what you make of the fact that their acquisition that they've made, Core Diagnostics, it seems to be now doing well. It broke even in the fourth quarter of last year. In the first quarter, they reported that it had low single-digit margins. It is moved to high single-digit margins now, and they've had a revenue growth of 23% in their opinion, despite the fact that seasonality has not come to their aid this time around. Not many cases of malaria, etc. And so tests to that extent have not been very high. What do you make of this counter? Would you suggest that it's a good one to add to the portfolio?
I agree with you. It's a great company, the way they built the business in the last 5 years. But unfortunately, last 3 years, the consolidated profit is not, the growing impressively to justify around 72p on a trailing basis. And I also believe that, in this kind of a dynamic business, the competition is becoming very big. A lot of small players, mid-sized players are also entering. So I'm wondering whether this current valuation is attractive enough to buy the stock. And I also believe that, till November, December, there is a possibility of valuation contraction for small and mid-cap stocks in general due to liquidity constraint because of IPO selling and FI selling and, a lot of stocks are coming to the open market because lock-in period is expiring in 1 or 2 months. So I would, personally, I may be wrong, but I would not be comfortable in suggesting adding, this kind of stock at the current valuation. Yes, it's a phenomenal quality, no doubt. Maybe if there is at least 5-10% correction, then only one can consider stock like Metropolis.
And that's a fair argument to make. All right, Mr. Chokalingam, do stay with us. We have to slip in a very quick break. On the other side, we'll talk about markets, stocks that are in focus and a lot more. Do stay tuned.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The market's most influential voices. The visionaries who decode the future of wealth. Unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
अरे और रहमान,
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The market.
Welcome back to Profit Buzzers right here on NDTV Profit. We saw, the auto pack largely being in focus today because of the retail sales data that's coming from the regulator body FADA. And what's very interesting is some of the key aspects that they're highlighting across categories. You can see a very strong growth on a YOY basis. Specifically, the two-wheeler as well as the four-wheeler space has seen over a 34 to 35% growth, while the three-wheeler space has also seen almost a 24% growth that's visible on your screen. Construction equipment as a segment, while smaller, has seen a fall essentially of 18%. But when you look at the four-wheeler space as well as tractors, that's up almost 34% and 18% respectively. And that's largely for Navratri is what they've seen in these particular categories. When you also look at the two-wheeler space as a split between rural and urban, you've seen roughly a 6% growth, and that's for the two-wheeler category. But when you look at the four-wheeler space, you've seen a very increased penetration essentially in the rural category. Almost 11% growth is what they've seen for the passenger vehicle space versus a 2.5% growth in the urban markets for the cars. So you've seen rural come back stronger, to say the least. And finally, in terms of market share, I wanted to highlight one key aspect for the passenger car space, because we've largely seen Mahindra and Mahindra being the number 2 player, which is overtaking Hyundai, and there has been the crisscross between those two players. In the month of September though, Tata Motors has for the first time become the number 2 player in terms of retail sales only, and their market share has gone up to 13.75 versus almost 11.5% in the same time last year. And you can see Maruti continuing its leadership, but you've seen a crisscross between those players. Hyundai has actually slipped down to number 4 player in this particular point of time. So very interesting trends shaping up in the retail sales market. But I'm also joined by Gaurav Sharma, who's the Associate VP as well as Head of Research at Globe Capital, and we also have Mr. Chokalingam with us still as well. But Gaurav, let me come to you first. Any of these auto names that you like currently in the stable, and a view on Tata Motors as well, because it has been impacted by JLR and the cyber attack. We just got some update on the bottom of your screen as well that they are starting to restart production. Any view within the auto pack that you like, as well as your view on Tata Motors?
Yes, of course. From the four-wheeler space, M&M remains to be our favorite sweet spot. We have been recommending the same to our clients. So here is a general disclaimer as well that our clients could have a position, as we have initiated a report with a buy rating on this stock. We continue to remain bullish on this stock, and we expect that this stock should be testing much higher levels going forward. As far as the two-wheeler auto space is concerned, Hero MotoCorp is our favorite pick. Again, we have a report on that, so our clients could have a position. So there is a disclaimer for that as well. So these stocks, two stocks are hot favorites from quite some time, and they have been doing well as far as the monthly sales figures are concerned and their overall performance is concerned.
Mr. Chokalingam, I think the last time we spoke, you continued your positive momentum on TVS as well as M&M, if I'm not wrong. Give us a view on Tata Motors as well as anything in the auto ancillary space that you like, because we've seen a lot of individual movers in that space, Gabriel India, Subaru amongst others. Anything that you like in that space as well?
Yeah. So M&M we successfully closed around 3,700, but then subsequently it has corrected. So therefore, I would give buy recommendation on M&M because we retain a target price of 3,700. That's mainly because it has been doing phenomenally well in both automobile as well as in tractor segment, and I believe it will beat its peers in the short to medium term, continue to outperform. And TVS Motor valuation is slightly stretched. At best, one can give hold. As far as component companies are concerned, yes, I looked at the fundamentals of Gabriel. Historically, it has been a fantastic company, excellent management, but current valuations are very, very high. So I find it very difficult to justify. So I would stick to the tire companies. One can continue to hold or even buy all quality tire players because the industry association also has given a very good long-term outlook. In the short term, crude oil price is down about 18-19% from 1 year high. Even the domestic natural rubber price is down 18 to 19% from 1 year high. That's going to give a tremendous boost to the margin for tire companies in the short term. Plus GST rate cut on tires, tractors, passenger vehicles, that is also favorable. And third, the replacement demand is about 70% of the total demand, and the population has been growing in the last 10 years phenomenally within the automobile sector, and that is positive for replacement market. And lastly, the EV also going to add more automobile population. That is also going to be very big positive. So I find among all component businesses, tire, according to me, is the best business for equity investors.
Got the view, Mr. Chokalingam. So tire space is something that he likes, along with his calls which he's mentioned on Mahindra as well as TVS, where he's having a hold call right now. But speaking of Mahindra and Mahindra, the company actually launched the Bolero Classic as well as the Bolero New. And in fact, I got a chance to speak with Nalinikant Golagunta. He's the CEO of the Automotive division. He spoke about the company's outlook going forward and what Bolero means to the Mahindra stable. Listen to what he had to say.
So Bolero Neo, as you know, is one of the sub-brands within our Bolero portfolio. If you look at Bolero as a whole, it's a 25-year-old legacy for us. It's not just an SUV, it's also very much of an identity of India as a whole. And Bolero Neo adds on to that. As the customers have evolved, become more sophisticated, they wanted a vehicle which is a little bit more youthful, has a little more tech features. And really what we have done with this vehicle, with the new launch itself, is we've taken some of the customer feedback in terms of tech, creature comforts, and we've kind of made the value proposition even more attractive and stronger.
So is largely premiumization one of the key strategies that you've had with this particular vehicle, and you seem to be addressing a crowd that wanted those features, and now they'll be getting that because it's largely as an image of a very rural vehicle, but that seems to be not the case with the Neo as well. So is that with the addition of so many new features that you've described in this particular launch, that seems to be addressing a lot of gaps which you might have had or might have in the future?
Yeah, I think not as much as gaps as in evolving customer to that extent.
Yeah.
The customers we have might have a legacy of Bolero, might have had that in the family over a period of time, but they have progressed in life, they're at a different stage, and they want some of these features on top of the goodness of what a Bolero stands for. A body-on-frame vehicle, true blue SUV, tough, rugged, can go anywhere to that extent, yet not compromise on some of the features and tech to that extent. And that's really what is embodied in this product.
Do you also see that, one of the key aspects is the second generation also coming to choosing a Bolero New compared to the father who had the Bolero Classic at that time?
Yeah, no, absolutely. So we see some of that play out as well, which is really a journey in a family that the parents might own the Bolero itself, and to that extent, the name holds a certain value. And there's a value proposition to what that vehicle stands for. Yet, they want something which is a little bit more contemporary and youthful, which is what it is. And that's for us, it's a Bolero family we're talking about, not necessarily one vehicle or the other vehicle.
Well, that was the management of Mahindra and Mahindra. And largely, you saw those flashes coming on the bottom of the screen that, Jaguar and Land Rover has started production back. That's one of the key critical aspects because of because the production was impacted due to a cyber attack that happened at the end of August. They are going to start some of the UK production tomorrow. They've also introduced some financing solutions to JLR suppliers early. That's another key aspect, and because almost 100,000 people were dependent on the supply directly to Jaguar and Land Rover, and hence that was one of the key aspects. Employees will also be returning to its plants in UK tomorrow. That's what the key update is coming in. They've also mentioned that the activity was closed because in all of these plants, largely because of the cyber attack, and they've confirmed that as well. It's just taken almost a month of lost production, and this is the second time that's happening in FY26. So once the company comes out with its results, that will be something to watch, because it was impacting both production as well as the suppliers that it had on its roster as well. So we'll keep getting you more on this story. It's going to be very exclusive. We'll get our colleague Danish to talk more about this as well. But let's also quickly pull up something like a Bharti Hexacom and see what that counter is doing, because it's it's given us some of its gains, still up almost 3% in trade today, and that's largely based on a big brokerage call that came on the particular stock by Axis Capital. They've upgraded the stock. Let's get in with my colleague Somit to give us more details and rationale for this particular upgrade. Somit.
The recent underperformance is the major reason why they have upgraded the account to a buy rating from an earlier rating of add. They have also hiked the target price on Bharti Hexacom to 1,985 from the earlier target price of 1,887. Now they are saying that they have always liked the counter on fundamental basis, but it was largely the fact that the stock was trading at a massive premium compared to what Bharti Airtel India unit operation runs at. That was one of the major reasons why they had never given a buy rating to Bharti Hexacom, but the recent underperformance has led to this upgrade in the rating upgrade. Now, even after this upgrade in rating, they are saying that they are valuing Bharti Hexacom at a slight 5% premium compared to what Bharti Airtel's Indian unit trades at, but that is largely owing to the superior growth, lower capital expenditure intensity, and superior returns, which would compensate for the lower footprint that Bharti Hexacom has in the country. Now, when it comes to the mobile business, they are expecting superior execution with stealthy trends, with healthy trends to continue even going forward. They're expecting the mobile segment EBITDA to grow at a CAGR of nearly 20% over FY25 to FY28. When it comes to broadband segment, they say that it's very small in contribution, but given the fact that the geography in which they operate is under-penetrated, there's larger scope for growth going forward, and they're expecting the home and broadband service segment EBITDA to grow at a CAGR of nearly 35% over FY25 to FY28. The major reason behind this upgrade is the underperformance, and they have also hiked the target price to 1,985 rupees.
Well, thanks for that, Somit. But Mr. Chokalingam, do you have a quick view on Bharti Hexacom?
Definitely, it's a great company, and also all of us know that in telecom sector you hardly have now 4 companies. But the story has played out. I would prefer Bharti Airtel to Bharti Hexacom, because we know the kind of size of Airtel as compared to Hexacom, and relative valuation also, there is more comfort in Bharti Airtel. So I would prefer Bharti Airtel, and I would give a sell call in case it rises, Bharti Hexacom rises from the current level, even another 5-10%.
Got that, Mr. Chokalingam. But we mentioned about Jaguar Land Rover restarting its production. My colleague Danish is now with us to give us more on this. Danish, over to you.
Well, Jaguar Land Rover in a statement today has announced that from Wednesday, that is from 8th of October, the company will be restarting its manufacturing facility in the UK, and initially the particular center that the company will be initially restarting will be the particular center which manufactures engines and other battery-related items. Similarly, on the same day itself, they will also be restarting work at the other facility, which is the paint center and the body shop. So as far as restarting all of this is concerned, JLR will be initially restarting production facilities in the UK first, and once this phase-wise manner restart is done, then they will be restarting its manufacturing facility in Slovakia. And as far as JLR's JLR supplies are concerned, for that the company has announced that initially, as soon as the production restarts, JLR will be offering them cash payment first, and for the other qualified JLR suppliers, they have a different system in place which will be implemented as soon as the production restarts. All in all, if we see almost a month after JLR suffered a cyber incident, things are now getting better for JLR, and from Wednesday 8th October, we will see manufacturing restarting at JLR's facilities in the UK.
Got the view, Danish. Thanks so much for joining in and giving us that perspective. But We spoke and discussed banks with Mr. Chokalingam, and we had Abhay Agarwal. He's the managing director at Piper Serica Advisors, saying that he remains bullish on the banking and financial sector. He also mentioned about RBI's push for easier credit offtake, which will benefit both banks as well as NBFCs. Let's get in this quick view on the same.
We are very optimistic and almost bullish on the banking and financial services space. I think over the last 4 quarters, or probably 6 quarters, 4 to 6 quarters, we saw a cyclical downturn which happened because of overlending, lack of credit offtake, low collection ratios. RBI tougher mandates to do provisioning, which had impact again on the balance sheets. The alpha definitely will be from the smaller banks, especially some SFBs like Ujjivan, Jana, that are expecting a universal banking license soon. Purely for the fact that their valuations haven't recovered, even as the earnings are in sight of being recovery. If you look at the book value multiples, they are about 1 to 1.5 times. So as the earnings improve, I think that there will be both a multiple pickup driven by higher earnings and higher valuation multiple.
Gaurav, do you like anything currently in the banking space which could give some rally in the near term? Because we're also going to start seeing the results coming in. Anything in the short term that traders can buy right now?
Yes, banking and finance space has been among the hot favorites of late, and they have done pretty well, especially from the PSU banking pack. Now we are seeing participation coming in from the private banking pack also. A smaller bank, Federal Bank, looks pretty attractive on chart, currently placed just at below 200 levels. This stock looks pretty much attractive, and I see it heading towards 210, 215 levels in the next couple of weeks. So one can take a long position here, maintaining a stop below 194 levels. It is Federal Bank what I'm talking about.
Okay. Got that, Gaurav. And that's largely been about banks, right? Because the Q2 updates have actually been pretty strong, to say the least, almost a 13 to 16% growth in terms of advances for a lot of players, including the PSU banks. So that's one of the key aspects. But the November MSCI reshuffle is fast approaching, with the announcement expected on 5th of November. My colleague Somit is back with us to give us the crucial details of the key stocks that you need to have on your radar. Somit.
Well, this is the first cut of what are the stocks that could probably get included in the MSCI or get moved out of the MSCI index. Now, for that, firstly, let's understand the timeline here. Now, the cutoff date that MSCI uses to select stocks that could potentially get included in the index or get out of the index is between October 19 to 31st. Now, we do not have any specific date, but any date between this range is something that MSCI will select, and based on that, they will include stocks or remove stocks from the index. Now, the announcement for the same is expected to happen on November 5th. Flows, that is the passive inflows and outflows for the stocks that get included or get removed from the index, will happen on November 24th, and the effective changes will be from November 25th. So firstly, let's look at the stocks that could get included in the MSCI index. Now, based on the share prices currently, Fortis Healthcare has a high probability of getting included in the MSCI index in the November rejig, and if that happens, then the inflows could be anywhere close to $380 million. For GE Vernova TND, again a high probability, $310 million of inflows expected if the stock gets included. Paytm, now that counter was up around 3% in trade yesterday, and because of that, the chances of Paytm getting included in the MSCI index is now very high, and if that happens, then the inflow could be closer to $90 million. For Siemens Energy and Uno Minda, again both these counters have a high probability of getting included, and if they get included, then the inflows could be anywhere between $180 to $210 million in the both counter. Now, when it comes to exclusion side, Container Corp, based on the current market price, has a high probability of getting out of the MSCI index, and if that happens, then the outflow could be around $112 million. While Tata LXZ and Astral, both these counters are sitting on borderlines. If there is a further fall in the share prices on both the counter, then there's a high probability that both these stocks could move out of the MSCI index, and if that happens, then outflows could be anywhere between $115 to $125 million.
Well, thanks so much for that, Somit. But Mr. Chokalingam, let me ask you a quick question on Fortis Healthcare. It's a counter that's been seeing a lot of action. Any view that you have for Fortis as well as in the hospital space? Any topics that you like currently?
Yeah, generally I have a different view because I focus on retail investors. So all these inclusion in the index, whether Morgan Stanley or Sensex and Nifty, definitely it is relevant for institutional investors, particularly passive investors. So I am not, disowning them, their merit. But if you look at the stocks like Fortis or GE Vernova, they are at a peak, and the story has already played out in a very phenomenal way. So since I cater to retail investors, I would try to look at a stock which probably after 6 months or 2 years can join this index. So therefore, my focus would be more on the stock like a Voltam Transformer, which is corrected a lot, and it's a phenomenal stock in terms of balance sheet, track record, all that. And similarly, in the hospital segment, we have a buy rating on Shelby Limited. This has failed to perform in the last 6 years ever since it came out with IPO. But I think now time has come. If you look at the FDI, 50% of the FDI within the healthcare is going to hospital sector. And kind of valuation, if you look at the enterprise value per bed, Shelby is the cheapest. So therefore, these are the two stocks I would suggest for retail investors. Among all the stocks I have mentioned, we are personally invested in Shelby.
Got that, Mr. Chokalingam. But, Mr. Chokalingam as well as Gaurav, thanks so much for joining in, giving us perspective across a bunch of stock spaces as well as sectors. And viewers, we wanted to get a key story as well, which is, fast growing in this particular space. And Vishy will be joining us for that. And that's largely on essentially the Tata Sons. Now, the government is actually stepping in to help diffuse tensions within the Tata Group, even as the divisions deepen between key members of the Tata Trust board. Now, sources tell us that top Tata representatives led by Noel Tata are expected to meet with the senior government ministers to avoid a possible public listing of Tata Sons. My colleague Vishwanath joining in with all those details.
Right, so there is a big boardroom battle that is playing out at Tata Group. Of course, it's one of the most storied corporate houses of India. And what we understand from sources is that this boardroom strife has caught the attention of ministers in Delhi. And representatives from the Tata Group, led by Noel Tata, will be meeting two senior ministers in Delhi, and they will be discussing the way forward for this boardroom strife to come down. Now, let's give you a little bit of context about what exactly is happening at Tata Group. So Tata Trust, which is a group of two charitable trusts which also control considerable stake in Tata Sons, the investment arm of the Tata Group. There you've got a two-camp system that is developed. One is a Noel Tata camp and the other is a Mistry camp. And both these camps are currently at loggerheads. Essentially, the Mistry camp believes that the Tata camp has been making decisions without keeping them in the loop. And these decisions mean strategic movements happening at Tata Sons, which is not something that they're okay with, and they've been opposing it quite strongly. On the other hand, the Tata camp believes that they have followed all necessary rules that are in place, and they're acting only in the best interest of all the shareholders involved, most of which is Tata Trust with a 66% stake in Tata Sons. Now, because of this fight, what we've seen is that Vijay Singh, who's a long-term Tata Group confidant and also a former defense secretary, he had to leave the Tata Sons board. That was because of a meeting that happened last month where things got very heated between the two camps. And of course, that led to Vijay Singh's exit. And this has led to a lot of chatter outside in the market about this boardroom strife. We are calling it, of course, the Tata versus Mistry 2.0 here, because a few years ago, if you remember, there was a fight between Cyrus Mistry and Ratan Tata, which had led to similar sort of concerns about the Tata Group facing some amount of boardroom strife, some amount of disagreements, which were causing difficulty within Tata Group companies. Now, one of the few things that will be discussed at this meeting with the ministers is also about Tata Sons listing. Remember that Tata Sons does not want to list. However, the Reserve Bank of India back in September 2022 had placed Tata Sons on the list of upper layer NBFCs. These upper layer NBFCs were mandatorily required to list within 3 years of having been listed. So September 2025 would have been the deadline by which they would have had to list. which they have not done yet. So the deadline has passed. Tata Sons on its part says that they have already repaid all the debt and they've applied to the Reserve Bank of India for cancellation of the certificate of registration to be classified as a core investment company. This core investment company tag is the reason why it is an upper layer NBFC. The RBI has confirmed that it has received this application for a cancellation of registration. However, a decision has not been taken yet. The RBI also wants an amicable solution to this whole problem. We need to see whether the RBI accepts Tata Sons' application to be removed from the CIC or the core investment company list.
Well, that was the key story that my colleague Vishwanath was bringing in as well. So thanks so much for that, Vishy. But with that, viewers, that's all the time we have on this edition of Profit Buzzers. Stay tuned to NDTV Profit for more. Small Cap Buzzers comes up next.
ट्यूबवेल में जल ताकि खेतों में चले हल तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
ट्यूबवेल में जल ताकि खेतों में चले हल तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The market's most influential voices. The visionaries who decode the future of wealth. Unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं द बेस्ट।
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar. Well, if you look at the markets, fourth straight day of gains, markets are up around 116 points in trade today, comfortably above the 25,100 level. In fact, at one point of time, we were also above the 25,200 level. When you look at the Nifty Bank Index, that's up close to 340, 350 points in trade, comfortably above the 56,400 level. If you look at the sectoral indices, Nifty Media, that has declined the most, followed by Nifty FMCG and Nifty PSU Bank. In fact, if you look at the Nifty PSU Bank Index, it's been we are seeing some profit booking here, but despite the downtick that is there in the Nifty PSU Bank Index, the Nifty Bank Index that has been gaining now for the sixth trading session. It's also one of the top sectoral gainers, up around 0.6%, followed by Nifty Realty, which is up 0.5%, Nifty Auto up around 0.4% in trade. When you look at the Nifty 50 indices, the top gainer on the trade today is Bharti Airtel. It's up around 2%. There was a positive note that had come in from Jefferies, followed by Geo Finance and Aisha. On the losing side, it's Trent, down around 2% in trade, and this is after the company yesterday reported a disappointing set of growth number. In fact, they are seeing their growth in the second quarter at around 17%, which is the lowest that we have seen in the last 18 quarters. So that's broadly how the market has been trading. But today we also had a listing, Fabtech company. It was a muted set of listing. We did speak with the management. Let's listen to what they had to say.
Want to understand the overall business outlook. You've with the fresh issue proceeds in mind now, you'll be eyeing some inorganic opportunities. Just want to get an overall sense in terms of the outlook ahead.
Thank you very much for having us. Thank you very much, the investors, and the confidence in us. We are a start to finish company headquartered in India, but operating internationally, especially in the farm emerging markets of Middle East, Persian Gulf, MENA, and Maghrebian country, and the continent of Africa, which is just exploding with opportunities now. We are manufacturers of process, air, and critical water equipment. The market is beautiful. We are developing a very beautiful traction. After COVID, the medicinal independence is the buzzword in these markets, which is helping us help these countries build pharma capabilities and pharma businesses. And as you know, post-COVID also, there are a series of ailments which are emerging, respiratory ailments, renal disorders, brain fogs, cancer is on the rise. And these are prompting a huge fund flow in these geographies, helping us build our business. We operate largely from India, but we are a transnational company. We have a very beautiful base in the UAE. We are local now in Saudi. We have presence in Africa in a very beautiful way. The conversion ratios, however, remain between 7 to 10% of the leads that we generate. And these markets are largely Western dominated, and the Europeans have a very beautiful role to play here. And we realize that if we acquire a European image, we can increase our conversion ratios from currently 7 to 10% to 17 to 20% going forward. And hence, we are now closely in discussions with a European company to have them in our fold. Besides this, there is localization in Saudi Arabia, which is happening, and it's a fast-growing pharma economy in the world.
Right.
We are present there locally and also in the UAE.
Right. Mr. Khan, just want to understand, you spoke about the 7 to 10% of conversion rate. This you expect to go up to 17 to 20%. What's the kind of timeline in which we can expect this to happen?
output. So as you see, the traction is already building. 31st of July, when we went into the listing, we were at 900 crores. Today, we are sitting at 1100 plus crores. And there are more such big tickets which are coming up. When we acquire the European entity, it should be between 6 to 9 months. However, we are already seeing the conversion ratios inching up. But this inching up, we are not very content with. We aim to increase it to 17 to 20%. So between 7 to 9 months, we should see the acquisition going through.
Okay, perfect. Mr. Singh, coming to you, FY24, we've seen about a healthy growth in terms of revenue. 44% is kind of number that we are looking at. However, if you look at the margin profile in the last 3 fiscals, there has been a downtick that we've noticed. So just want to get an idea in terms of the margin profile as well as the sustainable revenue growth forward.
Sure. Thank you very much. First of all, thanks to all investors and having that belief for the Fabtech business fundamentals. Our revenue growth is pretty good, and exponentially when we are increasing. Our EBITDA margin generally ranges from 13 to 14, 15%, and the PAT margins ranges from 10 to 11%. These margins are going to grow the moment we add our revenues, So definitely we are looking at the order bank today. What we have, 1100 crore, is a very big amount. Numbers, and when we convert these orders into the revenue, the PAT margin and EBITDA will definitely improve.
Okay, so what's the kind of order book pipeline that you have in mind for this FY26 as well as FY27, and what's the execution period like?
So actually, just to cover the risk, geographical and political, we are operating more than 60-65 countries. Right now, order bank position, what we have today is around 1100 crore orders. And the duration, what we anticipate for the small ticket item and the big ticket item, it ranges from 12 months to 30 months. So this will be the execution period for having these open orders into the revenue.
Okay. Mr. Khan, coming to the overall cash flow side of the picture, fresh proceeds are to be utilized towards the working capital requirements. So just want to get a sense in terms of how, whether, we can expect an improvement in terms of the cash flows are also going forward. What's the kind of strategy that you're building on?
So the right deployment of funds is extremely important for any company going forward. And we have just identified high growth opportunities for us where we would be deploying the proceeds. The cash flows, though a project company, we behave like a product company, and most of the orders are backed with very beautiful advances and LCs. So the payments are largely secure. Earlier, the challenge used to be the timeline with these countries used to take to execute the projects. But right now, with speed as the main essence, we expect the orders to be wrapped up quickly and the cash flows improving. And besides this, our localization attempts will also help us improve the cash flows by expediting the timelines. When you're local, the project's movement really happens fast. We are local in the UAE, we are local in Saudi, we are local in Africa now going to be. So those are going to help us immensely in the cash flows going forward.
Lancelot, coming to you on this new listing, Fabtech, have you tracked this counter? It has seen a muted listing. The stock is down 5%. Do you see value for investors to buy this counter now?
So it is a very interesting company because, you have seen that they have been able to execute a good amount of orders in the Middle East, the other countries. And because of the expertise that they have, they seem to be also getting more orders. Our valuations are a little bit on the higher side. It trades at around times trailing earnings. And given that, while the order book may grow, the sustainability of this growth over a longer period of time, like say 3 to 5 years, is where the challenge lies. So I think, it's probably wait for a while and pick up the stock, when the trade sort of corrects to a reasonable multiple, because 40 is a very high multiple.
Valuation coming in as a concern for pace for this company, newly listed company, Fabtech. But moving on and focusing on the small cap buzzers today. Firstly, it's Pace Digitech. Now, it's an interesting counter. The stock listed yesterday. Arihant has come out with a note where it suggests a return potential of 78%. The target price that they have set for this counter is 385, and yesterday Morgan Stanley also bought shares from the open market post-listing. Let's get in Varsha with more details on Pace Digitech.
Well, thank you so much for that. So yes, the company is trading at a volume of almost 0.13x of its 30-day average. And as you rightly said, we do have a bulk deal update wherein Morgan Stanley has bought almost 12 lakh shares, which indicates a strong institutional confidence in the company. But talking about the growth prospects when it comes to Pace Digitech, one is the BESS system. But what this company do, they offers telecom infrastructure solutions, and they operate 3 plants with 2.5 lakh square feet capacity, and they're entering into BESS, that is battery energy storage system, which is the next leg of growth for the company. Talking about the growth drivers and sticking to BESS, wherein 25 plus gigawatt BESS tenders have been announced in India, and there's a mandatory BESS use when it comes to renewable and hybrid projects, and local manufacturing and EPC strength will also support policy-led growth. And the 5 gigawatt Bangalore facility by this company, wherein they've invested 130 crore of capex, could take revenue potential of has a revenue potential of around 3,200 crore in the medium term. And in fact, company has also said that in the next few years they want to have 50% of contribution to the overall revenue from BESS. So overall, if you see that they're strongly placed to capture rising BESS market share. So overall, the next leg of growth for Pace Digitech is of course battery energy storage system, and hence why Arihant has given a note on this.
Lancelot, did you look into this counter which listed yesterday, Pace Digitech? The battery energy storage system seems to have a big upside for this company.
Yeah, I would agree with you, that battery systems are becoming key, especially with, a lot more, data warehouses being set up and various, server farms, and with more and more people going on the cloud, you are requiring a huge amount of battery supply backups to be provided. But at the same time, it's also a very competitive space. There are a lot of players who are offering, similar and similar systems, and that is why, you see it's on a PAT basis, it's a low margin business, although volumes may be high. So critical to see how how these companies face up when competition increases and there is maybe a slowdown in demand. That critical period to watch out for this company.
Right. KRN Heat Exchanger is the stock that we are focusing today. If you look at the last 1 year chart, the stock prices have jumped nearly 100% in trade. Now that's literally doubled. Now, if you look at the outlook for KRN Heat, they're expecting the full scale benefit of revenue and margins to start coming in from the third quarter, that is in the second half of this financial year. They expect exports to contribute nearly 60% to the top line over the next 3 years. Margins are expected to increase by nearly 100 to 200 basis points YOY in FY27. And if you look at the group tax structure, that is also expected to decline to around 20% over the next 2 to 3 years. So multiple trigger points that could come in for KRN Heat Exchange going forward. We'll be joined by Puneet right now here to give more details. Right, okay, Puneet is still not joined us. But if you look at the geographic breakup for FY25, the domestic segment contributes nearly 84% to the top line, while exports, they're getting around 16%. Now, in the first quarter, there was a big downtick in the margins, and that's the reason why the stock was under pressure. It was down by around 320 basis points. From 18.5, it had come down to 15.3%. Now, what led to the margin downtick? It was lower than expected revenue and sharp jump in employee costs and other expenses. But that could turn around given the fact that management is expecting the margins to expand to around 100 to 200 basis points by FY27. Well, Lancelot, have you tracked a KRN Heat at the current price level? Do you think the valuations are attractive for any investor to get into this counter?
So I think it's, this company is in the refrigeration and the heat exchanger business, which is basically means they many of the OEMs as well. And like any other corporate supplier, it definitely will will have a low margin and a business model. So from a perspective that, the valuations are looking a little bit expensive, even at the, after the current correction. So maybe a good time to wait for a, then when the price corrects, then you would get it more at a better.
Poshak, the stock was up 9% in trade.
Talking about Poshak, if I were to talk about, this is the second consecutive day wherein the stock is down. The stock is down almost 8% as of today. The trading volume, if you see, is the volume is trading at 3x of its 30-day average. While yesterday company did a lot, bonus shares in 3:1 ratio. Talking about this company, what does this company do? They make phosgene gas-based derivatives. Phosgene is nothing but a very dangerous gas, and they make derivatives out of this gas which are used in your pharma, in your agro. In fact, this was a chemical, this was also used as a chemical warfare in World War I. Now, the growth triggers for this company is, one is this segment is a very high entry barrier segment, because you have to take approval from government to make or to use that phosgene gas to make the derivative. So one positive point over here. Plus, company will also benefit from China Plus One strategies with pharma and agro exports, and custom synthesis ramp up for the new API is also one of the growth triggers that the company has. But talking about the risk over here, because they are very much dependent on the volatile pharma and agro segment. Number one, the top 10 clients, if you see, contributes 55% to the overall revenue, which is the other risk that the company faces. Also, because most of the revenue comes from exports, so company do face a forex risk and slowdown in generic demand, and also competition from low-cost Asian markets are some of the other risks that the company faces. So overall, yes, the growth prospects does look brighter for this company, but you do have to look out for the certain risks that the company has.
Lancelot, have you tracked this counter Poshak? It was up yesterday in trade 9% odd. Volumes have been quite astonishing in this counter. It was up 9x compared to its 30-day average.
So I think the has been doing well, and if its financials for June, it had 55 crores of revenue and 12 crores of with a profit margin of around 21%. It will depend upon the global scenario as far as China and what kind of price will put for the chemicals which are competing with them. And if you look at the stock, even at the current price, it still trades at a price earning multiple of 40 times its earnings. So given that background, it still looks pretty expensive. One should wait for some correction and then look at it.
Moving on, Ramke Infra is another counter that remains in focus. The stock was almost hitting a 20% upper circuit in trade today. Volumes, if you look at it, it's nearly 70 times its 20-day average. Let's get in Vanch with what could be the reason behind this move in Ramke Infra.
Yes, thank you for that. So let me firstly start off with the recent developments for this particular counter. Firstly, it's the Shravnath Raipudi that has been appointed as the CFO of the company, and the Sunil Nair has been appointed as the CEO of the company effectively from 1st of October. Also, company recently got an order worth rupees 2,085 odd crores. Now, the contract was to supply Godavari water to Hyderabad, and the contract is in relation to the Godavari drinking water supply scheme as well. Also, if I talk about the execution timeline for the same was 2 years, and the order was followed by 10 years of operation and maintenance for this particular thing as well. Also, in terms of order book, the order book of the company stands at about 7,600 odd crores as of Q1 FY26. If I talk about the details of the business of the company is engaged in the business of construction, infrastructure and management as well. If I talk about some of the business verticals, they are engaged in construction of buildings, management of urban solutions, water and wastewater and industrial solutions as well. Lastly, if I talk about the Q1 FY26 financials, what really stood out was a net profit that was up 8% at 77 odd crores versus 71 odd crores as well. So this is how the overall picture is panning out for this particular account as well.
Right, that was Vanch on Ramke Infra, but multiple stocks that remain in focus
on the back of the MSCI reshuffle that will happen in November 2025. But one needs to understand the fact here that this is just a first cut and the exact list will be out on November 5th. But before that, let's understand how the timeline works here. October 19 to October 31st is the cutoff period that has been set by MSCI. So any date between this range is something that MSCI will select, and the stock, depending on the share price, will either get included or will be excluded from the MSCI index. So October 19 to October 31st is the cutoff period. Announcement date is November 5th. Inflows or outflows, that is the passive inflows and outflows, will happen on November 24th, and these changes will be effective from November 25th. So based on the current share prices, let's look at the stocks that could get included in the MSCI index. Firstly, it's Fortis Healthcare. It has a high probability of getting included in the MSCI index, and if it does happen, then the inflows could be anywhere close to $380 million. GE Vernova, if the stock gets included, again a high probability stock, could see an inflow of close to $310 million. Paytm, the stock was buzzing in trade yesterday, and this could be the reason behind this up move. And after yesterday's up move, again it has a high probability of getting included in the MSCI index, and if that happens, could see an inflow of close to $290 million. Siemens Energy and Uno Minda, both these counters again have a high probability, and if they get included, flow could be anywhere between $180 to $210 million. Now when it comes to exclusion side, Container Corp has a high probability of getting out of the MSCI index, and if that happens, outflow could be close to $112 million, while Astral and Tata Elxsi, both these counters are on the borderline, which means that if there is a further fall in the share prices from the current levels, then there is a high probability of both these counters moving out of the MSCI index, and if that happens, then outflow could be anywhere between $115 to $125 million. Again, this is just a first cut estimate. The exact list will be known before or after October 31st. So keep an eye out for multiple stocks that remain in focus on the back of the MSCI move. Well, that's all we had in today's edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
The market's most influential voices. The visionaries who decode the future of wealth. Unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है। ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The market's most influential voices. The visionaries who decode the future of wealth. Unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
रहमान सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome, you're watching India Market Close here at NDTV Profit. I'm Mahima Vachajani, with me is Neeraj Shah and Hiral Daria. Let's take a quick look as to how the markets are doing. Well, Nifty 50 trading at its high point in the day today, touching that 25,200 levels, up 0.5% as we speak. The Nifty Bank also seeing gains of about 0.7%. So Good rally in terms of where the benchmarks are concerned. Let's try to pull up the Nifty 50 heat map and see as to what counters are doing in trade. Bharti Airtel leading that chart, up 2%, followed by Jio Finance, HDFC Bank, HCL Tech, Eicher Motors, Reliance. So it's a mixed bag of counters that are fairly doing well in trade today and keeping the Nifty in check. But counters like Trent, post its Q2 update that came in the last business hours yesterday, down 2% because of slowing of growth is what we've seen. Tata Motors also seeing some bit of pressure, down 1.7%. Axis Bank, Tata Consumer, HDFC Life, Hindalco, some counters in the red on the Nifty 50. Let's try to pull up the sectoral heat map and see as to what the sectors are actually doing. Well, your Nifty IT, Nifty Metal slightly in the red, almost flat. But the PSU Bank has now slipped into the red, down by about 0.1%. FMCG has also slipped into the red, down by about 0.2%, largely because of counters like Tata Consumer and Dabur. There's Nifty Media, which is seeing pressure. Nifty Defense also seeing some bit of pressure, down by about 0.4%. But something that's doing well is your Nifty Oil and Gas, up about 0.9%, followed by Nifty Finance, Nifty Realty in the green today, up 0.7%. Nifty Bank also, as we discussed, is up around 0.6%. But let's try to pull up the advanced decline ratio because that will give us a picture as to how the broader markets are doing. We were in the green at around 10:30, 11 odd AM, but then the tides did turn and now there are more declines versus that of advances right now. 12, almost 1,300 odd declines versus 1,000 odd advances in the broader end of spectrum. So that's giving a cue as to how the mid cap and the small cap 250 is also doing, right, Neeraj?
Yes, it is. I mean, I must say, I mean, the broader markets is a bit like how the IT index is today. In some sense, a bit quiet. I mean, if you leave out RHI Magnesita, Vodafone is up 7%, and then everything else is less than 5% on the Nifty 500 on the gaining side. So Vodafone, DOMS, IGL, Divi's Labs, Surma, Newland. If at all there is a pattern, that is around the CDMO companies. And I think this has to do with the fact that Roche, Eli Lilly, etc. are all investing into India. So that's part one. On the losing side, right, you see a KIOCL, Tata Investment, but then the list of names, Happiest Minds, Shyam Metallics, etc. are all kind of muted. So not really gangbuster moves at the broader end of the spectrum, but it is the season of IPOs. And I think Hiral, Mahima and me look forward to talking to two companies where the IPOs open and might be of great interest to all of you who might be wanting to take a decision on whether or not to subscribe to these. So let's start with the first one. And Mahima, toss it back at you for the mega LG Electronics IPO. Tell us all about it.
It's 25 years since we've not seen a consumer durable IPO, and LG Electronics opens today and ends on 9th of October. It's roughly 11,600 crore IPO that we're going to see. The price band is set between 1,080 to 1,140. It's completely an offer for sale. Around 15% is what we're seeing, in terms of parent company selling off their stake. So that's with regards to where the parent company is looking to divest. Of course, just a brief about the company. Everybody knows the brand per se. It's the second largest player in India in terms of home appliances and consumer durables. In home appliances includes your refrigerators, washing machines, air conditioners, microwaves. In the consumer electric space, there includes televisions, home entertainment systems and audio devices. And even in terms of smart devices, they have counters like smartphones, smart TVs and IoT-enabled products as well. In terms of where the financials are concerned, well, the company has seen a decent growth in terms of revenue. 13% 3-year CAGR is what we are looking at. EBITDA and net profit has seen a 3-year CAGR of 22%. The margins have significantly improved. FY24, it's at around 10.4% versus that of 12.8% in FY25. With regards to where the overall picture in terms of valuation is concerned, the market cap at upper band is around 77,380 crores. And if you take a look at the three scenarios in terms of the valuation, of course this is the valuation at the upper band, but if you take a look at the three scenarios in terms of how growth could be going forward, and then take a look at the PE, at a 15% we can garner a PE of 30 times in terms of the PE, 20% at 29 times and 25% around 28 times, and this is largely in line with where the peers are also trading at with regards to Blue Star, Havells, Voltas, LG India. So valuation wise it is fairly valued at present.
And this is something that the analysts also believe. This is with regards to the other players like Whirlpool, Crompton, Samsung, etc. So in terms of valuations, fairly priced, and even in terms of subscription, we are seeing good subscription numbers coming in as well for LG Electronics.
Right. Thank you so much for that, Mahima. In fact, we'll get in the management of LG Electronics. We have Mr. Atul Khanna, Chief Accounts Officer at LG Electronics, who's joining us on the show as well. And with him, we have Sanjay Chitkara, Chief Sales Officer at LG Electronics. Welcome to the show, gentlemen, and always a pleasure to speak to you both. My first question coming to you is, so far it's day one of the IPO. I know we've spoken about earlier as well in terms of how are you going to use the funds, etc. But from here on, what is the vision that LG Electronics is sitting on if you have to look at the next 3 years, taking into consideration the fundraise that you're doing, the kind of leadership that you already hold? So where from here on?
So see, this IPO will strengthen our ability to invest more in newer technologies, manufacturing and customer services, so that we can offer a better new products to our customers and a better customer experience. So in future, maybe customer can see better products and services, while our shareholders will grow with our share value. So I think this is a win-win outcome for everyone, including LG Electronics.
Sanjay Chitkara, Chief Sales Officer, is also with us. And Sanjay, it must be a good stand to take when you come out for an IPO wherein you are in the leadership category across a bunch of consumer durable products. And now with this GST cut coming in, the timing couldn't be better. How do you forecast or how do you foresee the immediacy of revenue growth for you? And then we'll, of course, talk about the longer term as well.
See, we are very excited with this GST cut, and it's a direct enabler for our business, and it has improved the affordability of the product. With this, a brand like LG is more beneficiary because we have a better opportunity to cross-sell. Because if a consumer is coming to the store with a limited budget, now he has more money to buy some other products also. So we are trying to bundle it with other products like sound bars, with TVs. Similarly, we are also getting a trend of upgrade of the product. Like consumers are upgrading their product. A 55 inch is upgrading to 65 inch. A 300-liter refrigerator is upgrading to 400 liters. So such upgradation is happening.
Yeah. Okay. Just a follow-up question to that, Sanjay. That the domestic demand looks strong. I'm still looking for what do you believe could be the kind of revenue growth that could come into sales or a volume growth that could come in. But part two of my question added to that is that most notes say that from a 6% kind of share of exports in FY25, you are possibly looking at about 10 to 15% kind of export share by FY30. So what's the domestic volume growth likely to be near term, medium term? And export growing to 15%, I'm guessing that means that domestics will grow, but exports will grow faster.
Yeah. So if we see, before coming to LG's growth strategy, India is growing. And for our TAM, which is $41 billion currently, it's growing with 14% CAGR growth, and it will become $73 billion by 2029. So there is a 14% CAGR growth, and LG would definitely try to surpass this growth rate because we have very strong growth strategies, scaling of our B2B business, service business through annual maintenance contract, and we are planning to introduce many new products and missing categories. In future, export is also is a focused area. Currently, our export is 5%. Revenue terms, it is $160 million. We are exporting to Southeast Asia, Middle East, and African countries, 45 countries. So last year, over previous financial year, this year we grew by 45% in our export. But we will definitely add newer geographies for our export portfolio and new product category. Currently, our export is limiting to medium range product, that is refrigerator, washing machine and compressor. But recently in 2023, we started manufacturing premium product in our Pune plant, like side-by-side refrigerator, OLED TV. For a developed nations and major economies, the premium product consumption is more. So this will definitely open new door for exports horizon. Our current factory is near to Western Coast, this Pune plant. We have very thoughtfully chosen Shri City, which is much near to Eastern Coast. By this way, we have covered both the coast of India and we have also overcome the logistic barrier.
Mr. Khanna, hi, Mahima this side. Just want to understand one thing from an accounting perspective. You, correct me if I'm wrong here, you have a tax litigation of around 4,700 crore, for which my understanding is that the cash balance is enough to cover that. But just to give investors a perspective, what is this tax litigation regarding? And according to you, what are the chances of being, the outcome being in your favor?
As you rightly mentioned that there is a 4,700 crores of litigations which is ongoing. It includes all show cause notices as well. And these all, we should not compare the litigation worth of value with our cash balance, because in last 28 years, we never particularly paid any such demand, and we have won all our cases based on the technical and merits based from either direct tax as well as from the indirect taxes as well. So, and all these cases that are going on are also particularly, we have won either at the first level of appeals or at the tribunal level. So we are not forcing any such probability of losing any such case. So we are confident that it would be all, with the pace of time, it would be all diluted over a period of time.
So, Mr. Khanna, so what you're trying to say right now is that this is something which you're confident of, that you will win this litigation. There will be no tax demand which you will have to pay in terms of the 4,700 odd crores.
Right. All our cases by each year, we have a good merits cases where we can win all those litigations without any demand.
And my additional question to you is, because everyone's talking about the opportunities and everything that LG is sitting on. Another weakness that brokerages are highlighting is the dependence on promoters, specifically when it comes to royalty obligations as well. FY25, you paid around 455 odd crores. What is the outlook looking like when you talk about royalty? Do you see that reducing over time? How is that entire structure going to pan out from here on?
So we need to understand why one pay royalty, because royalty is being paid for usage of brand as well as the usage of the technical know-how and the innovative R&D products, being provided by our parent. They have all platforms. We have Indian consumer insights. We share with them, they develop the product, we test it, and then we introduce it to the market. Based on that, we are paying the royalty to our parent on domestically produced goods. And by that way, we are paying our royalty rate, expense rate is 1.9% odd to our total revenue. And we are not forcing any such change, framework change in the going forward period. And changing the royalty framework is also not so easy. It depends on a lot of transfer pricing adjustments as well as tax regulations comes into the picture. So we have just settled it down, particularly 2 years back. And we are not forcing any such change in the royalty rate going forward. And we cannot call it as that it is a dependency, because parent has invested in the beginning 28 years ago, right? So particularly when they have seen that India is a market where one can invest and bring on all innovative products for the Indian consumers. And year on year, we are introducing a lot of new technologies and giving them a lot of other good products, innovative products, energy efficient products. So for that only we are paying royalty to them.
I was trying the conversation earlier, just a quick follow-up. Some idea of the growth rates that you guys envisage. I mean, for an investor to put in capital into your business, some inclination or some idea of what the growth rate could be.
See, our previous CAGR growth is 10.7%. And we will definitely, being a sales leader, I mean, it would be my best efforts, and we'll put all energy to surpass that previous CAGR growth rate. I mean, that would be our definitely the effort. And the way the things are favorable, the GST cut, IT relief, all these things have provided a more disposable income to consumers. And lastly, our products are just basics and are very highly underpenetrated. We are not selling luxuries, and these products are needed to make daily life easy. So that demand of this, our products will definitely grow, and will definitely try to surpass our previous growth rate.
Sanjay, so just before we wrap up, I must compliment you guys on the pricing, right? Because everybody's talking about how well priced the issue is. But if you're citing a 10.7% CAGR of the past, 10 years, then you are under-promising, because the last 3 years you've grown much faster. 13% as I'm told on the revenue side, over 20% on the PAT side. Are you telling us you will grow lower than that?
No, not at all.
Not at all, okay.
Not at all.
Because you said you will cross 10%, so hence I'm asking, yeah?
See,
So our growth rate
whatever we promised.
fiscal years is,
Yeah, please, Atul. Yeah.
So our growth rate, which Sanjay ji explained, is since last 3 fiscal years, our CAGR growth rate is 10.7%, right?
Okay.
And so
maybe our numbers are wrong.
Surpass this number.
Okay.
Fiscal year 23 to fiscal year 25, our growth rate is 10.7% CAGR. So our endeavor as well as vision is to cross this number.
Fair call.
Each year.
Okay. Maybe I've erred a little bit on my math, but be that as it may, I'll take your number for it. You know your company best. So you'll grow more than what you've done, or at least try to match those numbers, which is good to know. But all the best for the IPO and the outlook ahead. Thank you so much, gentlemen, for taking the time out and being with us.
Thank you. Thank you very much.
Thank you. Thank you very much. Thank you.
That's LG. We'll strive to grow at the same pace or better than what the numbers for the last 3 years have been. And exports will probably grow more relative to what they have done in the past. 6% current share, I think growing up to 10 to 15%. Okay, so that was one consumer IPO. Now we move tracks to a completely different kind of a company. Anantam Highways. And for lack of any better, lack of a descriptive word, it is an InvIT. If you understand an InvIT, viewers, and we've done multiple shows around it, you would know what Anantam Highways is into. But let's get the management to try and talk about what the company is about and why should an investor subscribe to this IPO. Jignesh Shah, Director and CEO of Anantam Highways, with us in our studios. Jignesh, great having you. Thanks for joining in.
Thank you for having me.
Now the pleasure is ours. Tell us a bit about your company.
So Anantam Highways is an InvIT. It's an infrastructure investment trust. And essentially for people who don't understand InvITs, I would like to kind of describe what an InvIT is.
Please go ahead.
It's essentially a trust structure like a mutual fund, but in an InvIT you acquire infrastructure assets. And then you offer units to investors in the market, and then you keep on acquiring additional assets. So essentially InvITs are yield plays, and then you overlay growth on top of the InvITs to create a consistent revenue stream for investors.
Okay. What is the purpose for this IPO, and would the proceeds be used for, I'm guessing it's entirely a fresh issue.
It's entirely a fresh issue.
Okay. And the purpose of the IPO?
The IPO proceeds are primarily going to be used for deleveraging purposes, leaving aside some for the issue expenses.
Okay.
Okay. So from a business perspective, one aspect is your deleveraging. The other aspect is the kind of predictability that you have on the revenue and the counterparty risk that you may face, because that becomes absolutely important when you're talking about annuity payment delays, the concession performance. How is that placed? Because clearly you're doing a potential 3 to 6 month delay in annuities usually.
Good question. So maybe I'll just take a minute to tell you about how differentiated our business model is. So InvITs basically you have a combination of pure investment management, and then you combine it with deep operating expertise, because you're acquiring assets which are going to be there for the long term. Now what we have done is that we put together a combination of, on one end there is Alpha Alternatives, who's a sponsor. Great investment management skills. We understand corporate governance. We understand how to optimize cash flows. But then we've combined that with the operations and execution excellence of Dilip Bilkon, one of the best EPC companies in the country, right? And our view is that, when you are managing real assets, that expertise which a company like Dilip Buildcon can bring to the table is unparalleled, right?
Okay.
So you mentioned annuity delays. The track record of Dilip Buildcon is otherwise. All of their projects basically receive annuities on or before time. And that is how we are looking to differentiate ourselves in the marketplace. The idea is that you do a great job on operations and maintenance, which we are very confident that Dilip Buildcon will do. And the best part is that Dilip Buildcon is also going to be a pretty large unit holder in the InvIT.
Okay.
So we believe that that's an additional bonus because there's a complete alignment of interest, from a long-term unit holder interest management perspective.
Okay, so if you could just elaborate between Dilip Buildcon and your company, who's got what skin in the game?
So the InvIT is going to be managed by Alpha Alternatives.
Okay.
The sponsor, investment manager and project manager, which are the three stakeholders to the InvIT, are all Alpha Alternatives owned entities, 100% owned by Alpha Alternatives. The management of the InvIT is entirely Alpha Alternatives. The board today basically consists of 3 representatives from Alpha Alternatives and 3 independent directors. By the way, we have a phenomenal board as well. The operations and maintenance activity, the technical backend, will be provided by Dilip Buildcon, and they will be a large unit holder in the InvIT, exercising their rights as a unit holder.
So post IPO, what are the stakes for each side?
See, pre-IPO, the shareholding is 54% Dilip Buildcon, 46% Alpha Alternatives. We're getting diluted roughly by around 18%. So post the InvIT formation transaction, Dilip Buildcon will be roughly at around 44%, Alpha Alternatives 38%, and the balance public.
Enough skin in the game. Mahima?
So, since we were talking about Dilip Buildcon, just want to understand, you have identified new assets, right, that you might going forward expand into. Right now, the entire 400 crores that you're doing is going to be used almost entirely for debt repayment.
Yes.
So then further expansion, how are you planning to fund that, and what are the timelines that you have in mind?
We're starting off the InvIT with 7 completed HAM assets, residual life of around 13 years. So we clearly have longevity, predictability of cash flows. In addition to this, we have right of first offer arrangements with both Dilip Buildcon and Alpha Alternatives manages a very large road sector fund called the Build India Infrastructure Fund. Dilip Buildcon has 11 identified HAM assets, some of which are completed, some of which are under construction, but there is visibility of them coming into the InvIT, all of them, by between March to June 27. They will keep on coming in stages, but June 27 is the outer timeline.
So you're saying this is the acquisition visibility and timeline for the 11 plus assets,
of
and these are the, if I'm not mistaken, the right of first offer agreements that you have.
Yes, absolutely.
Right.
But in addition to this, we have the Build India Infrastructure Fund, where we are acquiring assets from other developers.
Okay.
We've already acquired 4 non-Dilip Buildcon assets, which also we plan to bring to the InvIT under the right of first offer arrangement. And we continue to evaluate other assets in the marketplace.
Okay. And to add to this, if you have to look at a longer term, does it also include, say, acquisition of toll-based road projects, or even, say, diversification into other infrastructure classes like renewable energy, transmission, to mitigate that single counterparty risk?
So today we are focused primarily on HAM assets, but doesn't mean that we are not evaluating toll assets. Currently, our focus is NHAI.
Okay.
We continue to evaluate toll assets. I mean, ultimately, it's a question of identifying and acquiring at the right risk-return matrix. Don't want to kind of bring on assets which are overpriced. So you will see us bringing in toll assets in the coming years, obviously at the right valuation. In terms of bringing in other sectoral classes into this InvIT, we will restrict this InvIT to a road InvIT. Okay. If we end up doing other sectors, we will do those through other platforms.
Got it. What's the kind of, I mean, because it's a newer asset class of sorts, though not as new, but still newer, what's the kind of return that an average shareholder can expect if they subscribe to the IPO?
So I can't speak about the return, but
ballpark, some color.
See, InvITs are basically yield plus assets. Unlike toll assets where there is variability of traffic and you don't have consistency of cash flows, with HAM assets there is predictability, right? And as I mentioned, we have 13 years left in the concession, so there's also longevity of return. What I would urge the potential investors to do is, we offer cash flow projections for the next 3.5 years. The valuation of the IPO, the InvIT is known. You put the two together, you should be able to, arrive at a ballpark distribution number. What I would also add is that, the initial formation is just part of the story. Investors will need to look at the growth element as well as they evaluate this offering, because ultimately, when you combine yield with growth, that's where, you will see the complete picture.
So just a follow-up, you're talking about the net the cash flow, right? Now, the policy currently is to reserve mandatory 90% distribution is required, right?
Yes.
So anything in terms of policy that you have which will go beyond for the surplus cash reserves?
See, ultimately, any decision that's taken beyond the 90% will be driven by, what alternative value accretion possibilities are there. So we will take appropriate decisions. If we are not having acquisition opportunities, we might even distribute the 100%. We plan to do quarterly distributions.
Okay. Well, Jignesh, all the best for this and the times ahead. Thank you so much for taking the time out and being with us.
Thank you so much.
All right. That's the Anantam Highways IPO, and you heard the management talk about how it could shape up. Well, a lot of REITs and InvITs in focus as well. Kush Bora, since we have you with us and since we are on this topic, can you tell us a bit about how is the trade for some of these stocks currently?
REITs and InvITs, you mean?
Yes, please.
I think the one that I've been tracking rather closely and has done well is the Embassy Office Parks REIT, right? If you've seen the kind of moves that it's made, the gains alone, the growth in terms of the price movement alone is very encouraging. So yeah, it's not something that I actively invest in personally, but yes, if someone does want a flavor of these in their portfolio, Embassy is something that I've had a track of and can be considered on declines.
Okay, all right. So that's with regards to where REITs and InvITs are concerned. But with that, it's time to slip into a very quick break. But we'll be right back, so do stay tuned.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The market's most influential voices. The visionaries who decode the future of wealth. Unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, Ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Welcome back. You're watching India Market Close here at NDTV Profit. The Nifty has slightly come down, now trading around 0.3% higher, come back to the 25,150 levels. The Bank Nifty also has come down a tad bit, now trading around 0.5% higher. The mid cap 150 and small cap 250 although are trading at the same levels as they were half an hour ago. Overall, in terms of where the advance decline ratio is also concerned, there's still more declines versus that of advances, but that gap is widening by the hour is what we're seeing. Kush, with regards to where the markets are concerned, we've seen 3.5, 4 days almost now of markets gaining. Do you think this momentum is here to stay?
Sure, Mahima. See, right now, it looks like this is a buy on dips kind of a setup as long as the 25,000 mark is held. Remember we spoke a couple of sessions ago, even yesterday, that once 25,000 is taken out, bulls will have that much more confidence in going long. So as long as that is intact, I think you could consider a long position. If you have one, you can hold with a stop loss around the 24,900 mark. Heartening to see a couple of facts. DII buying has been rather overwhelming. Yesterday we saw a very big figure. The momentum is also taking the index highest. There is sectoral participation as well. Banks were doing their own thing. Now IT and even oil and gas have started to participate, in varying degrees. So all that is heartening. Couple of points of caution. The small and the mid cap space haven't really participated as much. So, that remains a bit of a concern. And purely on the technical front, the PCR on Nifty, Bank Nifty, both is close to 1.2. So slightly close to overheat territories. So this suggests that there could be some pullback that comes about. If you want to initiate fresh positions, Bank Nifty is still the index that we prefer, and any dip closer to 56,000 should be taken as an opportunity to go long.
Kush, I would love to take your ideas too, but I just hang on for a moment because there is this NDTV Profit exclusive. And you've got the perfect guy, Somit, waiting by to talk about this as well because he understands this space very well. Somit, I'm not going to read out the flashes. I'll throw it over to you first, and then we'll talk more about this.
Well, the big news that has come in is that, it's stock of the day firstly that we are going to talk about.
Let's talk about the IGL tax implications first, and then we get to the stock of the day, Somit. So let me read out the exclusive viewers for you. It's an NDTV Profit exclusive. It says that that changes in tax implications might lead to lower gas sourcing costs for IGL. This is as per sources telling us. And these changes may increase unit EBITDA by 1 to 1.5 rupees per SCM, which is 24% higher than the present EBITDA. Somit, now you come in. and tell us first what are the implications for IGL as a business for the same.
Well, if you see what happens, IGL sources gas, some of its gas requirements from the Gujarat region. Now, this is an interstate tax of around 15% VAT is being applicable. Now, this VAT of 15% will go away, and a CST that is of 2% will be applicable. So, what happens for IGL here is that their gas sourcing cost comes down drastically, and that will also help the company get more margins by selling every liter of gas. So that increases their gas margin by around 1 to 1.5 rupees per SCM, which is nearly 24% of the current number that the company has seen in the first quarter. In first quarter, the company had an EBITDA per SCM of 6.2. So this could increase by around 1.5 rupees, and this will also help the company achieve its annual guidance of 7 to 8 rupees per SCM. So a big margin benefit that is coming in from IGL from taxation purpose. 15% was the VAT rate that was applicable earlier. From October 1st, this has changed to 2% CST, which benefits IGL because the gas sourcing cost comes down in a big way.
And Sumit, what happens here on? I mean, one is because the percentage changes in EBITDA that could come in as a result of this are cited to be about 24%, right? What does that do to multiples for a business like IGL? Because there are various pieces that impact the multiples of a gas distribution business.
So for valuation multiples, it won't mean much of an upside because already they're at a high, but this will obviously increase the EPS of IGL for FY26, what the analysts had estimated. They had estimated a number of around 6.5 to 7 rupees, but given that this taxation benefit will anyways boost the margins by around 1 to 1.5 rupees, so their estimates will go up, which in turn could lead to higher target prices coming in from analysts. And already we are seeing a 7% move in the stock because of this taxation benefit that has come in for IGL from 1st of October. So the third quarter margins or the second half of this financial year margins are expected to be at least around now 8 to 8.5 rupees per SCM as against earlier analyst estimates of around 6.5 to 7 rupees per SCM.
Okay, all right. Soumya, thank you so much for bringing us those details. Kush, I'll quickly come to you. Your view with regards to where charts are concerned for IGL?
Never been a big fan of the entire space, IGL, MGL, Gujarat space, whatever, you pick. Right now, it's the new spurt that the stock has received. In fact, it was already pricing in some of that today, and hence the stock was doing well throughout the day. Now the big jump has come up. Now 222 and 230, these are the two strong technical resistance levels which the stock could face going forward. So my suggestion would be don't initiate fresh positions, rather book partial profit right now. Hold rest of the quantity with 218 as your stop loss, and closer to the 230 mark you want to perhaps exit IGL.
All right, okay. Kush, what about your picks for the day? What would you go ahead and buy?
Sure. Going with both the calls on the long side, one of them is MCX. The stock has done rather well in the last 3 sessions, given a good breakout, seeing a mild round of profit booking right now, but has held the green territory for the most part of the day. So yes, on the upside, 8,400, 8,600 are your targets. 8,000 is where you place that stop loss. The second stock which pops up again on our radar is L&T. This too has had a good run in the last 3 sessions. Today, right now, flattish to negative right now. But I think this is a good opportunity to accumulate something like a Larsen. 38.25, 39.20 are your targets. 36.60 is where you place that stop loss. Also, this brings in us a margin of safety element. So we prefer L&T as well, in volatile times like these.
Okay. All right. All right. So that's the picks that Kush has on his radar today. But onto our stock of the day segment. Today we have Bharti Hexacom, the stock. Let's try to pull that up, in fact, and see what it's doing in trade today. There you go. It's up almost 4% as we speak. And Soumya joins us with what's exactly happening with this counter. Probably a note also coming in on this counter as to why the counter is buzzing. Soumya?
The note exactly is the reason why the counter is up 4%. Axis Cap has upgraded its rating on Bharti Hexacom. In fact, it's an upgrade that we have seen for this mid-cap telecom company after a very long time. They have upgraded their rating to buy from and have also hiked the target price to 1,985 from 1,887. Now, what the brokerage here is saying is that they have always fundamentally liked this counter, but because it was trading at a premium to its peer, that is Bharti Airtel or the promoter entity, they never gave it a buy rating. But given the recent underperformance, they have upgraded their rating to buy and have also hiked the target price. Now, they are saying that even after this upgrade, they are valuing Hexacom at a 5% premium to Bharti Airtel India. But given the lower capital expenditure, superior growth and superior returns, this is quite justified as per the brokerage. Now, when it comes to the mobile segment, they're expecting superior execution with healthy trends to sustain even going forward. And on the back of this, they're expecting the company's FY25 to FY28 EBITDA to grow at a CAGR of nearly 20%. When it comes to the broadband segment, it is contributing very less to the overall numbers, but given the fact that it's quite underpenetrated, there's a strong growth prospect going forward, and on the back of this, they're expecting the broadband segment EBITDA to grow at a CAGR of nearly 35% over FY25 to FY28. Now, if you look at the valuations of Bharti Hexacom, what we are seeing at this moment, the 12-month forward valuation is close to around 16.4 times. Yes, it is at a premium to Bharti Airtel, but it is at a significant discount to what it used to trade earlier. Earlier, if you look at the valuations of Bharti Hexacom, it used to trade at around 19.4 times. And when it comes to the remaining upside for this counter, the 12-month consensus target price stands at close to 1,850, which suggests an upside of just 7% from the current level. But the highest target price on the street is by Jefferies, and that stands at close to 2,250, which suggests an upside potential of nearly 30%, while the lowest target price or the base case stands at around 1,380, which suggests a downside of 20% from the current levels of Bharti Hexacom.
All right, thank you so much for that, Somit. Samir, in fact, we have Samir Dalal also joining us now on the show. Samir, I'll quickly come to you. Your view with something like a Bharti Hexacom, would you be a buyer?
So unfortunately, no, I wouldn't be a buyer and buy Bharti Hexacom. So looking at a single location kind of a business, and for me, that is not something that makes up. I would rather buy a Bharti Airtel if I had to, but at corrections. And why do I say that? Because you're getting the play in the telecom space where we believe the revenues and profitability will keep increasing. You have these holdings in Infratel, which is the tower assets, which we believe will continue to do well and get more profitable. The African assets are now beginning to show more scale. And as that also gets more depth and penetration and pricing moves up, the profitability from there will increase. Only thing is what earlier came on also with your speaker is that the stock has run up. It's performed really well over the last 2 years if you look at Bharti. And valuations have moved up quite a bit. So I would like a correction, but I think Bharti would be the play I make and not Bharti Hexacom.
Okay. Well, let's cut across. Gentlemen, stay on. Let's cut across to our banking editor and Mumbai Bureau Chief Vishwanath Nair in conversation with a panel of experts on super apps and financial ecosystems at the Global Fintech Festival. Take a look.
Yes. And similarly, you see entry of other players, right? You see asset management companies also try to become wealth managers, also try to become brokers, right? Recently, large partnership came into the country. They started with asset management. They've openly announced the entry into other areas as well. You see a Zero Adha starting with a brokerage, now talk about asset management and so on and so forth. So I think space we watched. If we all get too comfortable that we will never, people will not want to enter our space, we might get surprised.
Mr. Devanji, in your previous Saptar, you were with a bank that really pushed hard on a mobile app. Even the current bank that you're working with is a extremely tech-focused, front-end driven sort of a banking brand that exists, right? I've started from the point of I don't believe in super apps to now it's sort of muddled down and till Sandeep it's come to too soon to write them off entirely. Do you maybe have a slightly more positive view of that?
Yeah, I would, in between the thing, I would tend more to what it said. You see, if you're dreaming about that super app is going to be the one master app and will do everything for me, the answer is no. But the basic element of all the super apps is habit formation and retention of the customers. Now today, every bank on the street is trying to do that. Means we don't want you to get out of our banking apps to book your tickets, to book your hotels, to order some food, but we want you to keep on using it. So from that concept point of view, I think the super app concept will get modified. It will not be a super app, one super app, but it will be a federated ecosystem which solves many complex business processes a little easier. There are challenges, which ways everyone will talk about, the consent and the data privacy and all those things. They are at top. But today, the advantages which the banks will have is per se, there is a degree of safety when it comes to a bank's name. That they will be more secure or they will be more conscious about the data privacy and something like that. But I think too early to write off super apps. It will not be a one major single app doing everything for you. But I think we will have to give convenience to the customer who will look in for it through different ways. And bank or any financier will try and embed that into any transaction that you do and allow him to do the transaction very smoothly.
Okay, I think we're done with the very polite one after one conversation part, but.
All right, so that was Vishy addressing from the conference itself. Now, it's that time of the show where we bring in our colleague Somit Sarkar, who joins us with all the chatter from the dealer world. Be quiet. Somit, what are you hearing today?
Well, fourth consecutive day of positive gains that we are seeing for the markets, and that's quite a good setup that has come in. Overall, dealers are indicating that there are strong buy flows that are seeing specifically in the when it comes to private banks. But some stock-specific ideas that dealers are suggesting to their clients. Firstly, is Shelley Engineering. Now, dealers indicate that smart HNIs and PMS have accumulated this trade in counter today, and there's a potential buzz of a QIP launch to come in soon on Shelley Engineering. For Canara Bank, dealers are indicating that there are buy flows on For Canara Bank, dealers are indicating that there are buy flows on DI desk. A positive development for this counter is expected soon. For HPCL and Indian Hotels, there are buy flows on institutional desk. Delivery volumes are expected to be on the higher side for both the counters, and a positive corporate development is expected here for both HPCL and Indian Hotels as well. When it comes to Star Health, there are buy flows on FI desk. They're expecting a turnaround quarter in the second Q2 to be a turnaround quarter for Star Health. And when it comes to LTI Mindtree, there are buy flows on large HNI desk. Dealers are expecting the Q2 number to be much better than what the street had earlier anticipated when it comes to LTI Mindtree. Patanjali smart investors are taking a positional buy call for this counter for next 1 month. So keep an eye out for Patanjali as well. And lastly, when it comes to Cipla, there are buy flows on expectation of some positive announcement that could come in this week. So keep an eye out for Cipla as well in trade.
Okay, interesting. So a lot of large cap stocks today in this list, right? Because you look at HPCL, Indian Hotels, LTI Mindtree, Patanjali, Cipla. The interesting ones are Shelley Engineering and Star Health on the lower end of the market cap curve, if you will. Shelley is an expensive stock, but interesting that it's finding mention today. And that stock is up 11% at 2399. Somit, thank you so much for bringing this to us. Samir, do you guys at your brokerage house track a Shelley Engineering or let's say a Star Health fundamentally?
So Star Health is something that we do cover. Shelley, unfortunately, is something we don't. I mean, we've looked at the company and what you said, we also found valuations very, very expensive, and we decided not to go after that company for some time till we see some fair pricing in that. So, that is the reason we're not. But now when you come to Star Health, the health insurance space is something that we do focus on. We believe that the opportunity to grow is great. Star Health valuations are not super expensive, but neither are they too cheap, right? So the question is, what are the kind of returns that can be made from here? If you are a long-term investor in the entire general insurance or health insurance space, I think the opportunity is extremely large because the growth is going to be great over the next few years. The government has also helped out in the health space, especially by giving, removing the GST on the health insurance policies. So, what will happen is people will be probably the same amount be able to increase the coverage that they have, which is very important and actually required. So I think the space is going to do well. But if I had to take a bet in the space, Star Health is of course not a top pick, neither is Niva, which are pure health insurance plays. We prefer to pick up something which is more in the general insurance space for the simple reason that the entire gambit of insurance is going to see a great uptake. And something like a ICICI General Insurance looks attractive. Yes, valuations there also look high, but then, if you look at it if they are able to bring their loss ratio down, which we believe will happen in the next coming couple of years, then the profitability will start looking a lot better, and then the valuations will not look as expensive. So ICICI is a top pick. You can followed by Niva Bupa and then by Star.
Interesting. Okay. And just wondering, Kush Bora, a Shelly Engineering, a Star Health, a Patanjali, any of these tradable?
So from a trading perspective, I would give some weightage to Star Health. I think, 500 and higher levels on the cards after a long period of consolidation, good 4.5 months. The stock's just not gone anywhere. Shelly, yes, was on my track as well. In just a little over a month, the stock's actually spiked for 70%, at its peak. Some correction, it's now giving you an uptick. If at all you want to play Shelly, it should be with a very small allocation. So I would be a little cautious on Shelly, as I said, for a small allocation for targets of 25 and 2650 with a stop loss around the 2300 mark. You could still perhaps consider a momentum trade.
Okay. Well, let's take it then to our bull versus bear segment. Focus is on Trent. Mahima joins us with more. Mahima.
Right, so we're seeing the stock being under pressure today as well. Yesterday also post its business update, it closed around 2% lower. Today also trading around 2% lower. And we've seen that Trent has been the top laggard on the Nifty 50 year to date as well. It's fallen around 33%. Since its inclusion in the Nifty also, it has fallen around 39%. With regards to what's working and what's not working, this quarter 2 update, we've seen that the revenue has come in, the growth has come in at 17%, which is the lowest in the past 4 years. The growth has been around 50% in the past quarters. We've seen a 20% growth in the last quarter. So the growth is slowing down for something like a Trent. But on the other side, the revenue per square feet has grown steadily despite of the kind of aggressive expansion that the company is making. This is with regards to where growth is concerned. In terms of valuation, well, valuations were never cheap for this counter, but current trailing 12-month we are seeing, of course, which is at an expensive end, around 105 times. But there are brokerages that believe that this kind of deceleration in the growth and the kind of slowdown in the growth momentum that we are seeing could lead to some valuation correction, and overall multiple could compress going forward. In terms of 1 year forward also, what analysts are penciling could be around 73 times, still not cheaper, but at par with where the peers are trading at. In terms of where the overall operation metrics are concerned, the ROC has been improving for the counter, where it was 9% in March 2022. It's gone to around 31% in March 25. But we've seen that FIs have been selling, since its inclusion in Nifty, where it was at around 18% in March 22. As of June 25, FIs hold around 18% stake in the counter. Lastly, with regards to where brokerages' views are concerned, Goldman Sachs believes that margins will improve by around 165 basis points year on year in Q2 itself. And this is because company has taken initiatives with regards to adopting technology and reducing their overall cost. But on the other side, Equirus believes that the top line CAGR that the brokerages were earlier penciling in of around 25 to 26%, that seems largely unachievable. So this is with regards to where Trent is concerned, and of course a bull versus the bear case. Samir, I'll quickly come to you. The idea was, and analysts were kind of penciling in a growth of around at least 20%, if not lesser than that, and it has come at around 17%. How are you viewing this, and going forward with the kind of correction we've seen in the counter? Do you think this is the attractive level to maybe make an entry, and maybe 17 to 20% growth is something that we should get used to for a Trent?
Okay, so two things. First, 17 to 20% growth seems fair. It's good. SSSG has not picked up to the same expectation probably that the market was looking for. And that is because consumption has been a bit dull and slow, right? So once the consumption uptick starts happening, we believe that something like a Trent, if their SSSG can move up to low double digits, 11, 12, 13%, then the operating leverages will play out. So then what you're talking of, these 100 times PE will obviously contract quite quickly. You also got to look at it that the kind of market that they're catering to, right? So they have two verticals which are their mainstay. One is West Side, the other is Zudio. Zudio is the absolute low, bottom of the pyramid chain that they're catering to. So as we see a recovery in consumption at that end, which I believe is going to come going forward, I think Trent is something that looks attractive. Yes, valuations are high, but in any of these retail companies, the pure reason that valuations remain high is because the operating leverage is so strong. Their new stores are still, they've opened a lot of stores over the last 2 years, and they're still, just about making a limited amount of profit. As they get more footfall and traction, I think the profits will grow, and then suddenly you'll see a big jump in the profitability. So I'm quite positive on the longer term perspective. Is it going to be range bound for some time? I would rightfully say yes. It'd probably be in a range for the next 6 months. But once you see the growth uptake, I think this is a great opportunity to buy it. You've seen a decent correction from the highs of 8,000 odd levels accumulated over the next 6 months.
Okay, all right. So that's a fundamental view. But Kush, technically, do you think there's probably the stock has found some footing now? Do you think there could be some momentum from here on, or do you still see that some further correction is yet to come?
Mahima, before I begin, if the team could just pull up the 1 year chart of Trent, the 1 year performance of Trent. From the naked eye, it's very clearly visible that there's a falling trend line resistance. And if you can extend that, it forms a descending triangle formation, which is not a healthy sign. Strong supports at 4550 and 4600 levels, and resistances around the 5000 mark. Now, do I suggest a buy at these levels? No, because if 4550, 4600 support zone is broken, then I'm afraid much lower levels come into play. So while it might look like a good opportunity because of the fall that the stocks made, so close to the support zones, it makes it a slightly dangerous buy. So I would perhaps wait for some sort of a rebound, and once the bottom formation formations are complete, then you would consider not so close to the support level. So I will be a little cautious and more of a wait and watch approach on Trent.
All right. Okay. So that's the technical view, viewers, with regards to where Trent is concerned. But on to our top 3 stocks today. The spotlight is on Avalon Tech, BLS International, and Cyient DLM. Jasmeet joins us to tell us as to why these companies are buzzing and why you need to take a look at these companies. Jasmeet?
Well, right, yes, thank you for that. So I have 3 buzzing stocks in my radar today, which are buzzing on the back of volume. Starting off with Avalon Tech, if you look at the trading volume of the company, it's nearly 13 times on a 20-day average. And in terms of stock performance, the stock is nearly up 62% over last 6 months, and over a year, it's up 130%. Now, just to give guidance, what the management had quoted back in the Q1, given the results around the corner, while in the Q1, the management has revised the guidance in upward trend by stating at 23 to 25% earlier, which was at 18 to 20%. So they have increased the guidance on both lower and upper end. While we also see the management says that the operating leverage will go down in the other half of the year, and by FY27 it's going to reduce given the initial ramp-ups. While the next stock on my radar is BLS International. If you look at the stock performance on the 6 months and 1 year basis, it's nearly flat. Now, in terms of the buzz, why the stock is buzzing is on the back of volume. If we look at the trading volume, it's nearly at 11 times on a 20-day average. Now, the recent updates with regards to companies, the company's arm had acquired a hotel for 78 odd crores back based in the UK. Well, if you look at what the management had guided in the Q1 earnings was, they guide a 20 to 25% annual growth going forward, while they also expect the margins to be maintained at the current level, given the highest margin business is from the visa, which is nearly at 40%, and the rest, the overall group margin to remain at 28 to 29% going forward. If we look at the last stock in my radar, it will be Cyient DLM. While the stock is up nearly 9% over 6 months, and if you look at a year picture, it's opposite. It's down 33 odd %. While if you look at what the management had guided and the trading volumes for today, it's at 15 times on a 20-day average. And back in the Q1, management had guided the growth focus to be in the domestic market, while they also have recorded the highest ever order book back in the Q1, it at 550 odd crores. So these are the stocks buzzing in trade today and what the management has told back in the Q1.
Jasmeet, thank you so much for giving us those details. Now, on the sideline of Global Fintech Summit, my colleague Rishabh caught up with Rajneesh Karnatak, who's the MD and CEO of Bank of India, to discuss about their Q2 deposit growth and road ahead for the company. Listen in.
Thank you for having me here. As far as our Q2 numbers are concerned, we have shown a YOY growth in our global business by around 11% plus. As far as the global deposits are concerned, we have grown by more than 11%. And as far as the global credit is concerned, we have grown by more than 13%. As regards the domestic credit is concerned, there also we have registered a good growth and we are growing at nearly 14% on a YOY basis.
Right. So, impressive set of numbers that were coming in for the bank. Recently, we had the RBI MPC, a lot of liquidity augmenting measures coming in from the bank, about 22, 23 of them. Several of them, of course, related to banks. The first one, sir, RBI has opened its doors for large corporate credit. Talk to us about what sort of opportunities that opens up for banks like yours.
Yeah. So large exposure framework, that guidelines RBI has relaxed. So in that, what would happen is that banks like us, we can cut large checks. Earlier, there was a threshold limit of 10,000 crores. So that we can now, it is now relaxed and we can go above that. So that would definitely help the large banks and banks of our size also to give large checks in large projects and also for AAA rated borrowers whose borrowing is more, and there we can give better amounts of loans.
Right. So does that change any sort of plans for you going ahead? Does that help you approach newer avenues in the coming quarters?
Yeah, definitely. So there can be more uptake in the credit growth because of that, because definitely if we are able to cut more checks, larger amount of checks, definitely it will increase the corporate credit growth.
Right. So we're also seeing that acquisition financing has been opened up by the RBI. You're seeing what is the sort of sense that banks are having? Are banks very confident with regards to that, or are there apprehensions? What is the view of banks with regards to that particular announcement?
So earlier RBI was not allowing the banks to fund the merger and acquisitions.
Right.
So as we see in the last 5 to 7 years, particularly after the COVID, lot of merger and acquisitions and takeovers are happening in the corporate world. And banks are not able to fund those activities because the enablement was not there from the RBI side. From now the enablement has been given by the RBI, and that is another opportunity for the banks, particularly for the banks, for lending to the corporates for merger and acquisition activities also. And that will also further not only enhance their reach for the corporate, but also increase the reach for the banks also, because if a good corporate has taken over a small company, which maybe it is a weak company, financials are weak, definitely it will help the banks also with the outreach of the large corporate with a more credit-worthy corporate to give further credit to that for the merger and acquisition.
Right. Interesting, sir. Another very interesting announcement that came in was the deposit insurance premiums were made risk-based. So that means that if a bank is good, if a bank is performing well, they will have to spend less on premiums. So what do you see as an impact on Bank of India?
So that is a very welcome move from the Reserve Bank of India. So it gives the costing, reduces the costing if the rating is better for the bank. So any bank which has a better rating will have to give a lesser amount of premium for covering its insurance. So that is something which is very welcome to us, and for Bank of India also it will help. We are already a AA plus rated bank. Okay. So definitely the premiums would also come down for us.
Got it. Sir, lastly, you're at the sidelines of the Global Fintech Fest. What is the sort of road that Bank of India is taking with regards to technology, with regards to fintech?
Yeah. So this Global Fintech Festival, which we are having today and tomorrow and day after tomorrow, a lot of products are lined up for us for launch. We have integrated with a lot of fintechs, not only from the loan side products, the asset side product, but also from the liability side products also, and also from the wealth management side products also. So a lot of fintechs we are taking in our ecosystem for all these products, liability side, asset side, and also from the wealth management side. Apart from that, couple of arrangements we are also making with the fintechs for the cyber security part.
Okay.
So all the entire ecosystem with the digital banking we are absorbing through these 3 days of the Global Fintech. And apart from that, our entire IT team, our digital team and cyber security team is also here in this GFF, meeting different vendors across the the fest and interacting, and it's a good networking session which is happening. And I am sure and hopeful that in these 3 days, the outcome will be very good as far as the digital banking is concerned for the bank.
All right, so that was the management of Bank of India speaking on the sidelines of the Global Fintech Fest. Now with that, it's time to slip into a very short break, but on the other side, we'll get you top buy today, sell tomorrow picks and even vice versa. But do stay tuned to NDTV Profit.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है। ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The market's most influential voices. The visionaries who decode the future of wealth. Unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
It's an afternoon which is different than the previous 3 in that we've given up some of the gains, and we were talking about this possibility that we've had 3 strong days of an up move. High chance that some bit of consolidation, some bit of profit booking could come in. This is by no means a giving up of the profits in a very large scale, but yes, some bit of profit booking after 3 strong days of a rally without any plausible reason except for the banking earnings or the banking Q2 updates. You could argue that maybe it was par for the course as well. I just wonder what to do in a scenario like this. Aditya Agarwala, of course, with us. Sudeep Bandyopadhyay joining in with his thoughts as well. Sudeep, thank you so much, both of you, for joining in. Sudeep, before I come to you to get your sense, and pick all your gray hair about what to do in a scenario like this. So you don't seem to have any, Sudeep. But Aditya, just from a trade perspective here, right? 3 days of gains, we went up today and just petering off. Is this normal profit booking or would you initiate shorts here?
It's a normal profit booking. Good afternoon, Neeraj. Thanks for coming on the show. And I would rate this also because of the fact that today is an expiry. Don't forget, now Tuesday is the expiry for NSE. So Nifty's move predominantly, I would say, is because of the expiry today. I don't see any big jump on the VIX. There is no panic in the market. It's just normal course of action, profit booking that you're witnessing. So like you mentioned at the start as well, I won't read too much into it. My sense is 25,100, 25,000 is a strong base for the markets. If we don't break 25,100 in trade tomorrow or in last half an hour of trade today, we would see a renewed buying interest in the market, and market should head higher, closer to about 25,400 to about 25,600 in next few trading sessions. My sense is by the time you are heading to the Muhurat trading session, Nifty should be trading somewhere around 25,650 to about 25,700 on the upside.
Okay, got it. And are there stocks that you are recommending right now, or do you want to do that after 10 minutes?
Oh, we can do that right away, Neeraj. I've got a couple of buy recommendations. The first one is SBI Cards for our viewers. Looks interesting to me on the chart setup for a target of 945 on the upside with a stop loss at 890 on the downside. The second is OFSS, Oracle Finance. That also looks interesting. So for a target of 9770 with a stop loss at 9100 on the downside, that is also a second stock recommendation that I have.
Got it. Okay. Sudeep Bandyopadhyay, have you been enthused with the banking updates that have come out thus far? Because that seems to be that one reason why the bank nifty and thereby the markets have gotten a bit of a leg up despite nothing changing on the macro side.
Well, Neeraj, this was pretty much on the expected lines. We were expecting a good quarter from the BFSI space. Look, a couple of things have happened. RBI policy has been extremely supportive, and even the recent policy announcement has given a kind of boost to the BFSI performance, at least in the market. The kind of liberalization which the RBI is proposing was kind of required, and the banks wanted it for a very long time. This was required for facilitating credit growth and providing incremental opportunities to large banks to play in a space which they were restricted by regulation. So I think this is good for them from the point of view of future as well. Asset quality by and large has improved. Credit demand is coming back. So things are looking good. Of course, you have to be selective. You have to look at the valuation and then buy into BFSI. But by and large, I think this quarter numbers should be good. And this is one space which I think one should really look at from a kind of medium-term perspective also.
Okay, all right. So that's with regards to where these banking counters are concerned. But, there's some counters that are really buzzing on the back of volumes. We've already talked about some of these. There's RHI Magnesia, which is Magnesita, which is, buzzing almost 225 times its 30-day average. There's Ramke Infra, 62 times its 30-day average. There's Uniparts India, which has picked up in the past 1 hour. Trading around 51 times its 30-day average. DOMS on the back of that note, trading around 19 times its 30-day average. There is ESAB India, which is also trading around 16 times its 30-day average. And lastly, Avalon Tech, trading 12 times its 30-day average. So this is with regards to where all of these volume buzzers are concerned. Aditya, I'll come to you. Any of these counters where you think that the momentum has just started and probably will continue going forward as well?
There are a few pockets, definitely. The first one I would like to highlight is the Avalon stock. As a disclosure, this is one stock which is also recommended to our clients, so they might hold the stock in their portfolio. It's a very strong going for the stock, back-to-back up moves on strong volumes, and like you mentioned today, massive volumes. On the back of massive volumes, the stock is up some 10-11%. We believe going ahead, stock will continue to see an uptick from here on as well. So for a target of 1450 to about 1500, one can continue to hold on to the stock. If they're looking for a fresh entry at current levels, they can do so with the stop loss just below 1200, and my sense is stock is good to go to levels of 1450 kind of in the coming times. Ramke is also one stock which looks quite interesting to me on the charts, though it has seen some bit of profit taking from the top. But my sense is stock from here on should see much higher levels, closer to about 800 on the upside, with the stop loss on the downside at 620. So this is more like a positional trade that one needs to take, buy now and maybe hold on to it for at least a few trading weeks, and you will see those levels of 800 on the upside.
Okay. The other counter that's been in focus on the back of a brokerage note is HDFC AMC, down by about 2% as we speak, as Citi has maintained a sell with a target price of 4775. The brokerage highlights the company's push into non-mutual fund business like portfolio management services. Once joins us to break down as to what the report is indicating and as to what makes Citi bearish on the counter.
Well, yes, in fact, the brokerage has reported that the brokerage says that a non-mutual fund segment has been emerging as a key focus area. In fact, the company has said that the company aims to scale up the non-mutual fund business, that is the PMS and alternative business. Now, the company is planning to retrieve its PMS business, and the investment discipline and brand positioning is being seen as a major competitive strength from the company. Also, the scale-up will be led by the leveraging parentage and distributor tie-ups with the parent as well. Also, the execution risk remains in place in terms of this. However, the brokerage is more interested in the company's increasing focus on the non-mutual fund segment as well. Moving on to the equity flows, the brokerage believes that the retail resilience in equity flows remains strong, and there has been a constructive equity mutual funds expected despite short-term volatility as well. Also, the growth is being aided by steady and sticky recurring SIP flows as well. So this is what the brokerage is saying for HDFC AMC as well.
Thank you so much for bringing us those details. Sudeep, I'll come to you on this one. Your view with regards to where HDFC AMC is concerned, or anything in that space that you're probably liking?
I do like all the AMC listed AMC players from a fundamental point of view. Look, financialization of savings is happening in India in a big way. We have been witnessing continuous flow through SIPs and other means into mutual funds. And, in spite of market volatility, that flow hasn't reduced. And that's very, very encouraging. We believe that the scope is humongous, and all the leading asset management companies will continue to garner more and more assets. Of course, performance will depend on the market scenario. But as far as their AUM is concerned, I have no doubts that they will continue to grow rapidly. And some of the well-managed AMCs will perform better than the other ones. So HDFC AMC, ICICI Prudential are some of the leading ones which definitely will continue to do well. I do like both these. We also have a favorable view on UTI AMC. I think it's kind of neglected valuation wise. It does look attractive, and one can look at this as well.
Okay. All right.
Interesting. If I can, I just have one follow-up question to Sudeep. And Sudeep, not just AMCs, but I was doing a recent conversation with Manish Chokhani, and he seemed to suggest that if you look at the next 5-10 years, then the wealth creation that has been done in the capital market sector, while we've come thus far, it's probably only 10% done, and 90% of the further wealth creation is still ahead of us. And look at making a basket maybe of capital market related stocks. Would that be an approach that you subscribe to as well? You might differ, by the way. Would love to know your view.
I completely agree with this, because I believe this financialization of saving has got a significant potential to benefit the entire financial market ecosystem. I have been liking this CAMS and K-Fintech for a very long time, and I maintain that I think these market infrastructure companies will continue to do well. Look, they have gone beyond the shores of India, and they are expanding their services into, other Asian markets where the remuneration is much more attractive. So both CAMS and K-Fintech definitely deserves attention from a long-term perspective. Now, this is all from a long term. Don't look at what is going to happen tomorrow or day after, because the valuation is not cheap. Similarly, look at CDSL and NSDL. NSDL got listed, went up, then corrected, and it was the right thing for NSDL to have corrected, because the relatively between NSDL and CDSL have a much robust income because of the number of folios they have. So but fundamentally both NSDL, CDSL from a long-term perspective as market infrastructure companies do merit attention. BSE, MCX, these are the two listed exchanges. Now BSE, there are a lot of valuation is rich. There are challenges in terms of this, what's going to happen to the option contracts going forward. So I will pause at BSE, but MCX does look good because the opportunity for introducing newer contracts on the commodity side is huge, and things are going to definitely get introduced. So MCX going forward should do even better, and valuation-wise, relatively it does seem attractive.
All right, Aditya, what about your trading strategies? Is it BTST or STBT?
I've got a BTST, Mahima, in Bajaj Auto. Two-wheeler space looks interesting to me, and Bajaj Auto is just broken out from a narrow consolidation phase. So my sense is one can actually look at Bajaj Auto at current levels for a target of 9,400 as a BTST trade with a stop loss at 8,650 on the downside.
Okay, all right. So Bajaj Auto is the BTSE trade that Aditya has on his radar. But on to our profit intelligence segment, and our today's focus is on pharma, as US push for local generics may not be a good news for Indian companies. Varsha joins us with more details. Varsha?
Well, thank you so much for that. So what exactly US is doing which may impact Indian pharma is, one, they've started this pilot project wherein they've launched fast track review for generics which is made in US. Now this is to boost US generic manufacturing. Now this also aims to cut US's reliance on imports. What does this mean? That there will be slower approvals for Indian facilities. Now, why this matters for India? Because if you see, India exports almost 60 to 65% of generics to US. Now, China's share stand at around 6 to 7%, while Europe's at 30%. So, India exports a lot of generics to US, and tightening of these compliance checks could delay approval from Indian facilities, which could impact the market share of Indian pharma companies, which could potentially have an impact on the margins when it comes to Indian pharma companies. Well, let's talk about which are those pharma companies which has highest exposure to US, starting from Aurobindo Pharma, Dr. Reddy's, Zydus Life Sciences, which has almost 45 to 50% of revenue coming from US. Even Glenmark Pharma, Cipla also have highest exposure to US. Now, which are the companies which are, less exposed to US? You have Sun Pharma, you have Divi's and Torrent Pharma, so which are less exposed to US. Now, talking about this company specific outlook, let's see what Divi's is talking about. So, for Divi's, if you see, margins are expected to improve with high value custom synthesis project and peptides, that is GLP-1. For Torrent, they are expecting operating margin at 32.9% despite higher R&D expenses. For Sun Pharma, so they are part of first wave GLP-1 launches in India. Now, though US is actually fast tracking the review for their manufacturing units, but there are some operational challenges which US might face. One is US labor cost is at $30 per hour. This removes the cost advantage that US would have. Second, if you see, there will be a lot of automation which will be needed, and higher upfront investment which will be done by US. Thirdly, if you see, the new US facilities will take years to build, so generics may remain costly initially. So overall, if you see, though US is fast tracking this review for generics made in US, but there are some operational challenges which US might face. But yes, in longer term, India may have an impact when it comes to generics.
All right, Varsha, thank you so much for bringing us those details. In fact, quite a comprehensive profit intelligence that Varsha has given us on the entire space. But, we've been talking about Global Fintech Fest 2025. It's in full swing, and my colleague Agnidev Bhattacharya caught up with Upasana Taku, the co-founder and chairperson at MobiKwik. She spoke to us about the company getting an NBFC license to expand lending operations without pivoting into pure play NBFC business. Listen to that conversation.
You're right, it is exciting to be a GFF, because if you're a fintech founder, then GFF is like your mecca, where it's an annual event. Everyone tries to put their best foot forward. So to that extent, MobiKwik, having been a player in the fintech ecosystem last 15-16 years, this year we have 4-5 new things that we are displaying at our display center here at the GFF. The first and the most interesting one is a concept product. It's a proof of concept. It's not a production product. It's called Say to Pay. It's a voice enabled payments product. where it can be a transaction you can do from the MobiKwik app, conceptually that we are demoing, where you would, just like you use Bluetooth on your car, right? Make a call to Agni, make a call to Rakesh. So you could say something like, make a payment to Agni. Make a payment of 500 to Agni, and it would ask you, and it would take that money from your wallet, and it would go through. So this product is something that we are demoing. We've developed our own models for this, for voice recognition, and obviously we are also using bioauthentication for this product. So it's a very cool product. It's nowhere close to being ready, but we are excited and we are showcasing it like a concept product, because we believe that in the next few years that are coming, as we want to take payments, digital payments as an inclusion product to the tier 3, tier 4, tier 5 India, we will have to go to voice and we will have to go to vernacular. And this is sort of the beauty and the simplicity that we are trying to showcase in this concept product.
Lovely concept there, ma'am. I would like to go on to my next question. So MobiKwik has recently in a regulatory filing said that they will be investing 10 crore into their NBFC arm. So just wanted to check, what business will this NBFC arm be operating in exactly?
So as you are aware, MobiKwik has two large businesses. One is the payments business, and secondly, we also cross-sell financial products, including credit products via our NBFC and bank partners as a lending service provider under the digital lending guidelines. So to that extent, I think this is an attempt for us, to incorporate a company which is the 10 crore that you're talking about and make an application to have an NBFC for this purpose. We are not looking at becoming the lender, but having your own small NBFC also gives you benefits in terms of how you can understand your user better and do the matchmaking between the large lending partners that we have. So it is that, in that regard that we have put in the minimum required capital.
So ma'am, just to quickly follow up on that, does MobiKwik Financial Services, like you said, you don't want to become a lender, but to be an NBFC unit, has it gotten the RBI license for being an NBFC yet, or is that something?
No, basically it is an indication that we will be filing. So we incorporated a company, we have put in the minimum required of capital, and we might be applying for this.
And ma'am, next I would like to focus more on your lending business. You recently stopped short-term lending through Zip and have been focusing on long-term lending more recently. So how much of an impact from the closure of the short-term lending has already been seen by MobiKwik, and how much of a pressure do you expect that to play out in your balance sheets going forward on a quarterly basis, if you can give me any color?
So I think the sort of slowing down of unsecured lending in general can be seen, in our numbers right from last August, September of 2024. But I think what you will also see that in Q4 as well as in Q1, the results of which are out, we have shown about 30 to 33% scale up or growth in terms of the lending disbursals, or the lending GMV as we call it.
All right, so that was the management of MobiKwik. In fact, viewers, you can listen in to the entire conversation. It will be available on our YouTube handles, and not just this conversation, all the conversations that our team is doing at the Global Fintech Fest. But with that, Sudeep and Aditya, thank you so much for taking out the time and giving us all those insights throughout the show. Let's take a quick look as to how the markets are ending today. The expiry playing, of course, its role, the Nifty 50. Now trading only about 0.1% higher. The Bank Nifty also has cooled off quite a bit, trading only 0.2% higher. If you can try to pull up the Nifty 50 chart quickly, that will give us a picture as to how, in the last 1 hour we've seen, expiry play its part, and we've seen the Nifty declining almost at its day's low point. Let's try to pull up the heat map and see as to what counters have done well and what counters have kind of not done well. Axis Bank, Tata Motors, Trent, all three of them closing 2% lower. Tata Consumer, Hindalco, Infosys, SBI are some of the counters that are closing around 1% lower. There's counters like Bharti Airtel, Jio Finance, Bajaj Auto, HCL Tech, Ultratech, all counters in the green, seeing gains about 1 to 1.5%, keeping the Nifty in check. Let's try to pull up the advance decline ratio and see as to how that chart has fared. It's been a zigzag day. We did, open at a note where we had more advances versus declines. So it was a buyer's market, but then tides did turn and that gap has widened at the last 1 hour, and we've seen declines more than that of advances. Let's try to pull up the sectoral heat map and see as to how sectors have done. There you go. There's Nifty Realty that's leading the pack now, up by about 1% followed by Nifty Oil and Gas, though cooled off a bit. Nifty Oil and Gas, Nifty Pharma up 0.5% as well. But something that's seen profit booking today includes your Nifty Media, Nifty Defense, FMCG slid quite a bit into the red, almost down 0.4%. PSU Banks and Metal also in the red. Let's try to pull up the BSE 500 and see as to what are the counters that have buzzed in the broader end of spectrum. You have RHI Magnesita up 9%, Vodafone Idea, Ircon, IGL, Divis, HLE, Glasscoat on the green side. And on the flip side, you have KIOCL, which is locked in a lower circuit today after seeing gains of about 3 odd days, down by about 10 odd %. Tata Investment on the back of the Tata Capital IPO and subscription numbers, Happy Mist Mines, Restaurant Brands, KPR Mills and Hitachi Energy, some counters in the red. Lastly, let's try to see as to what are the cues that you need to watch out for post-market hours today. For the trade tomorrow, you have your Japan current account data coming in, so keep an eye out on that. You have your board meeting of Adani Enterprises for fundraising, so eyes will be on that as well. Travel food services will experience an anchor share lock-in of around 2%. IPO listings that you need to watch out for tomorrow, there's Om Freight Forwarders, Advance Agro Life. These are the 2 listings that you'll see on the bourses tomorrow. And of course, the ongoing IPOs will continue. The buzz in the primary markets, of course, will continue. But with that, we're completely out of time on this edition of India Market Close. But do stay tuned to NDTV Profit for more news and updates on the other side.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, होता है कार्तिक। सोलर मतलब सात्विक, ये हर मौसम में चलता है। ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, होता है कार्तिक। सोलर मतलब सात्विक, ये हर मौसम में चलता है।
The market's most influential voices. The visionaries who decode the future of wealth. Unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी।
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, let's just see how the markets have fared today first. Sensex and Nifty extend their winning streak to a fourth session, which is led by the gains in the energy and oil and gas shares. Now some of the biggest gainers among the Nifty 50 stocks are HDFC Bank, Eicher Motors, Bajaj Finance, Jio Financials, ICICI Bank and among others. Now, there's a mixed sectoral performance, seen on the Dalal Street today, with Pharma and Realty leading the pack. Now, these sectors were up almost 1%, while sectors like the FMCG, metal and media were down 0.5%. Now, IT and PSU banks also closed flat with a negative bias. September sees the highest monthly outflow of foreign portfolio investor funds in over 6 years. So according to the data from the National Securities Depository Limited, now FPIs have sold shares worth $690 million last month. Now this marks the biggest monthly sell-off since June 2019, when the outflow stood at $724 million. So this heavy selling pressure comes as the broader BSE healthcare index registered a decline of 1.3% for the month. Now the index, which tracks a basket of 119 companies across hospitals, drug makers and also medical equipment manufacturers, has clearly felt the pinch. Now let's shift focus on the counters that have been buzzing in trade today. First up, we have Brigade Enterprises. Now it has signed a joint venture for premium homes in West Chennai with a project value of 1,000 crore rupees. So for FY26, the company eyes double-digit growth in the pre-sales. Average realizations are expected to hold steady at 10,000 rupees per square feet. Dilip Bilcon's JV bags a 597 crore solar project from Madhya Pradesh Jal Nigam. So the JV, with a 74% stake held by the company, will develop a 100 megawatt ground-mounted solar PV plant. Now the power supply will run for 25 years post-commissioning with 31 crore equity infusion from the Jal Nigam. Now, staying with the movers there, Metropolis Health post 386 crore rupees in the Q2 revenue and also marking a 23% year-on-year rise. So, growth mirrors Q1 despite fewer seasonal illnesses there. Core diagnostics continue to deliver high single-digit margins as well. Let's also look at Trent, which disappoints with the weaker than expected business updates. Now, it's the worst performer in the Nifty 50 this year, which is down 33% year to date and also 39% since its inclusion. So technicals show relative strength index below 30 and are signaling an oversold territory. Now on to some brokerage notes. Morgan Stanley maintains an overweight rating on Trent with a target of 6,359 rupees. Q2 update misses the expectations, though standalone revenue grows 17% year-on-year. Trent opens 13 new West Side stores, the highest in 5 years. EBITDA margin is also expected to improve to 17.5%. Goldman Sachs maintains a neutral rating on BSE and trimming its target to 2,220 rupees. So NSE's aggressive push erodes the BSE's edge in contract size and premium. BSE's market share gains may peak at 40% between July 2026 and March 2027. Brokerage house Axis Capital has just delivered a strong buy rating on Bharti Hexacom, bumping up its price target significantly. So the new target now stands at 1,985 rupee per share, and a solid jump from their previous estimate of 1,887 rupees. So what's behind the bullish call? Axis Capital cites superior execution in Bharti Hexacom's mobile segment, where healthy subscriber trends are also expected to sustain. So crucially, the brokerage believes that the company's geographic footprint makes it an ideal candidate for an early adoption of fixed wireless access broadband. Now, talking about the valuation then, it remains at a slight premium to parent company Bharti Airtel. Axis suggests Hexacom's recent market underperformance has now opened up a compelling valuation upside. So in short, Axis Capital sees clear runway for growth, making Bharti Hexacom a top pick in the telecom space. Switching gears to the metal space, Shyam Metalics has released its September business updates, revealing a mixed picture across its key product segments. The stainless steel division faced some volume headwinds, with sales down 11.4% year over year. However, the company successfully managed pricing power as the average realization for stainless steel jumped 8.2% during the month. Meanwhile, Shyam Metallics aluminium foil segment delivered growth on both the fronts. So volume sales in the aluminium foil edged up 4.1%, which is more significantly, the average realization saw a robust increase, climbing nearly 12% year over year. So the strong pricing performance in both the steel and foil highlights the company's ability to defend the margins despite a softer spot in the steel volumes. Let's also talk about KRN Heat Exchanger and Refrigeration, which is actively expanding its footprint in the transportation sector after a significant business deal. So the company's wholly owned subsidiary, KRN HVAC Products, has finalized a business transfer agreement with Sphere Refrigeration Systems Private Limited. So the agreement covers the full acquisition of the SRSPL's bus air conditioning division, which is a move that immediately allows KRN to broaden its cooling solutions portfolio across growing transport and mobility segments. Now, this strategic integration is a key component of KRN's plan to build a more diversified HVAC business catering to industrial, commercial, and now transit applications. So KRN's management anticipates the acquisition will lead to a positive bump in future revenue, profitability, and the overall market presence. Now, a closer look at a major player in India's financial sector, that is the HDFC Asset Management Company, or the HDFC AMC. So Citi has maintained a sell rating on the stock, setting a lower target price of 4,775 rupees. So Citi's rationale hinges on two key factors. First, that they believe that the current valuation is simply too high. Second, there is a concern that HDFC AMC's growth in the non-mutual fund businesses may be slower than the market expectations. So this is a crucial metric as the company attempts to diversify its income streams beyond its core asset management services. So despite the short-term pressure, the company remains a dominant force, maintaining its position as one of the largest and most profitable asset managers in the country. Now, time for an NDTV Profit exclusive. So the government gears up for a strategic stake sale in the PSU banks via the OFS route. So this fiscal it's going to happen. At least 2 banks are expected in the first round, with plans to offload up to 20% across 5 banks. So the move aims to meet SEBI's public float norms and also boost the market participation. Shifting focus to Jaguar Land Rover, which has announced the phased restart of its manufacturing operations. Remember, this comes after a crippling cyber attack in the late August forced, the luxury car maker to halt the production for over a month. So JLR has confirmed that the controlled phased restart of operations will begin this week. It's, the electric propulsion manufacturing center and also the battery assembly center in the West Midlands are set to resume the activities factories from tomorrow, with the key areas of the Solihull plant, including the body shop and paint shop, also seeing a return of the employees. So vehicle production will subsequently resume along with the Range Rover and Range Rover Sport production lines at Solihull. So to support its vital supply chain, which has suffered highly, during the shutdown, JLR is introducing a new financing solution there. Shifting gears to a commentary coming in by the finance minister. So she has issued a caution on the global stage, stating that technology must not be weaponized. Speaking at an event, the minister stressed that the focus must remain squarely on using innovation as a catalyst for economic growth and also development. So her remarks come amidst the rising global geopolitical tensions and also concerns over the misuse of technologies. She has urged nations to ensure that technology remains inclusive and accessible rather than being used to create new divides or impose dominance. So Sitharaman underscored the crucial need for international collaboration to maximize technology's benefits for the world economy. Now let's also shed some light on the IPOs. So the WeWork India initial public offering is facing serious questions just as its subscription window has closed. So governance advisory firm InGovern Research Services has raised multiple red flags, warning investors about the company's financial and legal vulnerabilities. So the core financial concerns highlighted include negative net worth and also consistent negative cash flows. InGovern points out that the company's high lease costs consume over 43% of its revenue. And also it reported profit for the last financial year was due to a deferred tax credit and not the operational turnaround. So on the governance front, the entire 3,000 crore rupee IPO is structured as an offer for sale, meaning all proceeds go directly to the selling shareholders and promoters with no new capital being infused into the company for growth. So, the advisory firm has flagged ongoing serious criminal proceedings against the promoters. OpenAI and Advanced Micro Devices have reached a deal that could see Sam Altman's company take a 10% stake in the chip maker. So AMD stock has skyrocketed 23.7% after this announcement. Now the deal positions AMD as a core strategic partner in OpenAI's massive infrastructure expansion and also gives Sam Altman's company a long-term alternative to its current reliance on NVIDIA. Now onto the deal contours then. OpenAI will deploy 6 gigawatts of AMD's Instinct GPUs over several years and also multiple generations of hardware. So the rollout starts with 1 gigawatt in late 2026 and expanding as OpenAI scales its AI models. Morgan Stanley has released a bullish forecast for Indian aviation giant IndiGo. So the brokerage firm has given Interglobe Aviation, the parent company of IndiGo, a buy rating. Now this implies an upside of almost 25% from the current market price. So Morgan Stanley's confidence is driven by 3 key factors, which is IndiGo's focus on maintaining its status as a cost leader in the industry, its international expansion strategy, and also the under-penetrated demand for the air travel within India. So the airline is set to increase its international capacity share with an accelerating pace of global expansion expected as a new long-range aircraft join the fleet over the next 2 financial years. India's digital payment system, that is UPI, is being hailed as a global game changer by one of the world's biggest chiefs. So PayPal President and CEO Alex Chriss has announced a move to enable a world of interoperable digital wallets with India's UPI as a key partner. Speaking at the Global Fintech Fest, he stated that the National Payments Corporation of India's UPI is the first such payment system to be integrated into this new global platform. So this partnership is set to simplify the cross-border commerce, allowing Indian users to shop internationally using their familiar UPI app. So the CEO stressed that India is already a world leader in payments innovation and its role will be crucial in building a seamless global digital economy. So the move cements UPI's growing international footprint and also PayPal's focus on connecting India to the rest of the world. India could actually see a new wave of reforms by Diwali as Niti Aayog pushes to boost manufacturing competitiveness. So, Niti Aayog chief cautions that protectionism in specific sectors could actually hinder the competitiveness. In a major crackdown on a global online fraud racket, the Enforcement Directorate today carried out search operations at 15 locations across Delhi, Noida, Gurugram, Haryana, and also Mumbai in connection with a tech support scam case. So the searches were conducted under the provisions of the Prevention of Money Laundering Act, that is the PMLA, and following multiple FIRs registered by the Delhi police against Karan Verma and also several others for cheating foreign nationals through fake technical support services. India is expected to remain the world's fastest growing major economy, underpinned by the strong consumption growth, improved agricultural output and also rural wage growth, according to a World Bank report. So the World Bank raised India's growth forecast to 6.5% for FY26 from its earlier projection of 6.3% in June. And this is citing resilient domestic demand, strong rural recovery and also the positive impact of the tax reforms. Supreme Court has mandated new standards for road design and maintenance across the country. So the Apex Court has ordered all the states and union territories to frame and notify new rules within 6 months. So this directive specifically targets the design, construction, and also the maintenance standards for all roads other than national highways. So crucially, the court also ordered states to create rules to regulate the movement and also safety of the pedestrians and non-motorized vehicles, such as bicycles on the public places and national highways. The Punjab government has banned the sale, distribution and use of cold rift cough syrup in the wake of 14 children dying in Madhya Pradesh, reportedly due to the consumption of the contaminated medicine. So the cough syrup manufactured in Tamil Nadu was found to be dangerously adulterated with a highly poisonous substance. So the tragic deaths triggered a national health alert, leading to suspensions of officials in Madhya Pradesh, arrest nationwide, stock confiscation, and also immediate stringent changes to the drug prescription guidelines. In yet another alarming incident, the Jafar Express has come under attack near the Sindh-Balochistan border. Initial reports suggest that unidentified assailants opened fire on the train, sparking panic among passengers. Now, this marks the second attack on the popular passenger service in the recent months, raising serious concerns over rail safety in the region. Security forces quickly responded and also cordoned off the area, while the train was halted for inspection. So no casualties have been reported so far. An investigation is now underway to determine the motive and also track down those responsible. On to some global news now. US President Donald Trump has announced on Monday that all the medium and heavy-duty trucks imported into the United States will face a 25% tariff starting November 1, and escalating his push to support the American manufacturers from foreign competition. Trump, who has made the trade protectionism a key element of his economic agenda, said that the move is intended to protect the domestic truck manufacturers from what he called unfair outside competition. We also turn to Washington, where the US government shutdown has entered its second week, with analysts warning of a protracted crisis that could actually last for weeks, not just days. So experts fear the current bitter political climate or the tribalism has made a compromise extremely difficult. So the deadlock centers on a Democrat demand to extend the crucial healthcare subsidies, which are due to expire and also would hit millions of low-income Americans. So President Trump has blamed the minority Democrats for blocking the necessary funding resolution, while simultaneously also increasing the pressure by threatening mass permanent redundancies for federal civil servants. So this current standoff risks rivaling the record 5-week shutdown seen in 2019, which cost the economy billions. Rishabh Shetty's prequel Kantara Chapter 1 continues its run at the box office. The film, which takes audiences back to the ancient era of the Kadamba dynasty, has solidified its position as a blockbuster. So the movie has now surged past the impressive 260 crore mark in India alone. The total collection stands firmly at 39 crore rupees, although a weekday dip was expected following a massive opening weekend. So the film remains a strong performer. In a controversial move, UEFA has approved Barcelona's upcoming La Liga clash against Villarreal to be played in Miami, marking the first time a Spanish league match will be held in United States. So the decision has sparked widespread protest from fans and Spanish football purists who argue that the shift priorities commercial interest over traditional. Despite the backlash, La Liga and club officials insist the move will expand the league's global reach. So the match is expected to take place later this season, though legal and logistical hurdles still remain. French football star Kylian Mbappe is currently undergoing treatment for what coach Didier has described as a small niggle during the national team's training camp. So while the injury is not believed to be serious, the coach confirmed that the medical team is taking all precautions to ensure Mbappe's full recovery ahead of the upcoming fixtures. Now, the news has sparked concerns among fans, especially with the crucial international matches approaching. However, the French camp remains confident that their captain will return to full fitness very soon. With that, viewers, it's a wrap on this edition of Market Express, but stay tuned to NDTV Profit and don't go anywhere.
The market's most influential voices. The visionaries who decode the future of wealth. Unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
अरे और रहमान सोनू निगम के लिए जोरदार तालियां।
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, होता है कार्तिक। सोलर मतलब सात्विक, ये हर मौसम में चलता है।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Benchmarks extend gains for the fourth consecutive day but closed nearly flat with the Nifty hovering around 25,100. The Sensex ended in positive territory, recovering from a 400-point intraday dip. Mid and small cap indices outperform while sectoral indices show mixed results. Jaguar Land Rover restarts manufacturing a month after the cyber attack disruption and also introduces a new financing solution to pay suppliers early. The government plans to sell minority stakes in at least 2 public sector banks through OFS, plans to offload about 20% stake in total across these banks in a phased manner. Sources say meaningful progress is expected this fiscal. Announcement on the MSCI rejig expected on the 5th of November. Fortis Healthcare, GE Vernova and Paytm are set to be included into the index, while Tata Elxsi and Astral may be excluded. The LG Electronics IPO books 89% as of 4 p.m. on day 1 of subscription. Non-institutional buyers lead the issue by subscribing 1.78 times. Commerce Minister Piyush Goyal says the US government shutdown is delaying India's ongoing trade talks with America, adds that India and the EU are in advanced discussions to conclude a fair and balanced free trade agreement. Proxy firm InGovern raises legal and financial red flags on WeWork India's IPO, highlighting the company's negative net worth, consistent losses and the ongoing criminal proceedings against the promoters. Navi Mumbai Municipal Commissioner Dr. Kailash Shinde speaks exclusively to NDTV Profit, says the city is ready for the mega airport launch tomorrow. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Over the next half an hour, I'm going to take you through the latest in markets as well as national and international news. So let's dive right into it and have a look at how the markets fared today. Sensex and Nifty ended their winning streak to a fourth session led by gains in the energy and oil and gas shares, with some of the biggest gainers among the Nifty 50 stocks were HDFC Bank, Eicher Motors, Bajaj Finance, Jio Financial, ICICI Bank, among others. Varsha now joining us with a wrap of all of the market action.
Yes, benchmark gain for the fourth straight day while closed flat for the day. Nifty closed nearly 25,100 mark. IndusInd Bank and Bajaj Auto gains the most when it comes to Nifty, while Axis Bank and Tata Motors fell over 2% in trade, emerged as the top losers in Nifty. Nifty mid-cap 150 gain for the sixth day in a row, while Vodafone Idea and IGL gain the most in Nifty mid-cap. Onto the small cap, Nifty small cap 250 gains for the fifth day in a row. RHI Magnesita gain over 10% for the day, emerges as the top gainer when it comes to Nifty small cap 250. While sectoral indices close on a mixed note, Nifty Realty, if you see, gain over 1% for the day, emerges as the top gaining sector for the day. Nifty Realty Auto gain for the second consecutive day. Nifty PSU Bank snaps 2-day gain streak, while Nifty Oil and Gas Pharma gains for the fourth day in a row.
Thanks so much for that, Varsha. Meanwhile, Abhay Agarwal, MD at Piper Serica Advisors, says that he remains bullish on banking and financial sector, but also mentioning how RBI's push for easier credit offtake will benefit both the banks and the NBFCs. Let's listen in.
We are very optimistic and almost bullish on the banking and financial services space. I think over the last 4 quarters, or probably 6 quarters, 4 to 6 quarters, we saw a cyclical downturn which happened because of overlending, lack of credit offtake, low collection ratios. RBI tougher mandates to do provisioning, which had impact again on the balance sheets. The alpha definitely will be from the smaller banks, especially some SFBs like Ujjivan, Jana that are expecting a universal banking license soon. Purely for the fact that their valuations haven't recovered, even as the earnings are in sight of being recovery. If you look at the book value multiples, they are about 1 to 1.5 times. So as the earnings improve, I think that there will be both a multiple pickup driven by higher earnings and higher valuation multiple.
Meanwhile, Jaguar Land Rover has initiated a phased restart of its manufacturing operations following a major cyber attack in late August that halted production for over a month. Now, the luxury automaker confirmed that operations will resume gradually starting this week with its Wolverhampton engine plant as it works to restore full capacity across sites like Solihull and Nitra in the coming weeks. To support its supply chain, JLR has launched an innovative financing solution as well, enabling suppliers to receive payments up to 120 days early, with the company covering financing costs to ease cash flow pressures that were caused by the disruption. But for more details, let me quickly go across to my colleague Danish, who tracks the sector closely for all of the details. Danish?
Well, Jaguar Land Rover in a statement today has announced that from Wednesday, that is from 8th of October, the company will be restarting its manufacturing facility in the UK, and initially the particular center that the company will be initially restarting will be the particular center which manufactures engines and other battery-related items. Similarly, on the same day itself, they will also be restarting work at the other facility, which is the paint center and the body shop. So as far as restarting all of this is concerned, JLR will be initially restarting production facilities in the UK first, and once this phase-wise manner restart is done, then they will be restarting its manufacturing facility in Slovakia. And as far as JLR's supplies are concerned, for that the company has announced that initially, as soon as the production restarts, JLR will be offering them cash payment first, and for the other qualified JLR suppliers, they have a different system in place which will be implemented as soon as the production restarts. So all in all, if we see almost a month after JLR suffered a cyber incident, things are now getting better for JLR, and from Wednesday 8th October, we will see manufacturing restarting at JLR's facilities in the UK.
Thanks for that, Danish. And meanwhile, the November MSCI reshuffle is fast approaching, with the official announcement slated for November 5th. Joining us now is my colleague Somit with the essential rundown. Somit, walk us through the stocks poised for inclusion and those at the risk of exclusion.
Well, this is the first cut of what are the stocks that could probably get in.